So for any doubts and queries, we request you to post your concerns in the chat box. We are about to begin the inaugural session. Good morning, everybody. We extend a warm welcome to all to this 2 days virtual sub-regional conference at Baroda, organized by Western India Regional Council of ICAI WIRC and hosted by Vadodara branch of WIRC. Vadodara branch of WIRC of ICAI. The name stands for unity, dedication, hard work, quality, creativity, and professionalism. It was constituted in 1967 with a modest membership of 25. Today, with a membership of over 1600 chartered accountants, Vadodara branch is recognized as one of the most active, vibrant branch and has received 50 awards, which includes the Best Branch Award for 7 times. The branch, over and above its regular activities associated with CA profession, also takes initiatives in organizing programs for public at large on economic issues concerning the common man by associating with various non-professional bodies. By doing so, it not only fulfills its social obligations, but also creates awareness in the society of the role played by chartered accountants. Vidya Sarvasya Bhushanam. Vidya means education. Sarvasya meaning everybody's. Bhushanam meaning embellishment or ornament. The wealth of knowledge acquired by an individual after studying particular subject matters or experiencing lessons that provide an understanding of the subject. This is why we are having this theme of our 2-day virtual sub-regional conference, which shall focus on sharing proper education considered as an embellishment for everybody. The luminaries participating in this inaugural session are C. Atul Kumar Gupta, President ICAI, C. Nihar Jambusaria, Vice President ICAI, C. Lalit Bajaj, Chairman WIRC, C. Vishal Doshi, Vice Chairman WIRC and Regional Council Member from Baroda, C. Murtuza Kachwala, Secretary WIRC, C. Anand Jakotia, Treasurer WIRC, C. Krunal Brahmbhatt, Chairman Baroda Branch of WIRC, C. Manoj Sahu, Secretary Baroda Branch of WIRC. After this auspicious start to the conference, I would now request the very enthusiastic C. Krunal Brahmbhatt, Chairman Baroda Branch of WIRC, to deliver his welcome address.
Thank you, Master of Ceremony. Thank you, Vitar. Very good morning, friends. This is the exceptional year with exceptional leadership of ICAI. We never thought this type of conferences can be held on a virtual platform with great success. Now, this is a new normal for CA fraternity. We should proud our profession as even under this pandemic situation, our all members are working hard to glorify the profession. We as the Baroda branch feel privileged to host sub-regional conference with the support of Team WIRC. I would like to thank Dynamic Chairman C. Lalit Bajaj for giving us an opportunity to host the conference at Vadodara. Also, I appreciate support and coordination of our own Vice Chairman Sir C.A. Vishal Doshi for great opportunity. We are privileged to have presence of two most dynamic personality, our President C.A. Atul Gupta and Vice President Sir C.A. Nihar Jambusaria sir, as a chief guest and guest honor respectively. Sir, we feel privileged to work under your exceptional leadership. I welcome Chairman WIRC C.A. Lalit Bajaj and Vice Chairman C.A. Vishal Doshi and entire team along with Treasurer and Secretary on 2 days virtual sub-regional conference having theme of Vidya Sarvasya Bhushanam, that is knowledge is the ornament for everyone. I welcome our President Sir C.A. Atul Gupta and Vice President Sir C.A. Nihar Jambusaria and we are really grateful to have your presence on 2 days conference. President Sir, Vice President Sir, Baroda branch have been working with great zeal on technical as well as on CSR activity throughout the year with the support of past chairman and all members. On technical front, we have been generated more than 10,000 CPE hours during the year for members and issues research paper on effect of COVID-19 on Indian economy. On non-technical front, under CSR, we have been served to more than 1,75,000 Burundian citizens under this pandemic situation, which may cost more than rupees 25 lakh with the support of all members and past chairmen. Thank you for providing constant support and inspiration to all branches. Thank you, and back to MOC.
Thank you, Krunal. May I now request very energetic CA Anand Jokotia, Treasurer WIRC, to deliver his welcome remarks.
Thank you, Hitarth. Respected President Sir, Vice President Sir, Team WRC and Team Vadodara, please accept my hearty congratulations on this sub-regional conference, the very first virtual sub-regional conference, as Krunal rightly mentioned, at Vadodara. You have put excellent efforts and superb leadership of Krunal under the able guidance of our elder brother Vishal Bhai, Vice Chairman WRC. Excellent efforts, and you have chosen the best of topics and expert speakers throughout the nation. Throughout the year, I have seen so many initiatives, and many initiatives are coming from Baroda and Vishal Bhai. The Code of Ethics video on the very first day of each month, which we are getting, those are coming from Baroda only. Vishal Bhai and his team putting a lot of efforts. And the initiative of Honorable President Sir and Vice President Sir to percolate the Code of Ethics all across the branches, study circles, among all the members is very taken care by these videos. Superb efforts. Respected participants, this year, as Lalit Bhai will speak later, so many initiatives are taken under the able leadership of Lalit Bhai and Vishal Bhai with the help of Murtuza Bhai. And one is having maximum publications which are very much useful and required by the members at large. And Lalit Bhai suggested to have sector-specific publications, and we have recently launched a sector-specific publication on logistics, and soon we will be launching sector-specific publication on technology, hospitality, agriculture, produce. Our teams are working hard on those publications, and these are holistic publications on those specific sectors. And the main idea is that anyone, if he gets even first client in this sector, whether audit client or for management consultancy purpose, he should be able to provide that service. And holistic knowledge is covered by those publications. So please, you can download those publications from WRC website. Thanks, Kunal Bhai and team for giving this opportunity. Thanks. Over to MOC.
Thank you, sir. May I now request very coherent CA Murtuza Kachwala, Secretary WIRC, to deliver his welcome remarks.
Thank you, Hitarth. On behalf of Chairman WRC, C. Lalit Bajaj, Vice Chairman, C. Vishal Doshi, Treasurer Anand Jakotia, I welcome the Honorable President of ICI, C. Atul Kumar Gupta ji. I also welcome the Honorable Vice President, C. Nayar Jampatsariya ji, to this sub-regional conference today at Vadodara. I a big thank to C. Krunal, C. Manoj, the whole team Vadodara, and the coordinators and everyone at Vadodara for organizing and hosting such a solid program. I welcome all the participants to this sub-regional conference. Friends, like we said, knowledge is an ornament, and yes, in line with that, and in line with the guidance of the central leadership at ICI, throughout the year, WIRC as well as all the branches have been conducting programs on various topics. This year has been unique. The electronic mode or the digital mode has helped us not only on conducting programs on traditional topics like direct tax or indirect tax, but at WIRC and across the region, we've conducted so many on artificial intelligence, robotic process automation, data analytics, even software like audit command language, HCL, etc. hands-on. And we are continuously doing this, and we are trying to ensure that the members are equipped for the future, and our members are ready to face the future with confidence. And with that, I think similarly, the coverage which Krunal and team and the team Baroda has done in these 2 days, looking at the various topics, I really am so proud that we give them all 360 view, and a person may be specializing on something, or a SNP may be working on some smaller area, but they get their eyes and ears open to so many wider areas, and if they pick up any one of them and specialize in that, maybe it will help in building their career. So really grateful to all of you, and thank you very much, and over to you, Hitarth.
Thank you, sir. I now call upon our own regional council member from Baroda and Vice Chairman WIRC, C. Vishal Doshi, to address the congregates.
Respected ICI President, Sir CA Atul Kumar Gupta ji, respected ICI Vice President, Sir CA Niyarbhai Jambusaria, Vice Chairman CA Lalit Bhai, Secretary Murtuza Bhai, Treasurer Anand Bhai, Chairman and committee members of Vadodara branch, past chairman, seniors and dear members. A very good morning to all of you. At the outset, I would like to compliment Team Vadodara for organizing this virtual sub-regional conference of WRC of ICI, and especially for bringing the concept of multi-track sessions in a virtual conference, which enables more subjects to get covered and also gives the participants an option to attend the topic of their preference. I would like to thank our President, Sir, for taking path-breaking initiatives this year in spite of the trying circumstances. Sir, the speed with which various advisories and announcements have been made by the Council in not only providing relief to members and students, but also providing technical literature and guidance is worth acknowledging and appreciating. Sir, the efforts put in by you, Vice President, Sir, and the Council in ensuring smooth conduct of our CA exams in spite of adversaries is truly remarkable. Friends, like the theme suggests, Vidya Sarvasya Bhushanam, over the next 2 days, this conference will be dealing with traditional as well as futuristic subjects, giving weightage to the practical aspects for every professional. We have excellent speakers to deliberate on the topics, and I am confident that it will be a knowledge feast for everyone. My best wishes to the conference, and I wish a very happy learning to all of you. Thank you.
Thank you, sir. May I now request the most approachable CA Lalit Bajaj, Chairman WIRC, to deliver his address.
Thanks, Hitarth. Respected President CA Atul Kumar Gupta ji, prolific personality and enabler for ICI to move to next level. Respected Vice President CA Nihar Jambusaria ji, kind-hearted, man of words and expert in his area. Central Council members who are supposed to join, Anil Bhandari ji, Aniket Talati ji, Durgesh Kabra ji. My regional council members Vishal Bhai, Murtuza Bhai, Anand, and other members who are supposed to join. Chairman Vadodara branch Kunal Brahmabhat, led with his team Vinod Pailwani, Manoj Sahu, Rikin Patel, Hitesh Agrawal, Rahul Agrawal, Dhruvik Parikh, MOC Hitarth Desai, dignitaries of the dais, seniors, friends and colleagues. I, on behalf of WIRC, welcome all of you in this August gathering for sub-regional conference with theme Vidya Sarvasva Bhushanam, which is hosted by WIRC, organized by WIRC and hosted by Vadodara branch. Let me acknowledge in front of all the members that seniors and past chairmen of Vadodara branch have, with their sheer hard work since so many years, have brought laurels to Vadodara branch, and because of which it was really, it has made you enabler in approaching and ensuring that the sub-regional conference is allotted to Vadodara branch. And let me tell you, we at WIRC are fortunate that Vadodara branch accepted and agreed to organize such a wonderful conference. At the outset, I would like to congratulate Kunal Brahmabhat and his team, along with our Vice Chairman and nominee of Vadodara branch, Vishal Bhai, for organizing such a wonderful conference, which I believe which really add value to the knowledge and create awareness about various aspects of our profession among the members. Friends, I would like to share, and I am fortunate that today we are sharing the dais with our President, Sir. ICI, under his able leadership, has acted proactively and pragmatically, whether it is about exams or whether it is about any of the issues faced by members and students. With the dynamic leadership and under the robust action plan of ICI, we at region got broad leeway and wide scope to conduct various activities. And I think so this is an extended activity by Vadodara branch, which we have been enabled to conduct in such a successful way. WIRC this year is working on four broad areas, which we have termed as PAIR, P-A-I-R. P stands for publications, A stands for activities, I stands for initiatives, and R stands for representations. And let me share with all of you that members of Vadodara branch have really participated and ensured that WIRC is really enriched and enabled in conducting its action plan for the whole year. And I believe the members of Vadodara branch will surely be with us in all our activities in the near future. With this, I once again welcome all of you and look forward for a very enthralling learning session for the next 2 days. And I once again give a warm welcome to our President, Sir, and Vice President, Sir, for sparing their valuable time and being with us to share their words of wisdom. Thank you.
Thank you, sir. I can address him as the most down-to-earth person I have ever met. CA Nihar Jambusaria, the Vice President of ICAI, is a person with exceptional organizational, networking, administrative, and leadership skills. With focus on innovation and niche enablement, he intends to translate his passion for the inclusive growth of the profession through the transformational agenda that the current paradigm warrants. With these words, I introduce CA Nihar Jambusaria. I now request Nihar sir to address the delegates.
Thank you, Hirat. Good morning, everybody. Our dynamic leader, Honorable President of the Institute, CA Atulji, very rightly put by many of you that in spite of this pandemic, this year he was never knocked down with the lockdown, and be it knowledge sharing, be it interaction with government, be it foreign chapters, setting up new chapters, representative offices, making presence of the chapters felt in the respective countries, holding of exams or research activities. Under the pandemic, under his dynamic leadership, all the activities of the Institute have not only continued, but have gathered momentum during this year. And I give full credit to Atulji for not lying idle and encouraging and leading the entire profession and membership to take up every activity that was planned. So that is the biggest achievement under his leadership for the Institute, and we really uphold him for providing such a dynamic leadership. Other council members who may be present here but are not visible on this screen, the dynamic leaders of the region, Chairman WIRC, CA Lalit Bajaj, who I meet often by virtue of my presence in BKC and see how hard he is working along with his team, Murtuza, Vishalbhai, and Anil. And not only them, even the other regional council members. The chairman of Baroda branch, CA Kunal, the other office bearers, CA Hirat, Manoj, Dhruvik, and other managing committee members. I know that Baroda is a great host for any conference to be organized there. and I am witness to the manner in which the entire team, along with past chairman, work together and make every event successful. It is a different matter that this time we did not have a single occasion to visit Baroda and enjoy the hospitality that the branch provides. But even on virtual, I think this is a good enough hospitality. I think today, let me speak on the core of these sub-regional conferences. In the region, when these conferences were started many years back, even when I was in the regional council, we had the concept of sub-regional conference. And I think there were three objectives for which sub-regional conferences were designed. One objective was that among the other topics which are normally discussed at regional level and at national level, sub-regional conferences provide opportunity to discuss topics which are relevant in that sub-part of the region. Another objective of sub-regional conference was to invite some local authorities, make the CA brand famous in the local area, and put up certain issues that the profession may be facing before the local authorities, like some local minister or some commissioner. But under virtual mode, probably this year we did not have that many opportunities to invite them personally. And the third and the most important objective of sub-regional conferences is that in the local area provide opportunity of networking and provide opportunity to members to meet personally and interact with each other. And networking is another initiative of the institute which is so important. Unfortunately, this year we are unable to meet physically. I have only one suggestion to make. So many new platforms have come up, and where they provide networking opportunities in the form of discussions in the subgroups. So what you may plan in future, and I am suggesting this because probably certain conferences may remain on virtual mode even in future going forward. So suppose you are able to explore the possibility that on some subjects, some groups of 20 members are formed, say 400 members are attending. It's a huge platform which is available. In 20 groups, if they interact, say during 2 days, at least 2 times in 20 or 25, 2 groups which are to be changed every day, then they would have the opportunity of networking, which is missing on virtual mode. So this is one suggestion that I thought I will make, but otherwise I have gone through the entire design of the program. You have covered the subjects which are very well relevant for the local members, as well as those which are emerging and which are relevant for everybody in any part of India. So let me congratulate the branch for hosting this event, congratulate the region for organizing this sub-regional conference with relevant subjects, excellent speakers, and with the opportunities to members to attend this sub-regional conference and enrich themselves. I am sure that every part of the region will remain active and provide adequate support to the leadership who is so dynamic and taking all any initiatives which are relevant and necessary for the profession. Thank you so much for inviting me. Wish you all the best for the successful completion of the conference, and I'm sure that every member attending this will have a lot of value add at the end of 2 days. Thank you so much. Thank you.
Thank you, sir. Widely respected for his strong organizational skills and deep insight in the affairs of profession, Sri Atul Kumar Gupta has immensely contributed to the cause of profession during his term in Central and Regional Council, before being elected as President of ICAI for the term 2021. A visionary and expert at dealing with the most challenging situations, Sri Atul Kumar Gupta has always volunteered to act as a bridge between the stakeholders and the institute. With these words, I introduce Sri Atul Kumar Gupta. I request our President, Sir, to address the delegates.
Thank you very much, Amosi. Very respected Vice President ICI, CA Nihar Jambu Sariaji, under whose elder brotherly guidance the entire profession and myself is working to see that we take the profession to the next level. And even yesterday, I was admiring in the back of Honorable Vice President, with one of the council colleague whom I was sitting with, that in spite of the COVID pandemic, yes, we are working hard 24/7, visiting every day ICI, but it is much easier for me to visit the ICI because I belongs to Delhi only. So Delhi Gurgaon is only 35 kilometer. You can come in your vehicle. But I salute the courage of the Honorable Vice President that every Monday he is here, except for this examination requirement in Mumbai, that every Monday he is available in Delhi, and every Saturday he is going back to Mumbai only just to replace the, I will say, the clothes or the other routine things. So every Monday to Friday, in the courage, he is like a Vice President, sir, is sharing with all of us, is actually, I will say, the matter of inspiration, at least for me, if not for others, but as a younger brother to him. So I feel great to work under the guidance of the Honorable Vice President ICAI. So all credit goes to him, because the solid support which he is providing 24/7 to the profession is really remarkable and appreciable. And I believe that in the next 2 months time, when he will be chairing this prestigious position of the profession will see the new milestones being achieved on everyday basis. The very respected Lalit Bajaj, the chairman of the WIRC, and the entire dynamic team under him. We have the Honorable Central Council member, to whom I can see CA Anil Bhandari ji, who is being recently got elected in a tough fight as a vice chairman of the Edinburgh group of IFAC, and so I congratulate him as well on this platform. The very respected Kunal, the chairman of Vadodara branch of WIRC of ICI. I wish that we should now name these branches as the Vadodara branch of ICI, because it's too long to have this nomenclature, and that give a national feeling. Vishal Doshi ji, Murtaja ji, Anand ji, and all the other colleagues who joined from the Vadodara branch, WIRC, and others. At the outset, I convey my sincere thanks to all of you for inviting me on this inauguration of the sub-regional conference, or I will say the All Gujarat conference, wherein not only the Honorable Vice President, sir, and council member will deliberate, but also there will be, I'm sure that a lot of things will be discussed, which will be add feather in the crown of the profession, and there will be a lot of learning for the profession as such. Friends, as being discussed, so I will not take much of your time on the various initiatives being taken, but just to give a very brief overview, that the few of the activities which may be may got unnoticed from the members per se, that the initiative taken by the council in the last I will not say only 10 months, in a last 1 year and 10 months, because it's a team which is working. Earlier we were working under the able leadership of a Praful Chhajarji. That now in the student front, if I wish to share with you, there are the very important 6-7 changes which we have brought into the system. The first one is that since we have now moved to the 100% digital evaluation, meaning thereby the no copies will travel from the examination department to the evaluator, and 100% digital evaluation will be there. All copies are getting scanned. The examiners has to sit on the system only. He can only check. The time is allotted. The retina test is happening. So it's like automatically totaling is getting happened automatically. So there is a lot of benefits which are coming from the 100% digital evaluation, and two very auxiliary benefits which I can see from this digital evaluation. The first one is the reduction in the time between the exam and the result. So normally it is taking 60 to 75 days to see the result after the examinations are over, but now in this period also you will find that the result will come maybe in the next 45 days to 50 days after the exams will be over. And another one, which is a historical one, is about the re-verification, for which we were used to wait for around a month or so, but now the re-verification results will be available in maximum 7 days time. So that will support the student fraternity, removing their anxiety, and that they will be having a certainty of their result, whether this side or that side, that now they have to prepare for the next cycle of examination, maybe the next upgraded version, or maybe for the same exam. The another one that you must be agree with, or you must also appreciate, that in spite of the COVID pandemic, because the everything is a standstill and lockdown situation, we moved 100% to the online system, may it be the ITT classes, may it be the GMCS classes, or even rendering the online virtual classes for the more than 5 lakh students. So all initiatives are taken by the Board of Studies and the newly established Student Skill Enrichment Board under the able guidance of Jai Bhai, that today we have the completely online ITT classes, GMCS classes, as well as under the Board of Studies Academy, Devashish Mitraji, that we have the virtual classes available for students. And you will see that there are the number of classes which are viewed by more than 2 lakh students on a YouTube. So that kind of acceptability is there, and which is actually the root cause of this entire agitation in the education examination system, which is being hyper created by a certain specifically set of people, which I will share some other time when the investigations will be over. So there were a sponsorship. So we created 100 crores special earmarked fund for the sponsorship of the students, so that there should be a continuity in the entire system, and we have doubled the entire sponsorship as well. You must be aware that this examination see a new change by having the 200 more cities are covered under the examination system. So earlier we were having around 500 odd centers, but this time we conducted the exam in 1100 centers covering the 200 new districts of the country, meaning thereby that every district, earlier it was the case that if you have a 750 plus students, then only you will get allotted a center. But now that limit we have reduced to 100, meaning thereby even if in a city is around 100 students are there, and in the hilly city if the 50 students are there, we are giving a examination center, which will not only ease the parents and the students, but also will see the inflow of the number of students in the system, because now they will have a kind of a comfort that within the same city they will be able to appear. So somebody appearing from Nagaland and has to come to Guwahati is again a pain for the student and the family, but now we have the center available in Nagaland. So there will be more inflow of the students from the Nagaland and the Northeast and the other cities. Likewise, we opened the office in Leh, and now on 15th we are opening an office in Srinagar and the 7 sister states as well in very soon. So it will be further ease of access to the students community. Friends, as far as the members are concerned, there are a number of initiatives, including the online portal for the CABF, the We Care scheme, practically under the guidance of Honorable Vice President, making the entire structured CPRs free of cost through the digital learning hub, which actually the ICI is getting around 55 crore rupees per annum, is practically is foregone just to provide these services to the members, that today you have to pay nothing to access the structured CPR through the digital learning hub. So that is being already ICI looking into the pandemic and support to the members. So how we can support them financially. So we have already foregone that. Even the course fees for the certificate course is reduced to 30% as compared to the 100% earlier, so that we can provide that certificate course on not only on anywhere, anytime, but also the much reduced price to the members at large. There are the various advisories, as Vishalji mentioned, that is being issued by the ICI to support the members, the representation before the various regulators, including the RBI at a tough time when it is being discussed that whether the audit should be there or not. So there are number of initiatives. I will not take much of your time to share with you that what are the new initiatives taken by the members. I welcome the two esteemed colleagues of our council physically, and I was just mentioning you the courage of the council colleagues, that Aniket Bhai and Dea Bhai is right now sitting in front of me. In spite of the pandemic, they are traveling and all these things are there, because we have certain examination preparations now moving for the January 21 exam, which is scheduled even from the 21st of January 21. So that is something is there. Friends, as being rightly mentioned by Honorable Vice President, that there are the initiative at the global front also, that we started with only 29 countries with 35 chapters available for our ICI. But today, I am happy to intimate you that your ICI is officially available in 41 countries with more than 60 chapters and representative office. And on the 10th of this month, you will be very happy to note that we are now marching with the 4 new countries, that we will be available in 4 new countries on the 10th of this month. So practically the number will go to the 45 countries with more than 65 chapters and representative office. At the same time, these chapters and representative also got recognized by the Ministry of External Affairs, that they are the official partner of the ministry for the various initiatives. Friends, we are also working on the international curriculum, which will be present before the council on the 10th of January, the January meeting of the council. And I believe that in times to come, under the able leadership of Honorable Vice President, sir, the then President, when he will be the President, that the ICI will be launching the international curriculum in the number of countries, which will make our profession a really global profession. Friends, there are the qualification recognition, the benchmarking, which is being called as NARIC benchmarking in the UK, and now our qualification is being treated as a postgraduate. But I'm happy to intimate you that with the blessings of Almighty, let us pray that very soon the UGC will also give you the recognition as a postgraduate. So we are working hard. Honorable Vice President sir is also working hard on that project. And I believe that you may be not be aware that recently he traveled specifically from Delhi to Pune to meet some of the esteemed colleagues and the authorities to see that this project is getting implemented at the earliest occasion. Friends, I just wish to share with you one very, very important aspect of our profession is about the trust. That you are aware that we are always being treated as one of the trusted partner of the economy. We are all being treated as a partner of the nation building, but we have always to see that how we can take to the trust to the next level. And for that, there are the 3-dimensional approach we need to take. The first one is that we have to make it the regulation more stronger, so that it should be any erring member is there, any member who is not complying with the code of ethics or is not doing his duty with the due diligence, there should be a deterrent, and the immediate deterrent should be there. And I am happy to intimate you that in the last 2 years, we have completed more than 600 cases of the disciplinary committee, so that all the pendency which was there for 8 years or 7 years around has now come down to 3 years. And I believe that because of the COVID pandemic, we are not able to organize the virtual physical meetings of the disciplinary committee, but we have moved ourselves into the virtual meetings of the disciplinary committee. And I'm happy to intimate you that now the pendency by the December 2021, our target is to make it is only for 1 year. So meaning thereby any case which will be there with the ICI will see the fate within the next 365 days, so that will become a deterrent for any kind of a lapse on the part of the member. But at the same time, it is very important that we have to guide our members rather than punishing him, that we have to organize the programs. I used to say that we in the disciplinary committees are the villain and you are the heroes. So you have to tell them, you have to teach them, you have to guide them. So there are the various judgments now available on the website of the ICI. We have prepared a separate portal for the same. And in that portal, we are uploading all the judgments in a way that you can organize a weekly or a fortnightly programs to tell the members at large, maybe for 1 hour, that what are the I will say the wrong or something is I will say the mistakes, or I will say the lapse or omissions are being committed by the member, and by virtue of that they have got the situation and get punished. So that should not be repeated by the members at large. So some kind of a guidance should be given by the branches in way that there should not be any recurrence of that kind of a mistakes, omissions, or any offense being conducted by the members, to see that the profession is getting the glory for which it was being established. Friends, you are also aware that we have strengthened the peer review board by the new peer review statement. New code of ethics is there from the 1st of July. We have strengthened the FRRB and the QRB as well. So practically the entire ecosystem of regulation is being strengthened to provide the necessary impetus. And even I can tell you that not only we have launched the separate website of the disciplinary committee, but also now we have made the e-hearing possible, as well as we have prepared a separate building for the disciplinary committee as such, so that there will be more and more institutionalization of the regulatory aspect of the profession. Friends, here I just wish to share with you that as you are aware that the profession evolves around the economic development. So every 10 years you will feel that we need to adapt ourselves with the coming changes. So 3 important changes which are coming in the profession, which I can see in the next 10 years, is one is that the delimitation of jurisdiction. So practically on the earlier days when Mr. Vishal Doshi qualified the exam, he read the law which are practically not only national but even the state specific, for example the VAT. But today when we are complying with the law, they are practically the global laws. May it be the GST, the IFRS, international taxation, valuation, risk management, all are having the global jurisdiction, which not only offer us the opportunity but also create a challenge, at least for the non-audit service, which will be there on the cards. Now, number 2, that you are aware that when the businessman is looking for the wealth maximization, he is always see the cost optimization and the improving the effectiveness is the 2 key. And for that, they are always looking for a new way of doing business. Earlier times when the financial statements were carrying the 95% the tangible asset, today it's a vice versa, that the 90% the intangibles in terms of the goodwill, or you can say the valuations. So it is very, very important for all of us to upgrade our skills, to reskill ourselves to do the assurance services in this new environment. And last but not the least, the digital disruption, which is actually taking over the routine and the repetitive jobs to the system itself. So the time when will come when we will be concentrating only on the jobs which require the wisdom and the skepticism. And for that, you need to upgrade your skills. The World Economic Forum recently mentioned that there will be a job loss of 75 millions by 2022 or 23, wherein the 2 number and 6 number are the auditing, bookkeeping and accounting activities. Whereas they specifically mentioned that there will be 133 million new jobs will be there out, and in that the first number is the data analytics. So what I'm trying to convey you that you have to concentrate more on the commission part rather than the omission part. So you have to concentrate your energy. That these days we are more concentrated on the audit of the omission part as compared to the commission part. That is something we need to expand by not only reskill ourselves but also using the technology and understanding the new requirement. ICI recently conducted a study with the Institute of Chartered Accountant England and Wales and found that there are a lot of jobs which are already being outsourced to the system through the RPAs. And I am aware that the Anil Bhandari is available with you, and he will be speaking about the robos, and somebody will say, hi Anil, how are you? Some robo will speak to you and like that. So I am just telling you that there are the number of activities which are being getting outsourced to the system itself. And it is something that we need to concentrate on the jobs which require the more and more wisdom. So my urge to all my members and the branches and even the regional council, that you have to see that members are understanding the requirement of the new age jobs, and then they are reskilling their skills to see that they remain in the value system, relevant in the value system. So with these words, I convey my sincere thanks to the Honorable Vice President, sir, for all for giving all these guidance and supporting, and all my council colleagues, and even to all my branches and regional council. It is only because of you that we are able to conduct this examination in such a peaceful and a gracious manner. Each one of you are standing in one or the other center, putting your heart and soul, or supervising the entire operations. It is the win. It is the success of the entire team ICI rather than one person. It's a coordinated efforts of the entire profession to see that our profession is getting more and more glorified in this situation when the entire social media or the specific certain class of person or a section of person were trying to malign the image of the profession in front of the student fraternity. So we have to stand united. We have to stand, I will say, the correlated. We have to stand in such a strength that the entire profession feel that we are taking this profession to the next level. My best wishes to all of you for a happy learning, and once again thank you for giving this opportunity to join all of you in this momentous occasion. Thank you very much.
Absolutely, this is a clear example of not getting knocked down with the lockdown. Thank you so much, sir. This marks the end of this inaugural session. May I request our always calm CA Manoj Sahu, Secretary, Baroda branch of WIRC, to propose a formal vote of thanks.
Thank you, Pitar. On behalf of Baroda branch of WIRC of ICI, we must thankful to our Honorable President and Vice President, sir, and of course the entire team of the WIRC for sharing their thought of vision for the profession and inaugurating this 2 days sub-regional conference. We must thankful to all the members for their sharing their precious time and inaugurating this conference. Over to MOC. Thank you.
Thank you, Manoj. With this, let us begin this 2 day sub-regional conference. Hope we all attain enlightenment in all the dimensions to be discussed during the various technical sessions. Thank you all.
Thank you, everybody.
The
Anil
paper book of the conference has been mailed on the respective email ID of the participants. We now take a short break. The first technical session would begin at 11 AM sharp. That is 1 minute to go.
Thank you.
Thank you.
Welcome Hitesh bhai, welcome Abhijit bhai. Welcome Ankit bhai.
Thank you, sir.
Welcome, Anil sir, Omal sir, Abhijit bhai.
Thank you.
Ankit bhai, welcome.
Thank you.
Special thank you Hitesh bhai that you could make it.
Thank you, Nana.
Yes, sir.
अभिजीत भाई लॉकडाउन में कितना काम कर रहे हैं? इतना काम नको करो अभिजीत भाई. You're on mute.
Anil bhai, good morning. Welcome to Vadodara virtually, sir.
Thank you. Thank you for the entire team. Fantastic job. Congratulations on your sub-regional conference.
Thank you, sir.
From Baroda, this is expected.
Thank you, sir.
Sir, your presence and support adds the halo to the conference, sir.
No, it's always fun to be here. Pomal bhai, Kim Cho, all well with you?
All good, sir. All good. Thank you, sir.
Fantastic. You're also sitting in office working very hard. I'm the only one sitting at home here. I'm not working, so.
You are mentoring now, Anil bhai.
No, Atul bhai said that the robos have to work now. So, we have to leave the robos to work and we have to enjoy ourselves. Yeah.
So that's
Chairman, sir,
session
I think you can start. It's 11:01. You can start the session. Members will be waiting.
Sir has to speak something and then I can share my screen, right? Then we can start.
Do you want me to start my session?
Yeah.
Okay, cool. So a very good morning to all. Hello.
Through it.
Yeah. Am I audible?
Yes.
Anil bhai, just a minute, because it would be, we have a MOC, Dhruv.
Sure. I was hoping that somebody would just start the session. Yeah.
Just give us a minute, sir.
Yeah.
I can also take over the role of being an MOC यार, don't worry.
नहीं सर, मैं इसीलिए हूँ यहाँ पे.
हमारी ब्रांच है यार.
Kathy, you ready?
MOC is joining, sir. She's getting online.
Kathy, join us, please. Again.
चेयरमैन स्टार्ट करो कुणाल जी.
MOC.
Kunal, Kathy is joining. I talked to her. She's joining in she's already online, but I don't know why we actually didn't listen to her.
Yes. In a minute, sir.
Rachna, maybe Hitarth can start and then she can take over.
Yeah.
I just checked for her speech. I have got her speech. Let me just find out.
केलकर साहब आपने बहुत सर्टिफिकेट जमा किए हैं पीछे.
हाँ अनिल जी आप कुछ कह रहे थे. सॉरी मैं उतने देर में म्यूट कर गया.
मैं बोल रहा हूँ आपने बहुत सर्टिफिकेट जमा किए हैं सर. अच्छा लगता है कि
मल्टीटास्किंग होना चाहिए ना आदमी ने.
हाँ बिल्कुल सर, एब्सोल्युटली राइट.
We are waiting for Aniket to join. Aniket ji.
No, sir. We are just waiting for the MOC. There is some technical issue with the MOC.
Abhijit bhai.
Kunal bhai, why don't you just initiate and we'll start here. And then they can of course come back, no? मतलब unless of course आप वो flower bouquet और कुछ अच्छा शायरी वायरी भी रखा है आपने अगर BC पे तो that will also be excited. Then I will wait. Yeah.
विनोद भाई है तो शायरी तो होगी ना.
Sir, there is one announcement. Yeah.
Okay.
We are having
yeah.
We are having multi-track session on RERA. Those who are interested in RERA session, they can use different link which is already sent to all participants. That's it. Thank you.
So, should we start, Kunal? What do you want to do? Can't hear you.
Yes, sir. We are starting.
I'm starting on behalf of Ketki, sir. So
yes, please.
Yeah, please.
Ketki is having some issues in connecting.
Okay.
Yeah. Welcome you all once again to the virtual sub-regional conference hosted by Vadodara branch of WIRC, organized by WIRC of ICA. For any doubts and queries, we request you to post your concerns in the chat box. Thanks to the technology and enormous efforts of the committee members and the speakers and the participants, we have free-flowing supply of knowledge through IT. So Ketki is there.
Ketki, can you take over now?
Fine. I request CA Hitesh Pomal, Regional Council member, for his welcome address.
Thank you very much, Hitarth Bhai, respected Vice Chairman WRC, my dear friend Vishal Bhai, as well as Central Council member CA Anil Bhandari sir, and the Chairman of the Vadodara branch, Mr. CA Krunal Bhai, and all office bearers of the Ahmedabad branch. Very good morning to all. First of all, my congratulations to the Chairman Vadodara branch, Krunal Bhai, and all committee members of the branch for hosting this 2 days sub-regional conference, though in a virtual mode, today and tomorrow. As we are starting the first technical session of this conference, our very own Central Council member, CA Anil Bhandari sir, will be sharing his knowledge with us about the most relevant and important topic, that is technology, and that will be the first technical session of this 2 days conference. As we all know, that Anil sir's years of experience in this field, and as I have personally experienced, his depth of the understanding and ability to present the topic, the subject, in such an interesting and simple way that I am sure we all will enjoy and we all will be benefited with. And the session speaker, CA Ankit Bhai, he is also from our Ahmedabad, and his in-depth knowledge about the subject, his articulate language is also worth listening, and we all will be benefited by that, I'm sure. I welcome both the distinguished speaker of the session today. And once again, my compliments to Vadodara branch for hosting this sub-regional conference, as well as my thanks for inviting me today. I wish all the participants a very happy learning. Thank you very much. Thank you. Over to Amosi.
Hello.
Hello.
Yeah, Pomal, you can hear me, right?
Yes, sir.
All right, cool. So, should I start my session?
Yes, sir.
Thank you. I think a very good morning to all our members.
So we hand over the session to Anil sir. Yeah.
Thank you so much. So I think congratulations to the Vadodara branch for, I think, of course, getting an opportunity to host the sub-regional. I think my relationship with the branch goes back during my times as the chairman of the Western region, and I have held Vadodara branch in very, very high esteem. And I think all the past members have been exceptionally professional, and I think all the younger members are also turning out to be a great quality and exceptionally professional for the branch. And I think that's a great learning curve for all the members in Baroda, and I'm really proud that the branch continues to do fantastic. So Krunal Bhatt, his entire team at the Baroda branch, our WIRC chairman, his entire team, fantastic work done during the entire year, in spite of the pandemic, of course. And of course, our regional council members, Vishal Bhai and Pomal Bhai from Baroda and Ahmedabad respectively, I think again they have been doing a fantastic job in trying to reach out to members and make sure that the content is delivered. So I think all in all, in spite of the fact that everything has stopped in the world, I think the institute continues, membership continues, all the things are in line, and I think I don't know. I think it's lots to do with technology as well. I'm not sure if you remember a couple of times that I would have come to Baroda, and I would have spoken about technology platforms, what is expected, what is likely to come in the future. And I remember myself coming one of these days and speaking about the fact that you may not see airline companies tomorrow. I don't know if you remember me ever saying this in any of your conferences, but generally I have given this example that you would not see airlines tomorrow because airlines don't compete with airlines. It is video conferencing software is competing with airlines, and so to say that it has come out to be so true today that in the last 1 year, I think you don't see large airline companies flying planes, and the virtual conferencing systems have taken over. And I think the valuations of the virtual conferencing systems are far more greater than all the airlines of the world put together. Just the Zoom platform is valued at $45 billion today. Maybe more. My information could be as old as April or May, and maybe they could be valued more. But it's so interesting to see that people are traveling through this medium of virtual rooms that we have today, and I think it has transported more than 300 million people on a daily basis, and which I think just a year back people used to smile. I also came out and gave a lot of examples about movie theaters not being there, and today I think again movie theaters have closed down, but we still continue with our life. Content is still delivered, and you have the OTT platform. And I still remember people smiling that people would have to go out and people would have to entertain themselves. And it's a long time that all of these would go away. And sometimes we don't realize that long time doesn't mean long. It is actually very, very short in the dynamic world that we have today. I specifically spoke about education. I'm not sure again if you would have heard me, but I said education is likely to take a 360-degree turn. And when I joined the council, I remember myself on the table talking about the fact that we may not see classrooms tomorrow. And I am surprised at the fact that I spoke about it, but the fact that it has happened so fast that I'm myself surprised that suddenly out of nowhere you don't see classrooms today, and you actually see education still in full flow, and sometimes even better. And I remember myself during my election campaign days that we said in the last term that when we would go to the council, we are hoping that our agenda is technology to not only improvise the affairs of the council, but also to ensure that the members are up and available at that point in time. And I'm really happy that I think we've had fantastic leadership throughout the last 5 years that I have more or less spent in the council now, starting from Devaraja Reddy to Nilesh Bhai to I think Naveen Endi Gupta, and then we of course had Praful Bhai last year from Western region, and then Atul ji today that he spoke, and then Nihar Bhai. All have been great supporters of the technology transformation that we wanted to do in the council. And you would probably realize that we had some tough times during the SSP platform, and there were a lot of complaints coming in. People held on very well. We improvised the process, and there's only one reason that the institute is where it is today, and every member is able to function, is because you have a wonderful SSP platform, which I think a lot of people helped to drive this, and Manu Agarwal also specifically worked very hard on trying to deliver this. The next platform that we have in the institute, which you would see more and more now, is the digital hub, again, which we conceptualized 3 years back. And we said that we would make this for the chartered accountants, by the chartered accountants. Currently, the institute is making it for the chartered accountants, but I'm sure in some time, the digital hub would start co-sourcing, crowdsourcing from all the chartered accountants that you have, and you would see a lot of content coming up, a lot of your specialty coming up on that platform. And I think Aniket Bhai is taking absolutely, he's working very, very hard to make sure that, this is delivered to the members in the way that it should be delivered. And I remember the president spoke about digital marking. We started somewhere way back when I think Nilesh Bhai was the president, and I remember having done just one paper on digital marking and kind of challenges that we went through in terms of even people trying to accept that something like this could happen and we could visualize and change it. And I'm so happy to let you know that today 100% of our marking system is actually on the digital platform. Can you imagine that the institute in the last 3 years has gone through a tremendous transformation as far as technology is concerned, and I'm sure this will add great value to all of us put together. So that's been an amazing run. Since I have to kind of talk to you about the high level expectations and changes which are likely to happen, I'll talk to you about two messages which are very, very critical. One is what is likely to change in auditing and accounting in the next maybe 5 or 6 years, and also what are changes which are likely to happen around businesses tied up with technology platforms and technology that we have today. So taking out a couple of minutes that I would want to talk to you about the auditing and accounting profession. I think the president was very clear when he said that you would see some impact on the auditing and accounting profession. I will say this in no uncertain clarity that auditing and accounting profession is likely to be one of the most hit profession in the terms that we would get hit by technology when it comes up. And of course, it's already come up, but when it comes up in full force, I think the biggest pain that would be seen would be auditing and accounting. I don't want you to come in the morning here and be worried about the fact that what we do, because I think the opportunities on the other side happens to be in billions and billions of dollars. But yes, I think this is an area that is of concern and should be all concern to all our members. Now, why should it be of concern to all our members? That is very important for all of us to understand. I'm sure all of you chartered accountants, and some of you would be probably young, but I'm sure all of us would have heard of the companies like WorldCom and Enron. These are names which are kind of etched in our minds because of the challenges that it has taken the auditing profession through. And some of the well-known firms, some of the best firms in the world have got destroyed, like the firm like Arthur Andersen. And then of course you had the closer stuff at home, which was a Satyam. And all of this has led to a lot of transformation. I don't want to call it transformation, but sometimes even a knee-jerk reaction in the expectations of the regulators, and more so in the expectations from the auditors in the mind of general public. Auditors were always held in high esteem when it comes to general public, but all of this has led to more responsibility on our shoulders, and even a small error today is kind of not acceptable by the general public or by the regulator, which means I think we are very fast moving into a very rule-aged economy, rule-aged transparency, where everything is a rule, and I think opinions no longer matter. It is actually correct which matters. It is actually a complete assurance which matters, and not reasonable assurance, unfortunately. And I have given this example, I think, a couple of times, that during our meeting with the SEBI chairman, myself and Nilesh Bhai, I think we had a wonderful discussion, and his expectation actually was complete assurance. He said, what is reasonable assurance? And we were shocked, because as chartered accountants, we have never been taught complete assurance. But I think because of what has happened, and because of what continues to happen across the world in the banking system and all of that, you would see this more and more often, that expectation would drive us to be more and more rule-based economy, rule-based compliances, and even accounting standards and auditing standards are likely to go through this change. But why is this expectation coming up suddenly? This expectation is coming up because technology has gone through almost, not even 360, I don't know if there was a better word to say this, that technology has gone through an amazing amount of transformation in the last maybe 2 or 3 years, especially. And every year, the transformation is only faster. Every year, the transformation is only better. And every year, the technology only gets better and better. So now, how would that change our auditing and accounting profession? Of course, we will talk about the robotics, process automation, and all of that. But I believe that, like any other business, accounting process would also go through a standard, should I say, accounting entries follow standard rules and processes, right? There could be ifs and buts. There could be, if this happens, what would happen? But those are general algorithms. Those are not very difficult algorithms. Difficult algorithms are the ones which are in healthcare industry. Difficult algorithms are ones which are in maybe capital market industry. Difficult algorithms are one which applies people in the space, right? Accounting is not a difficult algorithm. Accounting, I think, is far more simpler in terms of an algorithm. Auditing is actually even simpler than that, because when you look at accounting as an algorithm, auditing actually works based on the accounting algorithm that you have, right? It cannot be different because the standards are set. This is what you're supposed to do, and whether you have done that or not, and whether that has passed the control test or not. That is as simple as auditing is. Sometimes we kind of make it very complicated. If this was the case, if this was really the case, is there a need? Is there a use case to divide these standards into small pieces, into very, very small pieces which are numbered, and a small piece of rules, and not also standards now, but small piece of rules. And these piece of rules could be something like, hey, are you doing a capital account transaction? Yes, you're doing a capital account transaction. So if you're doing a capital account transaction, can I break these transactions into 10 steps and say, hey, if you're doing a 5,000 rupees transaction, this is where it goes. If you're doing a 5 crore rupees transaction, this is where it goes. If you're a software firm, then this is where it not goes, because you need to go into an amortization and maybe not through a depreciation and so on and so forth. Believe me, if you're able to write this on a piece of paper, and I know Baroda is very, very entrepreneurial. If you were to write this on a piece of paper, you will realize that there is only a finite set of rules. There's no infinite set of rules here. Even if you look at opinion-based IFRS, which is coming out today, the underlying fundamentals of accounting still remain the same. The underlying fundamentals of accounting have not changed. So again, I would impress upon you as chartered accountants, if you were to take just a piece of paper and you were to write down these rules and break them into small pieces, you will realize that the algorithms could easily take over the function that we do as accounting and the function that we do as auditing. And in fact, I have again said this, and I'm sure I would have said it in Baroda as well, that the accounting softwares would likely change. They will become more and more intuitive, because they would be expected to do 90% of the job that you're trying to do today. There is no reason for a commerce graduate to come and think of, where do I pass this entry? No, 90% of our entries are very, very simple entries. So I'm sure in the next 2 or 3 years, you will see rapid change in simple accounting profession, and you will see a rapid change in fundamentally the auditing profession as well, because the auditing standards would also be broken into small pieces of rules and not standards, hopefully going forward. And if there are small pieces of rules and standards, they would converge into a small piece of code, which will then run on algorithms and then probably go and check. I visualize that we would all carry some kind of a robo or a bot in the future, which means there would be a statutory auditor bot and a statutory auditor bot for capitalization, a statutory auditor bot for expenses. And I believe that there would be an internal auditor bot, which would ensure that the processes are taken care of. And I believe that there would be a reconciliation bot, a reconciliation check bot, which is in a lot of ways, which is already there. And I would understand that there would be a taxation and an indirect taxation bot, which would take away 60 or 70% of that we do today, which means all of us as auditors would carry a bot in our pocket or in our machine or in our iPads or in our laptops going forward. And I'm sure there were a lot of us hearing me here, if there are any, they would probably be smiling today, that saying that, hey, is that even possible? But I think learning from what has happened in the last 2 or 3 years, believe me, guys and girls, and ladies and gentlemen, that I think this is not only possible, what we thought was 50 years ahead, it was only 10 years ahead, and what we thought was 10 years ahead is already there. It is just that we were not and never aware about it. So I think auditing and accounting profession is likely to go through a 360-degree curve, and I think we should be ready for this kind of a transformation. Institute, I'm sure, is doing fantastic in the last 2 or 3 years. We've got young members in the Central Council. There's a great thought process, and we're trying to enable all our members to ensure that we look at this, I should call as a demon to start with, and convert this demon into an opportunity for all of us going forward. The last couple of minutes that I would like to address you upon is, how is businesses likely to change? Now, I spoke about auditing and accounting. The businesses themselves are undergoing a significant change as we look at them today. And that is also a fundamental reason that the accounting and auditing is likely to change. And what is the change that is happening in the business? All the business models are converging into an outcome-based business model. You know what is an outcome-based business model? People are not interested in the car any longer. People don't want to look at a good car. People want to look at a car which is engaging with you. People don't want a normal bank nowadays. People want a bank which will talk to you back and help you to maybe, derive your ROIs in terms of the money that you put in the bank, in terms of wealth that you do there, and the services that you do there. So more and more it is outcome-based model. And the second model which is emerging today is hyper-personalization. Hyper personalization really means that the Nike shoes that you buy today out of the stores are no longer going to be the standard Nike shoes. You'll be able to walk into the store, put your foot down, search your colors. You may like a slight shade of white with a slight shade of gray for all you care. And the shoes would actually be manufactured with a 3D printer there and hopefully come out right. Or today, in the next 2 years, maybe they could be delivered to you after 10 days, doesn't matter. So hyper personalization of music that you would like to listen to. And the final thing that is coming up as a business model is access versus ownership. People, in fact, young people that I see in my office don't want to buy houses today. They only want to access a house. They only want to access an asset. They only want to use an asset. They don't want an asset for lifelong because they want to do so many things during their lifelong. So these are three fundamental changes that you're likely to see in the business processes. And every industry that you see is going through a digital transformation. So logistics would become, there would be Uberization of logistics. Education is already crowdsourced, interestingly. And if you look at media and OTT companies are transforming the content. You know, people like you and me would be delivering content on the OTT platform. So it's becoming crowdsourced more and more. So the speed and agility of all that we do is going to be much, much more faster that you see in the future, which is going to come. And that is why chartered accountants, you know, we are always used to it happening tomorrow. Even the work sometimes happening tomorrow, just before the last day. And then we are used to calling up the institute and saying, hey, you know what, this has happened, that has happened, why don't we push the last date? That's not what is likely to happen. It's likely to be fast. The expectation is now. There's going to be no last date. Every day is going to be last date, I think, going forward. So I think I just want to end this by saying the last piece is there's going to be a lot of change around the business leaders and governments. And one change which is likely to hit everybody is cybersecurity again. In one line, I would want to say that cybersecurity used to be protecting machines. All of us have an antivirus on our machines today. All of us have an anti-malware on our machines today. In the future, that is not going to matter. In the future, what is going to and then there was security around users. In the future, what is going to matter is, doesn't matter if you have an antivirus or not, doesn't matter if you have a malware or not, doesn't matter if there's a phishing attack or not. What matters is the context of the data that you're using, who is using, and what time somebody is using that data. So cybersecurity is becoming more and more data contextualized, and that is going to be, again, a very important concept that we would need to understand. Again, fantastic opportunities for chartered accountants to look at accounting and auditing, look at changes in the business, look at cybersecurity as a career option. I think just to give you a snapshot towards the end, the robotics process automation platforms are having businesses worth $150 billion today. They are valued at more than $60-70 billion today. If you look at a simple QuickBooks accounting solution today, I will repeat, a simple accounting solution, something like a Tally, but it is sold all across the world, would be valued. The Intuit company will be valued at $125 billion today. A simple accounting company. Our entire Tata Group is not valued at $125 billion today, and maybe just about valued at 125 today. Just the accounting solutions, and who have the capability to develop something like this? Chartered accountants have the capabilities to develop something like this. So I think I would only encourage you that you would have to, and whoever wants to dabble in these three things would have to look at some emerging areas of transformation. Finally, I have had the pleasure of being elected in the Edinburgh Group, and this Edinburgh Group is specially for small and medium practicing chartered accountants. I think the Institute has done good amount of work in transformation of technology. I think it is time for us to now work for the members. And I think with Edinburgh Group, Edinburgh Group is a very, should I say, they have a very strong voice in the IFAC for small and medium enterprises. And I think in the next 5 years, there is going to be a lot of distribution of work, and small and medium enterprises and specialists would really come up compared to the big fours and the big 10s and the big 20s that we have. So again, that is again amazing value add, because technology is available to all. Like Google is available to all, technology is available to all. So I think I would only lastly say what I used to say during my chairmanship. I think everybody has to rise above the ordinary and think beyond imagination. I think that is the only thing that will keep us awake in the night and being paranoid the fact that a lot of things are changing. So I just want to end this by saying that I think Baroda, I think you have great entrepreneurial skills. I think you have great skills there as chartered accountants, and there are some great companies which come out of Baroda. And I think Automation Anywhere, I think is one such company which has got a big center in Baroda, if I remember and am I right, the robotics process automation company. So I would urge you all to come out of your homes and maybe try and do something really, really interesting. So thank you so much, Baroda branch. Thank you so much, Chairman Krunal, for inviting me today here, and congratulations once again. And I hope you have a fantastic day. Thank you.
Thank you so much, sir. Before we move forward, I would like to introduce our keynote speaker, CA Anil Bhandari, who has completed his graduation from Mumbai University and is an alumnus of the prestigious Narsi Minji College of Commerce and Economics. He is also a cost accountant, certified internal auditor from the Institute of Internal
So
Auditors. Hello.
I think my profile is probably known to members in Baroda. So thank you so much, and I've done my keynote speech. So I would now request you to please go ahead and introduce the speaker. He is very patiently waiting for his session, and all the members I'm sure would also be waiting for their sessions. But I really appreciate and thank you so much for this opportunity again. Thank you.
Thank you, sir, for sparing your precious time and guiding us. For any doubts and queries, we request you to post your concerns in the chat box. From trading financial instruments to keeping records of personal budget to reporting the earnings of business, computer technology is used by financial companies daily. Information technology allows us the rapid calculation of financial statistics as well as electronic transfer of money. That being said, the scope of artificial intelligence in India is pretty significant, as the ultimate aim is to create computer programs that can tackle different problems and provide goal-oriented solutions. Thus, there is a scope of computer vision, game development, speech recognition, robotics, and language detection. To summarize, the scope of artificial intelligence is huge. On this note, I would like to introduce our speaker, CA Ankit Shah, who is practicing in Ahmedabad and providing consultancy services in management, international business, SOPs designing, contract drafting, annual marketing plans, content copy strategy for brands, e-commerce growth modeling, instructional designs, and curriculum R&D. He has won the national award as upcoming young talent in academic R&D. He has served as an editor of 2 national level magazines and is also working with IIM Ahmedabad as one of the youngest academic associate in finance and accounting area and research associate for MBA curriculum. I would now request CA Ankit Shah to guide us and take over the charge.
Thank you, Ketki. Am I audible?
Yes, sir, you are audible.
Thank you, Ketki, for the kind introduction. Thank you, Baroda branch and WIRC for giving this opportunity to address our members. CCM Anil sir has already given an background of the AI changes that are coming up in the few years. Today, we'll see some of the live examples of what kind of changes can be expected in the profession, especially in accounting, finance, and auditing. But before that, I would like to take you to the larger background of over centuries of what's happening around us. So for that, I have a presentation to show. So we'll start from there. We can directly start with the slideshow. Is the slide visible to everyone? Is the slide visible? Any?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
So this is just an image of an article which I had written, and this is a summary of what has happened in the last 300 years. So you can see that how India runs the show of the world economy in the last 300 years. What we see behind the curtain economics. So Britain became the world power, as you can see over here in the table out there. So there was a theft of technology, capital, raw materials, and literature from India. And the outcome was industrial revolution and mass manufacturing. So with the industrial revolution that Britain had and the Europe colonial powers had, 1 unit of their population could produce 1,000 times more than an Indian or a Chinese worker. This is how their economy became so strong. What we see in India from year 1 to year 1700, we produced more than 27% of the world GDP on an average. What suddenly happened? This industrial revolution which came to Europe. So you understand the importance of technology. Next became the United States as a world power. And what they did, they took the meritorious Indians over there. So that was the manpower which they took over there. And what was the outcome? Silicon Valley and the research and development on all fronts. Even today, there are big companies and IT companies do have research and development centers in India, outsourced to India. Next coming up world power was, as we see, is China. So they did a theft of technology and literature from United States, or maybe appropriated from there with their support. What was the outcome? Industrialization and manufacturing. So you see, in the last 300 years, this is what has happened, and you understand how important the piece of technology is. And right now, if we start from this, the farmer protests that are going on right now in the country, now you see that if we had given 27% of the world GDP on an average for 1700 years, from year 1 to year 1700, and then industrial revolution changed the entire dynamics in the last 300 years, you realize when a Canadian PM is talking about the farmer protest and supporting it, you need to know that 95% of their pulses exports are to India. And with the reforms, the agriculture sector would open up. So what happened after independence was that the Indian joint families broke up, and the West did an individualism wave in India, wherein individuals started asking, rights from the families instead of the state. They broke the agricultural lands into small pieces, which ruined the profitability of the sector. They came to the urban centers because of this individualism wave, right? Now, if we need to bring back technology and capital into the sector, we need reforms. So you understand the Canadian PM is scared because he has the exports interest in India, right? So Canada, all the Western nations, Canada, Australia, despite not having the natural resources like water, right? With the help of AI kind of technologies, Israel is a big example which uses technology, AI kind of technology in farming, right? So with the usage of this kind of technology, they are able to produce more than India and export. So these reforms are very, very important for us so that the sector opens up, the capital inflows come back in, and reconsolidation of the agriculture land comes back to place so that the profitability comes back. So what role artificial intelligence is going to have in this? Artificial intelligence is a software that mimics human capabilities. So seeing, hearing, speaking, and processing information on its own. So we know there are three major pieces of artificial intelligence. One is called cognitive science. So in this, what happens is how human brain works, how humans think and learn. That is what is imitated by the machine. Second is called robotics. Now in this one, computer intelligence is used, but the robot has human-like physical capabilities. One of the example is a robot called Molly. So what this robot Molly does, it has 2000 recipes fixed on its intelligence, on its computer intelligence system. So it has two big hands and it can make the recipes just by the order, right? So this is about robotics. And third is natural languages. So this helps with respect to conversing in human languages, right? So the machine is going to understand what the human is trying to say or trying to emote, right? So this is the reason. And why do we need artificial intelligence in our domains if we talk about? So there's a huge volume of data that big companies process, and definitely cost savings is one of the reasons. Second is we want more and more accurate projections of the future, right? We don't want uncertain future. So that is another reason why we need AI and real-time information. The speed with which the information is processed and analyzed and the outcomes and the decisions are made, right? These are the reasons why AI is going to creep in all of our domains. Now, the question which perplexes all of us is that can AI replace human professionals? So the answer is no. But what kind of changes AI is going to bring to the human professionals? So MIT had done a survey in around 2013 something, and they had found out that there are accounting, bookkeeping, and auditing profession has 98% chance of being automated with the help of AI. 98%. That was highest on all the job profiles, 700 job profiles that they had assessed in the research. So now this Oxford Martin program, when they examined this 700 jobs and they found this 98% probability of automation, you know what kind of change would come into the role swept. There's going to be a role swept, right? So the financial planning and analysis, one of the traditional roles, financial controller, one of the traditional roles, accounts payable, receivable management, one of the traditional roles. These job roles would be swapped with roles that are kind of called data scientists, scenario planner, market maker, and behavioral scientist. So all the modern professionals will have to adapt to these changes and work on this kind of roles, and you have to pick up those skills. Now will be the time when every 5 years you will have to update yourself with the latest thing that is coming in the market if you have to be relevant to the market. So it's not that the jobs will be gone or the tasks are gone or the opportunities are gone. What is going to happen is that you cannot continue with a piece of paper or a certificate that you had and keep on booking profits from it for 10-20 years, something like that. You have to keep on updating yourself. The profiles are going to be swapped like this, right? And we'll see real-time examples for this. So if we talk about AI, Alan Turing 1950 came up with a Turing test, and there was a movie on it. I will talk about it later. There was a chatbot, Elisa 1960s by Joseph Weizenbaum, right? And this is how AI is shifting from narrow AI to general AI to super AI. So what narrow AI does is that it's going to automate the specific tasks. What general AI does is that it transfers knowledge of one domain to another. And what super AI does is that it's looking at equaling the smartness of humans. So that is the flow and the direction in which the progress is projected in the future. So from specific tasks to transfer of knowledge to several domains to being smarter than humans or equal to humans in terms of brain power. This is how AI is going to develop. And always understand that investments in research and development are always going to follow the social optimum of consumer demand, right? So all those who think that these things won't happen or will take time, I mean, you need to really check back the changes that has happened in the previous 10-20 years. So this shift from making work papers to being more analytical, intuitive, and critical, right? So new kind of skills would be required: curiosity to update, creativity to see multiple perspectives. You need to have skepticism, that is, you can trust the things, but then you need to have a verifying nature. You need to learn the systematic evaluation, and you have to have the capability of putting those logic into the system. So these are the kind of new skills that you will be required to adapt for, right? So over here, we are going to use some case studies and use cases for understanding how it works. So AI chatbots is one of the basic things where the automation starts with. Now, the difference, we all understand live chat versus virtual assistants. We all understand that in a live chat, there is a person who's going to answer all the things. In virtual assistant, there is an AI bot wherein the predetermined questions and answers are fed into the system, and that person is going to help, that system is going to help out. So that's the difference between live chat and virtual assistants. So Alan Turing, who was a pioneer on this, he gave this particular test called the Turing Test. And what the Turing Test says is that if a human is able to interact with machine, but is not able to make out whether the thing that it talked with was a machine or a human, then that is AI. So that's the definition of AI what Alan Turing has given. And there's a beautiful movie, 2014, it came, the Imitation Game movie, which is very famous, wherein this guy, Alan Turing, was working on cracking the German codes for the World War II for United Kingdom, right? Now, what I want all of you is, all of you are on your laptops, right? So I want you to go to this tolley.ai. Can you open up that screen? So this is one of the use cases that, if you take up this particular, have you all gone to this portal? Please do. tolley.ai, right? Now, you type anything over here, say suppose non-profit, and you press enter. You see what it does.
Generally, all amounts provided to employees are taxable, but the employee may be able to claim a deduction in respect of expenses incurred, whether funded by the employer or not. If the amount of the deduction is the same as the amount paid by the employer, the expense payment is effectively non-taxable. There are detailed rules outlined in legislation and case law which determine whether an amount is deductible. For employees, the general rule for the tax treatment of expenses is in ITEPA 2003, S336. Further information on expenses is not available in this demo.
So you can see that the information that is fed into this particular, making this kind of a bot system, right? And over there at the end, over here, they are asking you, was this answer helpful or not, right? This is the kind of AI bot things that are developing over here, right? The next one that you can see is about EY. I want to take you to this particular use case. Right after Toli, this is EY. So what EY has done. So one thing we all know that why chatbots are being used is, say, suppose you are talking about helping out the customer or the business, right? But that is not the case. Over here, what EY has done is they have deployed this system called Goldie. This is also a chatbot. But what it is doing is the team started with a proof of concept named Buddy. So they started team management using this particular bot, right? And what is the impact of this? You see the powerful business impact. EY is experiencing an unparalleled employee engagement with Goldie. More than 500,000 questions were answered in Goldie's first 28 days. Now you understand the cost savings of answering 500,000 questions. Now, if a management trainee or an assistant manager is supposed to put this question to the general manager and get the reply, you understand the time and the cost savings here, right? So these are the kind of business impact that are coming in. Now the chatbots is not just about helping out the outside customers or anything or the outside stakeholders, but also being used for team management. Do you understand the impact, right? So this is one. Now conversational voice bots are also used in banking. So instead of an actual person, the bot is answering. Even Vodafone, you would realize that these days they have come up with this VI bot, where you have any query, you put in your question and they are going to respond. So this conversational voice bots is another thing that they're using AI for, right? Now I want to explain you how IBM Watson uses this thing. You all can see this particular screen, maybe a bit hazy, but one is this over here. We are going to do this. We are going to build a live chatbot for the use case for the session today, right? So stay here with me. So this particular first panel that you can see about the user. So this is the customer or the user for the business, right? Second, this thing is channel. Now he's going to use WhatsApp, phone, Twitter, Facebook, Skype, right? All kinds of things to input what kind of information that the customer or the user is looking for from the system. Now this particular cloud network is for IBM Watson chatbot. This is where the Watson assistant sits, that is in the middle, all right? And then the customer is going to pass on the query through all these channels. And then what kind of pre-processing is going to happen in IBM Watson Assistant? A speech to text, language translator, natural language understanding, and tone analyzer. You understand the high level of the intelligence that has gone into this tone analyzer. In what tone the customer is speaking, right? Whether he is happy, whether he is sad, whether he is angry with the service or whatever, be it customer or the team member of the company or whosoever, right? So the Watson assistant sits in the middle over here, and then based on this inputs being pre-processed, it is going to do the post-processing part in the back end. And what kind of things it's going to get the reply generated from. So one is enterprise data and services. Second is data storage. Third is file repository. Fourth is business processes, right? If it's a high level query, it's going to go to the business process managers, right? And then the last one and the most important is third party applications. So you understand the kind of complexity they have brought in this artificial intelligence piece of work, right? Third party application is also integrated with the IBM Watson assistant over here. And then they have something called discovery service, which is totally independent out of the things which is available with it. This particular discovery service, what it does is it's going to deeply dive into all the kinds of information assets out in the public domain and bring in the information that you are looking for, right? So this is the IBM Watson chatbot flow chart, or the structure, the internal structure. This is how they function. Now, what I would like you to do is go to this particular cloud.ibm.com, right? And try it out. If you are to go cloud.ibm.com, you are all on your laptops. You can go to this particular web page. Now over here, you can set up your account. Okay, I can give you a few seconds if you want to do along with me, because we are going to build an AI chatbot over here live in this particular session. All right. So you can make an account over here. Once you have made an account, I'd like to give you a few minutes if you're doing with me. It's very easy to set up an account. This is a free account that we are talking about, right? So once you have an account, I'm going to log into my account, right? So I've drafted this sample case study for explaining today for the session how this works. It's going to take some time to load. So this is the kind of dashboard that you are going to get in your free account. There is an IBM Cloud Catalog. There's a custom dashboard, various kind of facilities IBM gives you in terms of this artificial intelligence comprehensive service that they offer, right? Over here on the dashboard, you're going to have something called resources, and I've already set some samples for explaining for the day. I'm going to click on this particular services. All right. And let it load. So in the services, you have one is this discovery, which I just explained you in the previous slide. And second is the default chatbot assistant, which IBM provides you. So if you click on that, all right. So you have an option called Launch Watson Assistant. You are going to click on that. You can see this is my Assistant Plus trial. So 28 days free is still left. So one is the bots that I have already created, right? One is bank. Second is my first assistant. This is the default that IBM offers you. And third one is I have created for explaining today, that is called new team member assistant, right? So what you go to do is create assistant. And over here, you can create some new kind of an assistant. That is, maybe you're looking for customer service for your clients, something like that. But if that is not the case, if it's just about someone visiting your office, right? So you can name it something like that, right? Over here, I already have this new team member assistant, a bot that helps onboarding. That is what the description I have given. All right. So I may say visitor assistant, some client is visiting my office, right? Bot that helps a new client visit the office, right? This is a description, and then I press create assistant. All right. Now, before we jump onto that, let me give you some of the examples of how it works. So there are these words called intent. Now, what intent does is that these are user statements with similar meaning. So we need to incorporate this kind of logical structure and algorithm into the AI bot that we are kind of building. Second is called entity. What entity does is it covers all the keywords which are specific, business specific terms, which your AI and the bot needs to learn, right, for the purpose. Third one is called dialogues, and dialogues is discussion between teams and machines. What is the kind of discussion which is going to happen on this particular AI bot? And the fourth is integration with Slack. Now this remote kind of working experience is a new thing which has started, especially after Corona. So we understand that Slack is an app where the teams can distribute their works and do it real time. You can put up systems and alarms and alerts and everything into it, where you can communicate with other team members located in geographically disparate locations and all, right? So this particular integration of bot with the Slack helps the organization run totally on its own, automated, right? So this integration, which helps team onboarding and daily tasks. So this particular link you can go to and have your free Slack account where you can manage your teamwork daily for the businesses, for your offices. All right. Now we are going to make in this particular IBM Watson chatbot define what intent is, entity is, and what dialogues is. All right. So we go back to the screen, and then this is a visitor assistant which I just showed you for the purpose of understanding. But we'll go back to the one that I've already created for the sample. All right. So this is new team member assistant. So a bot that helps onboarding a new team member. All right. This particular area is about integration. We'll go after some time over there. All right. And let me explain the kind of intent, and these are intent, entities, dialogue, options, analytics, and the content catalog that IBM provides. So in the intents, you will find that the first one that I have created is called office location. So office location is the name of intent over here, and what your chatbot possibly would be asked, right? So one of the question is, where is the office, right? So, and then what IBM recommends that you give several examples of what the bot can understand this question to be like, right? Somebody is going to come and write, how can I reach office? Where should I report? Where the office is, right? So there are several ways people are going to ask this particular question to the bot, right? Where is the office is the one. So this is called intent, right? Second one is meeting times, right? So this particular intent, the name is meeting times. And what does it provide? It provides meeting times, right? And then, Watson recommends that, you give examples of what possibly the client or the customer is going to ask when it comes to talk to the bot. So what time is the meeting? What time is the team meeting? When is the get together? These are the possibility of questions that would be asked. Now, what Watson does here is that you give some examples to Watson like this, which I have written over here. Besides that, it's also going to use its own intelligence of that somebody is going to asking an address over here, right? Now, these are called intents that I have set over here. You can go over here and create intent, right? Just as I showed you two of them, all right? Now, second is called entities, right? So over here, I've made two entities. One is office, right? So in office, inside office, I've named it office, and then for the value that what I have to give, say maybe I say NYC office, right? And I add that value over there, right? Somebody is asking directly for if the person is knowing that he's looking for address of the NYC office, then I've already added it as a value. Now we can see over here, this is fuzzy matching. The fuzzy logic you also see in the washing machines, where the washing machines themselves understand how much, the washing powder it requires or how much water it requires. Right? That is the fuzzy logic intelligence we are talking about over here, right? So this is about office address, and second one is about training. This is another entity that I have created, right, in the training. So when could be the training, right? So you are going to upload your data sheet that 7 a.m. we are going to have this particular kind of a core meeting, right? 12 o'clock we are going to have this kind of a meeting, right? And 2 o'clock there is training, so something like that. it would return as an answer. So these are called entities. Third one is called dialogue. Now dialogue is something which is very important because it is about what the person is going to, your client is going to ask to the bot, right? Or what your team members say. Maybe you have an audit manager and an article assistant in your office, right? So what the article assistant is going to ask to the bot, right? So that is what the dialogue is about. So first is the welcome message, right? So you can see over here, the bot will say welcome. If the assistant recognizes it, right, the answer has to be with a text. So the assistant bot will reply with hello, how can I help you? All right. So these are basic examples which I'm giving you of how to, and then you know your offices and business processes very, very well, your clients and their business processes very, very well, and then you can automate with this kind of things. And let me tell you, these are very cheaply available systems, right? Because once the investments are done by this kind of companies in developing this kind of systems, then because the number of users and the customers are large and the scaling is good, the cost definitely comes down. So this is about the welcome message, right? Second is about what time is the training about, right? So then the assistant should wait for reply, right? And then answer it, something like that. And there are options over here, whether wait for reply or jump to kind of thing. So let's try and add this is what they call it as a node. So let's do one thing. Let's add a node over here, right? And what kind of a node we want to get office location. So say the dialogue is about getting the office location. All right. So what we do over here is that if the assistant recognizes this, right? So where it is going to pick the recognition of the data from. So one is that you can either put intent, all right. How can I reach office? All right. And maybe you want to add an entity also. So, okay. So which entity would relevant is office. All right. So the person is going to ask about how to reach the office. So I have put the assistant can recognize either the intent or the entity. All right. And what the dialogue is about, get office location. So how the assistant is going to respond to this, so whether with a text or an option or an image, these options are there over here. So say our office is First Street, South Bhopal, Ahmedabad. All right. So these are the kind of then there are options of response variation over here. You can vary it. So maybe you're talking about the headquarters of your office or something like that. So what the bot needs to respond for this kind of intent and entity variations that the client or the customer or the team member is asking about. So this is how it functions. And then once it's done, this is an addition of node, right? And then the last one would be anything else, right? So if we want to try the bot that we have created over here, then they have an option called try it. So the bot is asking, hello, how can I help you? So let's try it with one question. Okay. Where is the office? Let's see if the bot can understand what we are asking. Yes, the bot understood from the intent, used its brain and gave this answer. Our office is located on First Street, South Bhopal. So this is just a simple use case example of how IBM Watson uses artificial intelligence. So this is how you can create a bot for team management of your entire office, right? So there could be various questions into this, like say, when is the audit scheduled for so and so client. All right, this is for internal management of your team members, right? So the team members knows without physically coming to your office from his home or wherever he's accessing from, that 11 to 12 he is supposed to go to audit to this particular office, right? He does not need to come and ask you, right, physically, or call you up. So this is how the amount of time savings and things that you can have with this. So this is just an example of how Watson uses this particular technology. All right, coming back to, and then as I told you that you can integrate it with a Slack, right? So this particular website, you go over there, all right, and you can create your Slack account for team management. And once you have this particular Slack account, what you can do is that you go back to the dashboard, all right, and then you have this integration facility as another facility that you can use, all right. So in the services, right, so in the assistant part, you launch Watson Assistant. All right. You open up the assistants that you have, and over here you have integration. All right. So you can add integration over here. So web chat is one, preview link is one. You want third-party integrations, Twilio is given over here, and this is the Slack. So you click on Slack and you set up your Slack bot with the new account that you have created over here and integrate it. So these are the information that it would ask. On the Slack app settings page, go to the basic information tab, app credentials. You fill in this particular inputs from your Slack account, and both of it gets integrated, right? So this is how it actually works. All right. So this is just an example of how IBM Watson works. Now there are many other things that you have. So another one is called speech recognition. Now we all know that although we are using Windows 10 or Mac, we know that this particular keys, if we press the window key plus H, right? So this particular thing will come. It will listen what I'm saying and it will type. I think most of us have used this thing. All right. So it started with, from voice to now it has gone till emotions. That is the kind of advanced state it has gone into. So in 1982, Bell Labs speaker took a recognition patent for this, and they used stored templates of words at the beginning because that was the raw time, right? But in the modern times, we have, used machine learning techniques to understand even the emotions, right? So emotion detection from speech patent was taken in 2012 by Bennett Phoenix Solutions. So it detects from utterances, your speed, your tone, whether you are angry or sad, decide whether a live person or a chatbot should help based on mood. Say some client is saying that he's going to be angry if his return is not filed on time. So you definitely don't want a chatbot to attend that client, right? You want a live person. He would insist, of course, a live person to tackle with. But then, if the person is happy or something like this, just a general query, you would like to have use this particular chatbot kind of a system. So speech recognition is one thing, and then Amazon is working on a wearable device that learns on its own. So say, for example, it's approaching month end and it will on its own alert on pending journal entries or ledger posting. Say, if, as a person, if you're coughing, it can suggest a syrup or a medication available to the nearest store, and whether the store has that particular item in the stock or not. That is the kind of artificial intelligence we are talking about over here. So Google Voice, Cortana, Alexa, Siri, we know this kind of examples. So in our profession, in accounting, by dictation itself, if the journal entries are going to be passed into the software, right? The auditing, you can use speech analytics for auditing, right? There are also automation in audits, like in around 2013, where, when I was working with the Torrent Group, KPMG had offered a software called K-Proctor for automated internal auditing. So what this software does, that it goes and sits onto the accounting system of the client, and then you can, because it is internal audit, it's going to spread very fast, because the scope of internal audit is always, it's decided by the management. So in internal audit domain, it's going to go very fast. So what happens is that the company is going to buy this particular software. The scope is designed, the audit scope is designed by the company. The IT department of the company will help to put in the scope. They say, for example, any expenditure about 25,000 has to be authenticated by AGM and GM both, right? So as soon as KPMG team arrives for audit, they just need to press a button. This particular software drills down to all the transactions and throw all the exception reports out, right? This is the kind of automation we are talking about, right? So in finance, you will find that the banks offering transaction tracking, balance checking over voice, right? So you use a bot. The customer is asking, what's my balance today, and it's going to give you the real-time balance as soon as maybe the amount is deposited. Maybe your account has got an NEFT or an IMPS, but you want the information real-time. So maybe it takes 1 hour, 2 or 3 or something like that to update your record. But if you have a real-time artificial intelligence, you will immediately get the information that the amount has been transferred or deposited, right? So that is the kind of speed that we are talking about over here. Now, I would like to show you some kind of use cases over here. So we'll see how accounting can be done with this AI, all right? And for that, let me first show you a video, maybe. I think that helps.
Think of something fun. Did bookkeeping come to mind?
Control your head, swing it up and down below.
Didn't think so. I wish I could just talk to my phone and it'd go right into my accounting. Introducing Talk, an artificial intelligence bookkeeping system. All you need is a phone and a scanner. Here's how it works. Say you're buying coffee for the meeting with Jeff. Once you've paid, Talk pings your phone to record your expense. Take a look at the notification, and then just talk about what you bought and why. This is a business meeting. I met with Jeff from Gray Fox to go over the new contract. Hey, Jeff. Talk then codes and sends the information right into your accounting process. Pretty cool, right? What about all the mail? Invoices, bills, checks, and all the other paper that comes into your office every day. Simply throw it on your scanner and let Talk go to work. But here's my favorite. My accountant's always chewing me out for not properly tracking business mileage. But now, if you're on your way to a work-related event, just plug this little guy in. It'll track how long you drove. All your miles are saved right here. And here comes the business dinner with Donovan James to go over the new proposal. By coding all your transaction details in real time, you're completely prepared for an audit by the IRS. He's a great dude. And best of all, you have total control over your business. With the click of a button, Talk pulls up financial records, receivables, payables, employee expenses, and account balances 24/7. Now think of something fun. With Talk, now you have time to go do it.
All right. So and then if you see the kind of pricing that it gives, like on Talk, if you're going to get, your accounting gets done just by talking the transaction and scanning the invoice, right? So this is what the free accounts give you. This is for family management of expenses. It gives you for free. Medical expenses, multiple family members on the same budget, summer job income, W-2 comes in the mail. These are the kind of facilities it gives, right? This covers QuickBooks and all. This is also free, small business bookkeeping, right? And for the most advanced one, what it is offering is $20 per month. That comes to 1,400 rupees. Can you imagine that, right? So it does all the expense tracking, bookkeeping, job costing, managing receivables and payables. This is $20 per month, right? And that is the US cost. So these are the kind of changes, because what happens is with AI, the lowest level jobs, which are, are pretty repetitive and in huge numbers, they are going to be immediately replaceable with this AI thing, because those steps are so fixed and finite, exactly as Anil sir pointed out, right? Similarly, if you look at, I'm going to show you this particular use cases for audit. All right, now in this one, Deloitte is talking about, how they use it for audit. And this is something that they have created, which is called knowledge space. It was developed 15 years ago. It allows you to scale up offering in the market. It has all the Deloitte's pool of resources and expertise and talent. Everything is covered over here in this particular thing, which we call it as the knowledge space that they have made using this AI, right? So it uses this speech analytics, right? So it gives you deeper insights into customer behavior of clients who have call centers crucial to their business and all. So not just that they are drafting things which are specific, industry specific kind of a thing. This particular thing called knowledge space provides sophisticated voice and speech analytics across call centers and a commercialized intelligence approach, right? So it helps from conduct to compliance to customer sentiment, loyalty, attrition, sales effectiveness. These are the kind of KPI parameters that it helps the client with, all right? So these are the kind of changes which are coming into the system. This is for banking, right? TD voice print. I can show you what they are doing with the voice print. All right, so TD voice print system takes a print of your voice in real time and transcribes into mathematical data that cannot be replicated. So like the lines in your finger, your voice print is also based on your unique voice, right? It's composed of over 100 different characteristics that uniquely represent your voice. So no one else has a voice which is like you, right? So this is an additional layer of security which this voice print helps. So this could be very helpful to all businesses who are having large number of customers, and you want to add, additional layer of security for the transactions in the background of the kind of cyber crimes that are going to come up day by day. So this is about TD voice print that is being used over here. This is one of the use cases, and I like to show you the change which has come with respect to the hiring, interview hiring, and I like to show you a video.
Hello, my name is Vera, and I'm a robot. And what's your name?
Hi, my name is Jason Bellini. This is Vera, a robot that does job interviews.
What are the 3 top important tips for a salesperson?
She's done 10,000 of them and counting.
Congratulations. We chose you as one of the best candidates for a sales representative.
What looks like the future is already a reality. Hiring is undergoing a revolution. Almost all Fortune 500 companies now use some form of automation. She keeps winking at me and then rolling her eyes at me. But many companies are also trying to look under the hood of job applicants and assess them in completely new ways. You're quantifying human behavior, human expressions, human voices, turning that into data.
We're now using artificial intelligence to help companies find the very best talent.
And most likely you were being analyzed by an algorithm. How does that make you feel?
I feel like that would blindside me entirely.
Experts call the proliferation of artificial intelligence, machine learning, and data science tools the Wild West of hiring. Critics, and even some hiring managers themselves, say they're concerned about these tools' potential for bias. They raise issues like fairness, transparency, and accuracy.
So has the government taken a look at these algorithms to figure out whether they are within the law?
Not yet. Thank you for an interesting dialogue. Have a nice day.
Thanks. You have a nice day too, wherever you are. Fingers crossed. We begin our exploration of the new world of hiring with a visit to the headquarters of one of the companies that's pushing the envelope, HireVue. Its artificial intelligence assessment tool is used by over 50 companies, including Unilever and Hilton, which both declined to comment. This, I'm told, is a typical digital interview for someone applying to become a customer service rep. It confronts me with several scenarios that, on the job, I might encounter.
If you can't help me resolve this right now, I'm going to take my business elsewhere.
I'm here to try to make things better.
I go into this knowing something that HireVue acknowledges many job candidates potentially do not, that my responses are being assessed not by human beings, but by AI, analyzing my tone of voice, the clusters of words I use, and my micro expressions.
So here's what's wild to me. The notion of micro expressions, is that what you're calling them?
It's the facial analysis software. It's capturing, if you think of facial movement, smiling, frowning, eyebrow movement, those are actual database points, and they roll together to give certain emotions and traits and personality and thinking style things.
Here I am. I just did the interview for a job as a customer support representative. How'd I do?
The first thing is we look at the AI score that's attached to it, and you can see that up here. You scored it at 37%.
That's pretty good, right?
No, that's out of 100. Right? So you're kind of in the bottom third, if you will, in that job. So you'd be a low match, essentially.
My rating is the result of HireVue's AI comparing my responses to those of actual employees. Essentially, my performance is being compared. My voice, my words, my facial expressions against a company's highest performers.
So you think if an employer were to see that number, would I be written off? Most likely, would it be filtered out of the process completely?
No, absolutely not, actually. What we would recommend is that the candidates could be rank ordered by that, but they still go and look at the different videos.
So you're telling me that everybody who goes through this, they get seen by someone?
Can be. They want to watch all the videos.
But they might decide, hey, this guy Jason only has 37%, not even worth our time.
If you score so low, they might say we may not watch all the videos, but they may watch a question. They confer with that score and then move on.
We came here to Chicago to meet a young man just graduated from college who's not a huge fan of video interviews.
Local bank on the south side of Chicago.
And for how many of those 30 did you have to do video interviews?
I would say around 10 of them.
About half of them were administered on HireVue's platform.
Were you not getting follow-up interviews after you did these online interviews?
To be honest, after all of them, essentially, I never really went past the first round. It didn't provide me the opportunity to actually show who I really am.
Wong believes it wasn't his education or work experience, but the video interview format that caused him not to advance. He doesn't know which companies might have applied AI analysis. The place where Wong eventually got a job does all of its interviews in person.
I'm old-fashioned, I guess. So I want to see the people. I want to ask my questions. I want to look at them in the eye.
Not to put you on the spot, but how's he doing? Let's do a little job review right now.
My 30 years of doing this, he's probably one of the top 3 or 4 or 5 kids who come through here.
How about that? Good for you.
Yeah, he's done very well.
Kevin Parker is HireVue's CEO. He says that his platform removes human bias from the hiring process.
We're providing a very fair and very level playing field for people to really shine.
Can you imagine why some people might be a little upset when it doesn't work out for them?
Sure. But let's look at what the alternative is. And I think in a process that we have today, it sort of has this illusion of validity. People get weeded out all the time from hiring process.
Ifeoma Ajunwa is a sociology and law professor at Cornell University. She's researching the societal implications of platforms like HireVue's.
when you think about automated hiring, the impact is far higher than any one potentially biased human manager.
And that's why she says experts should take a closer look inside these algorithmic black boxes. Microexpressions, is it really science?
It's still, frankly, developing science, because the important thing is there's no clear established pattern of what facial expression is needed for any job. So applicants could be eliminated for facial expressions that have nothing to do with the job.
HireVue sees the challenge differently. The company says that only the data points that are relevant in predicting what matters are really considered, and that their model attempts to capture all different facial expressions that have been seen in top performers. What about an AI review of the way we express ourselves on social media? Could that be a window into our compatibility for a job?
With DeepSense, essentially what we build this meta profile, a behavioral profile of every individual.
Parikh Kalkat's company is spearheading another trend in hiring, a move away from judging people based on their resumes and skills towards decisions based on people's personalities. This company, DeepSense, uses applicants' Twitter, LinkedIn, and other social media accounts to do more than just check for questionable behavior. DeepSense says that it runs scientifically based tests to surface people's underlying personality traits. I'm just a little skeptical that from a Twitter feed, you can determine my personality or anyone.
It's not perfect, but now let's remember, everything is relative.
And you don't need to tell people.
This is public data.
Is it legal?
Well, that is all public information. So yes, it is perfectly legal.
Is it ethical?
So that's the second question. When you're posting on Twitter, you're certainly not imagining that that information is being collected to be used against you.
So what's DeepSense's sense of who I am? So Jason Bellini is a person who can be a little anxious sometimes.
Yeah.
He likes to face challenges up front. That's true. To test DeepSense's tool, I actually did one of the personality tests. It's the one that DeepSense used in its own benchmark testing. My results on Think DeepSense. Can you tell me which companies they are?
I can't share the companies. I can tell you one of them is a consulting, one of the big 5 consulting ones.
Okay. They don't want people to know that they're using your service?
It's still experimental for a lot of people.
Not a lot of transparency at the dawn of AI assessing job candidates. We, the public, can't see what's in the black box, nor in most cases do we know when it's analyzing us.
And it's important actually that we really stop to ask, is this working for society?
So the technology is still evolving. That is what it says. All right. But we need to know that this kind of changes are coming. Now, the next part of AI is what we call as a natural language processing, and one of which is called sentiment analysis. And sentiment is very important when we are talking about stakeholders like investors or customers. So what are the kind of company reviews that are coming in based on maybe the online data or social media or the brand name or the brand standing or the performance or the stock market performance kind of thing. So whether it is positive, neutral, or negative, right? Second is called named entity resolution. So this is based on a detection-based structure, where when we're talking about fraud detection kind of a thing, where if an invoice is 001A or 01A, that is the kind of the fraud that would be attempted in terms of say making a fake invoice or a missing invoice kind of a thing. So this is a detection-based structure which it uses. Next is called text clustering and categorization. This helps with document grouping, and sometimes it uses predetermined classification. So you understand the kind of huge chunk of data would government departments and those kind of clients would have. So text clustering categorization is something that AI helps with. So in accounting, mining contracts and fraud detections, right? In auditing, you understand what audit is about. That is the first step for any kind of an auditing process, right? So all these are the things where AI can help us out. Finance, assessment of entities' performance using online data or social media, right? So maybe the banks want to analyze and assess the credibility, right? So maybe they can use all kind of open source information and apply AI to it to assess something or the other, right? So how NLP works. So if you're just giving an example of how, talking about reviews. So it extracts the text from the source, that is the online reviews, then pre-processes the text. So it removes the stop words and lemmatizes it for making it suitable for applying artificial intelligence. So say one review is called I like the shoes. Say if you're talking about Amazon or Flipkart where the customers are going to post reviews, or say maybe it's your client and you are giving it, the client is giving you a performance review. So say I like the shoe. Second review is liked my bag. These are the kind of comments where the customers are going to put up for the businesses. And then what AI does is this text clusterization. So it picks up the stem words from the reviews, say like and shoes. So like and shoes, that is the kind of tabulation it would do for the data for doing an analysis and bringing out decisions. So when you go to the web portal, Facebook or anywhere online, you realize that the kind of shoes that you are, say for example, you are buying shoes online, and the AI helps this company learn from this big data and open data that is out in public domain to analyze what kind of shoes you like, and maybe all kinds of companies advertisements will automatically prop up any web page you go to, right? So this is the algorithm they use for it, NLP, right? So in the second review you see like and bag, so they're going to put a 1 over here. So say you always like a blue colored bag. So the AI is going to analyze that this particular customer is liking a blue colored bag. So it will automatically generate that blue colored bag options on your web page, right? Because that is how it works. So it applies the NLP technique this way. So sentiment analysis, text clustering, these are the kind of tools they use. Now, if I'm going to show you some how Deloitte helps with respect to the, cognitive technologies, Deloitte is going to use it. So it already shows you these are the tools it is using, and you can see from the name that there is also an Indian out there, right? So sentiment analysis, topic modeling, text categorization, these are the AI tools. Information extraction, text clustering, these are the ones we already discussed. So how topic modeling is helping it out. So the Securities and Exchange Commission in United States, right? It uses NLP for what? After the 2008 financial crisis, it helps them identify potential problems in the disclosure reports of companies charged with financial misconduct. So this is the step they took after the financial crisis to use this particular technique. Next is text categorization. How that is helping? It is helping them to classify over 100,000 declassified government records for the Digital National Security Archive. Similarly, you see text clustering. So how text clustering is helping them. So it helps them group similar documents like articles, tweets, social media posts, analyze them, and then discover what is important and what is the hidden subject out there. So these are the kind of AI tools it is using. Overall, here also you can see the mention of chatbots. So basically, the bots Anil sir was talking about at the start, that we all are going to keep a bot along with us in a pocket. So that is where we are heading to. All right. Let me show you how it helps with respect to audit. All right, so how the big four are moving towards using NLP. So it helps with respect to text preparation. All right. So see, a 70-member internal corporate innovation team focuses on all aspects of emerging technology. The team devotes 80% of its time into AI, right? So of all the research and development efforts, 80% time goes into AI. That is the kind of investments they are putting in, right? So how does NLP has helped them, right? So they have used NLP for document review. So how a Deloitte team might comb through hundreds of thousands of legal documents looking for a change of control provisions during a client's sale of business unit. Now this used to keep dozens of employees occupied for half a year. You see the amount of time and the money costing. Now a team of 6 to 8 members can use an AI system to complete the same task in less than a month. This is the kind of impact of AI, right? Similarly, it also uses AI to review lease accounting standards, right? So you can see the changes which are coming. And the big four are always at the forefront in doing this. Similarly, in the banking and financial services. I've given you these two links in the PowerPoint presentation, which would be shared by the branch and the convener and the host, right? So you can go and download this particular Rapid Miner. This Rapid Miner helps out with using auditing techniques, and there are online methods of learning how it works. So I've given you these two links. You can, after this particular webinar, when you want to self-study something for improving your own auditing processes, this is where it's going to help and give you some information. So you can download this Rapid Miner and learn how it functions. Next one is about machine vision. So the ability for the machines to interpret, images. So we all know about optical character readers and face recognition. So you can see over here example, these three are images of ships. And this is how AI is learning what is the shape of a ship, right? So important features of individual predictions over here. In this particular image, to detect this boat, look at the wheelhouse, right? The wheelhouse portion of the boat. In this particular, look at the sails. So the sails are which are coming up as a prominent character in this particular image. So this is how AI models out how to identify different kind of images. Over here, this particular speech-to-face apps which are coming up. What happens in this is that somebody is speaking something, and based on that speech, the app is able to make out what the person looks like. All right, that's very strange, but this is a reconstructed face, right? So the person speaking and then the kind of face, just based on the voice of the person, they are finding out the structure of the face of the person. All right, so you can see this guy looks like this, and then he has spoken something, and the app is able to make out a face something like this, which is very much near about what the real face is. To understand how much of speeches it must have analyzed to correlate it with the face structure. And we all know about self-driving cars, right? Robots. There are apps which are reviewing age and gender from face and the type based on images of human handwriting, right? So you put up an image in the app with your own human handwriting, and then the app is able to understand on its own what is being written on that particular page, right? So this is the kind of AI. So in accounting, the invoices scanning can be done. For auditing, audit compliance can be done with the AI techniques. And in finance, you can see performance management analysis can be done of the teams and all, right? So this is how AI can help. Now, how machine learning helps identifying and learning, different patterns of data. So this is the backend structure which goes. So one is the predictive modeling which AI use. Will this customer pay if I grant him this particular loan? So banks and financial institutions are going to find it very, very helpful. So it starts with getting customer data using machine learning techniques, and what is the prediction, whether should I grant the loan or not, or respectfully decline the loan, right? So this particular machine learning would use, all kinds of different inputs. The discovery service, which IBM Watson is one of the part of it, where it's going to feed on and check out all the data, open source data available with respect to that person or the entity, and then the banks can use to determine whether the person does have that credibility for getting this particular loan. So this is one which we call as a predictive modeling, and there is one descriptive modeling, like what type of investor is this. So machine learning helps with respect to getting started with getting the investor data, applying machine learning techniques, and what kind of investor is this, whether it's an active investor, conscientious, or a passive investor, right? So, and definitely the businesses would like to say, if you're talking about broker firms like Motilal Oswal or something like that, they would like to know this classification so that they can derive and push a strategy to convert them into their potential target market customers, right? So this is a descriptive modeling of machine learning. So robot process automation, intelligence, it uses software, fuzzy logic. With respect to our domains, it helps online payroll processing, generating auto audit work papers, and forms processing. These are, as I told you, that the basic level processes will first get automated, right? So Internet of Things is the new thing. We all know in the smart homes, they are using these sensors. There are cars coming with sensors. There are, homes where as soon as you enter, the lights go on and off according to your entrance and exit, right? So similarly, there is something called inventory management and asset count, or fleet management, or per mile insurance, which businesses use. So what happens is, say, for example, I need to give, say, Cisco, if we are talking about Cisco gives a particular AI system, it offers as an AI system to, cargo management companies, where, the bots are going to decide based on the size of the order or the transport, which particular robot should move in which direction and get the the particular stock which is ordered loaded onto the bot and then loaded onto the cargo, right? So this is based on pure cost benefit analysis of the size of the cargo and all the factors that go into it, right? So then there is smart analytics, where account receivable and account payable analysis can be done. Risk assessment can be done, as we all know what risk assessment is as an auditor, right? Likelihood of occurrence of a particular disaster or that kind of an event, an unfavorable event, and then you're going to multiply it with the asset value, the presumed asset value from the weights 1 to 5, and you're going to find out what are the high risk items that the organization has, high risk assets and high risk processes. All right, so smart analytics can help out with that. And then with AI, learning AI, you are going to have different kinds of opportunities. Some of the projects which I'm working on are games. I am working on the AI-based algorithms for games which companies are designing in US for training the whole-time directors and the top management of big corporates. So I work in this particular sector, and I also work on the national security sector, where if I'm going to give you examples of the kind of transactions that we have, say suppose there are rogue elements which are operating in India, and if I'm supposed to give you examples of how AI is being used, to quote some of the examples, I can give you, say, almonds being purchased from Pakistan for say 200 rupees kilo and across the border, and then the trader is going to sell it at say 900 rupees a kilo, and that 700 goes into sponsoring the stone pelting kind of thing. Then there are transactions like there is a fake tourist online operator in Kashmir or in Northeast, right, where the Maoists are there, and some agents from China or Pakistan or other rogue elements are going to book a tourist package transaction and deposit an amount, and then they are going to cancel those transactions, and the entire security deposit which is forfeited goes into sponsoring terror and riots and protests, right? So AI can help detect the suspect kind of transactions that we are looking for. There would be new bank accounts which are suddenly showing suspicious activities. There would be transfer of small amounts so that there are no traces or audit trails where where this funding is going. So we need to tap in AI to find out the objective code of withdrawing this amount when they convert the foreign exchange into INR, Indian currency, and then we need to tap and find out, assess and find out where we need to exactly put in the internal controls to save our country from this kind of rogue elements. So these are the kind of opportunities you also have on the national security front. These are kind of some of the projects that I do, and these are kind of opportunities you have. As far as professionals like you people are concerned, you can start with implementing AI applications. The basic one would be where the process is the same across the board and all the time. You can put it and regularize and make it into AI systems, right? You don't want to, don't wish to put up a huge amount. So definitely the low level task is where you want to employ AI into. So no scanning and printing, digital input and output is what you want to look out for. Considering sensor data, preparing and integrating it with your current systems. That is what you're going to look for. And then you go for a prototype. Then you go for higher level of automation. And then, the kind of artificial intelligence level, which the big four has reached nowadays, right? So you initiate, you develop a prototype, you implement it, you do user testing, monitor, update, and scale. That is how it goes. So I want to end my session with this. So AI starts with minor automations in your office management. That's all. Thank you for the patient hearing that you have given me. I guess you all were. Yeah.
Thank you so much, sir.
Yeah.
I now invite CA Vinod Pahilwani, Vice Chairman, Vadodara branch, to propose a formal vote of thanks for this session.
थोड़ा extend हो गया है, but that's okay.
Okay. On behalf of Vadodara branch, I must thank Ankit for power-packed presentation on AI and how it is going to affect our industry and the challenges it is holding and how we can convert those challenges into opportunities. Thank you, Ankit, for such a nice presentation. Friends, to summarize what I have learned, what I have taken from this lecture, let me give you a story, right? The story is like this, right? In today's world, suppose I got promoted in my office and I want to buy a car. I want to, get a new car. Yesterday I got a car, and today with surprise, I got promotion, and now I'm interested in changing the car or changing the flat. But how to do that is not possible because we in today's world are living in a product industry where we are holding physical products. So the upcoming industry will be like this. Some company will come here and tell you that we are into lifestyle selling business, and they will offer you this kind of services like you can upgrade your lifestyle with click of the button, right? So with the click of the button, automatically your car changes, your home changes, your school kids going to school automatically changes. You need not go take care of all these things, right? This is, I think, the presentation I have seen you in the presentation. This is what the summary I got, right? Ankit, thank you for nice presentation. Friends, challenges are there, but opportunity is also there. Let me brief you. Whenever there is a challenge, you have to go to the basics, right? And the basics are how relevant you are going to be. And the way to make yourself relevant to the market is by creating, communicating, and delivering value. So please identify the value you are offering to the marketplace, right? Identify the value, create the value, communicate that value, and right, deliver that value. So this is the key takeaway. Thank you, Ankit. Thank you, Anil Bhandari sir, in your absence. Thank you. Over to MOC.
Thank you so much, sir. Now we will proceed for lunch break and get back again at 3 p.m. for a power pack session. Thank you.
हेलो भारत सर।
हेलो।
हाँ सर, सर वीडियो ऑन कर दीजिए।
मेरा स्क्रीन दिख रहा है?
हाँ सर दिख रहा है, फुल स्क्रीन कर दो।
उधर लगा ना।
हाँ सर बराबर है अभी।
Very good afternoon, everyone. I am CA Ketki Desai, and I welcome you once again to the virtual sub-regional conference hosted by Vadodara branch of WIRC of ICAI. For any doubts and queries, we request you to post your concerns in the chat box. Interestingly, residential status is a term coined under Income Tax Act and has nothing to do with the nationality or domicile of a person. An Indian who is a citizen of India can be non-resident for income tax purpose, whereas an American who is a citizen of America can be resident of India for income tax purpose. The residential status of a taxpayer plays a key role in determining the scope of taxable income for the financial year in India, and thereby the tax payable. For an individual, the residential status is determined solely by his or her physical presence in India during the financial year. On the other hand, in Indian Companies Act, incorporated under Companies Act 2013, is always a resident in India. We are all aware of the basics of residential status, but today we have a very promising speaker for the value addition. I would like to introduce our speaker, CA Parikh Savla, who is a chartered accountant from Institute of Chartered Accountants of India and Institute of Chartered Accountants of England and Wales, certified fraud examiner from Association of Certified Fraud Examiners, USA, DISA, insolvency professional, registered valuer securities and financial assets. He regularly writes for various newsletters, magazines, newspapers on the topic of direct taxes and corporate law. He has addressed audiences at various seminars, forums, and conferences, and has also presented background papers on various topics of professional interest. He has held leadership positions with various professional institutions. Currently, he is a chairman of Journal Chamber of Tax and Consultants and is actively involved in many other professional bodies. I would now request CA Parikh Savla to guide us and take over the charge.
Thank you, Ketki, for the kind words. I welcome everyone to this session, and I thanks the Baroda branch of WRC of ICAI for giving me opportunity to share my thoughts on the subject. We have around 60 minutes, so I'll try to have my presentation for around 45 to 50 minutes, and we can have the question answers at the end for around 10 minutes. So that we can move on the topic. The topic which is there, the do's and don'ts of 15 CA-CB. So let us understand 15 CA-CB is being issued in case of a withholding of tax under section 195. So let us have the background of section 195. Then we move to the do's and don'ts, and thereafter the issues arising from the residential status recent amendments. The object of section 195, this has been enunciated by the circular number 152 of 1974, which says that when any payment is made to a non-resident and if the tax is not withheld and the money going out of India, India may not have a right to collect the money or collect the taxes from that person. In view of this, the section 195 is there so that the right taxes, which is the sovereign right of any country, has been exercised and the taxes are collected. And if you don't collect the taxes, there are the person who is making a payment is subject to penal consequences and is considered as SSE deemed in default. And there are various offences also under prosecution 276 capital B. The one of celebrated cases, which is of the Vodafone, which we have been hearing, the case basically enumerated from the non-withholding of tax in India. What is section 195? Section 195 has a 195.1 lays the responsibility on any person to deduct a tax. So any person means it can be resident, it can be non-resident, any person. So there may not be the section applies to the everyone under the sun, whether in India, outside India. So any person who is making a payment is subject, if those payments are subject to section 195, is required to withhold the tax. Responsibility is on any person. Such person may have or may not have any residence or business in India or business connection in India. To what types of payments it applies? It applies to the payment of any interest. It excludes certain type of interest, which is 194, which is called under section 194 LB, LC, and section 194 LD, or any other sum which is chargeable under the provisions of the Act, other than the salaries. The salaries is governed by section 192 itself, and 194 LB, LC, LD, they have specific provisions. There are certain exemptions to those. They are related to non-resident payments on interest. There are specific exemptions to it. So that 195 is not governing those types of payments. When tax is required to be deducted, as usual, tax is required to be deducted at the time of credit or payment, whichever is earlier. And the rate, as we say, as you have seen in the say 194J professional, the rate of tax is fixed currently 7.5%. But in case of salaries, the rate of tax is not fixed. It goes on slab only to determine the income, and accordingly tax is determined. Similarly, under section 195 also, rate of tax is not specified. It is a rate which is specified in the Finance Act of the relevant year or in the agreement under section 90 or 90 capital A. So that is how the rate of tax is. So there is no standard rate as such. Anyway, DTAA provides certain types of standard rates, but there are no standard rates for deduction of tax under section 195. There is no threshold limit for any payment. So even the payment is of rupees 100 rupees, if 195 applies, the tax is required to be withheld. It goes to the payee. If the payee has to be non-resident, in case the payee is not a non-resident, but he is a resident but not ordinary resident, in that scenario, the withholding tax will not apply to that person. Similarly, recently India has introduced the POEM guidelines. As per the POEM guidelines, the company which is a non-resident can become a tax resident of India. In that scenario, it has been clarified by the circular that provision of section 195 will not apply to those. Provision of section 195 will apply, but not though the company is a resident in India, but the TDS as applicable resident will not apply to it. Many times certain transactions happen, and those transactions are pursuant to the power of attorney. For example, there is a sale of flat and there is a power of attorney holder in India who is executing those transactions. So even if in case of power of attorney transactions, the 195 provisions will apply there. The provisions apply only if the income is taxable in India. In case income is not taxable, the 195 will not apply. For example, when the share of profit is given to the partner, who is a non-resident partner, at the time of payment of such share of profit to the partner, the provision of section 195 will not apply because that is income is exempt. In case of certain provisions, like under 194C, with certain payments which are made, which are personal in nature, it is specified that the provisions of section 195 will not apply. However, no such exemptions are provided in section 195. Even if such payment is made, which is personal in nature, the provisions of section 195 will be applicable, and there is no exemption for such type of things. You need to compare the provisions of the Income Tax Act as well as the DTAA, if DTAA is entered into that country. India has more than 90 countries with which DTAA has been entered. So provision which is more beneficial, either under the Income Tax Act or under DTAA, has to be seen, and accordingly tax is required to be deducted. The FTAs and royalty payments. It is said, which is that when tax required to be deducted, it is deducted at the time when the payment is made or the credit is made, whichever is earlier. But there are certain decisions which are there, which says that the fees for technical services or royalty payments is taxable in the year in which the payment is made, irrespective of the year in which accrued. So in that cases, in those scenarios, it has been held that the provisions will apply in the year in which payment is made. But though Act is very clear on this, so only in case of we say the difficulty or something already happened, you can rely on this thing. Otherwise, withhold the tax and pay it to the government credit, because it's not worthwhile to do a litigation on the date of the payment. For the purpose of rate, so we have to see the rate, what is mentioned in the Act and what is mentioned in the DTAA. Whatever rate is beneficial, you can use that rate. And while withholding the taxes, what is required to see, because the money is always been paid in the foreign currency. So what will the rate of exchange which has to be seen? The rate of exchange need to be considered on the date on which the tax was required to be deducted at source, and not at the time when the tax was required to be paid. So exchange rate is the SBI buying rate on the date on which tax was required to be deducted at source. When the actual payment is made, there may be an exchange difference, positive or negative, that has to be ignored, and TDS, no adjustment is required to be made. Another time is that usually the finance bill is presented, and Act to become Act usually takes a time. Now the time has been considerably reduced nowadays, but still there is a gap of time, lag of time between the two dates. In that scenario, where the finance bill has one rate and the finance act has old finance act applicable act has another rate, and the financial year has already started. In that scenario, you need to compare the rate between the finance bill, which has been presented or pending for approval, and the finance act of the earlier year. Whichever is beneficial, you can apply that rate of tax for the purpose of section 195 on this. The question may arise whether the surcharge and cess, because any rate which is specified under the income tax side, there is surcharge as well as cess under the income tax side. Whether we need to add the surcharge or cess or no. If you are relying on the rate which is specified under the Finance Act, the surcharge and cess required to be added. But if you are doing a withholding of tax on the basis of rate which is mentioned in the DTAA, in that scenario, in my view, the rate what is specified in DTAA need to be applied, and not the rate which has been mentioned under the and that should not be increased by the surcharge and cess which is applicable to the Income Tax Act. So how we determine the tax? We need to consider there are various heads. Income may fall under various categories. It can be salary, business, profession, dividend income, interest income, royalties, FTS, capital gains. You need to see the basis of charge. You need to compare the relevant provision under the Income Tax Act and also the DTAA. The relevant provisions has been articles of DTAA is in the fourth column on the table, which you can see on the screen. Income tax provisions of income tax is usually covered under section 9(1) and section 115A. So you can compare those rates between two things. You can compare the provisions under two things, and then you come to the conclusion whichever is beneficial. You deduct the tax and apply the relevant provisions. Now, recently, the DTAA is undergoing the change due to MLI, multilateral instruments. And in view of this MLI, the various DTAAs are getting modified accordingly. So whenever you are using DTAA, and if those MLI is in force with the country in which the DTAA has been entered, we need to look into it and consider the provisions in light of the modified provisions under the MLA. Coming to form proper, the 15 CA-CB is a two form. 15 CB is the form which has been applicable to the which has been used by the chartered accountant while issuing the certificate under section 195, and the 15 CA is a form to be applied by the filed by the deductor before the making remittance. This form has to be filled, 15 CA-CB has to be filled before making a remittance. It cannot be done post remittance. Again, the form, the date in the form which is to mention is a date. Usually, it's a date gets populated automatically. It can be current date or future date. It can't be the past date. So that if the certain payments which are made a few days back, maybe yesterday, as late as yesterday, and if you are filing the form 15 CA-CB as on date, you can't fill the date of yesterday. You need to put the date of today or of a subsequent date. In view of this, the practical difficulty, you need to see that the form is filed before the date of making transactions. Because further in the form, there are limited fields where we can write the details. In case some case where the transaction already happened, payment has been released to the payee, but the 15 forms have not been filed by the payer in India. You can, in the field wherever available space may be there, you can try to fill the date that the payment is already made on so and so date, but however the form has been entered subsequently. Even 15 CB, which is to be issued by the chartered accountant, cannot be considered, cannot have a possibility of making a date which has already lapsed or past date. In view of this, if you put the current date where the payment has already been made, the form may be incorrect to that extent, and as a result of which you may be subject to penal consequences. Hence, wherever possible, try to make a disclosure, and you always take appropriate steps that client may not subsequently take a stand that the form was not filed due to the error at the chartered accountant's office, or I have given details to the chartered accountant, but CA has not filed the form in time, result of which the incorrect particulars has been entered in the form. So appropriate care to be taken, appropriate declaration to be taken from the payer in this regards. The form has 4 parts, part A, B, C, and D. Part A is relevant to the remittance which does not exceed ₹5 lakhs in aggregate during the financial year, and amounts is chargeable to tax. You can make a remittance, and since the amounts are very small, the certificate from chartered accountant in the form 15 CB is not required. Form part B is applicable when the remittance is exceeding ₹5 lakhs and amount is chargeable to tax. And the order under section 195(2) or 195(3) or 197, that is, these are orders under the section issued by the income tax officer for nil deduction or lower deduction of the tax. Since this form's payment is made, which is subject to on the basis of certificate which is issued by the tax officer, form 15 CB issued by CA is not required here. Earlier, there was error in the heading of the form up to 2016 or 2017. The remittance up to INR 5 lakhs was written, which has been error was noticed by the CBDT and they are rectified, and now it mentions the remittance exceeding INR 5 lakhs rupees. Part C is the part where the payment exceeds ₹5 lakhs. Amount is chargeable to tax, and you obtain the certificate from the chartered accountant in the form system 15 CB. This form has 2 sections, section A and section B. Section A is the basic details, and section B gives the particulars of certain income which is been subject to remittance under that form. So the part C can be filled only if the CA has uploaded the 15 CB required, and you need to enter the details of the acknowledgement number of form 15 CB. Then only the form can be submitted. Part D is a form which is part in the form. The remittance is not taxable under the provisions of Income Tax Act. And these are payments are other than those which is specified under Rule 737 BB3. What are the payments covered under Rule 37 BB will come subsequently. There is a list of around 32 items which says that this remittance can be made for which the 15 CA CB may not be required to be filed. 15 CA CB has to file electronically, so you have no option to submit this physically to the tax officer if you are not able to upload the form for whatever reason may be. Once you upload the form, you cannot modify the form. And once you submit the form, it will show the form has been submitted on the website. So this is form to be submitted using the e-filing portal of the taxpayer. And once you are doing the part C of 15 CA is filled, the 15 CA certificate which is there, it will be, once you put the details of the acknowledgement number and the details, it will show the 15 CB is consumed. So you cannot use the same certificate for the another payment. If there are more than one type of payment, which is under different heads to maybe to same person or to different person, it's advisable to file the different forms rather than putting the single form. Since the 15 CB is used only once, it can't be used subsequently. If you have a single form and you are filing more than 115 CA, or the details are not getting incorporated in the same form, different types of payment, the 15 CB will not, which is issued by the chartered accountant, which cannot be used, and that may create the practical difficulties. If 15 CA form which has been consumed, which has consumed from 15 CB, and that form is withdrawn, the withdrawal of form was not available earlier. Now it has been available. Once that is done, the 15 CB is also stands withdrawn. Will show the form withdrawn. Once the form is withdrawn, you cannot use this form for any other payment. You may have physical difficulties that when the payment is taxable under Act, but DTAA, but taxable under Act, but exempt under DTAA, whether the Part C or Part D to be filled. Because both of the things says that is applicable to the taxable income or non-taxable income. Part D applies to non-taxable income and Part C applies to the taxable income. In my view, you need to use the Part C because the taxability has to be considered from the point of view of the Income Tax Act, not from the point of view of DTAA for choosing which part is applicable to you. There is a possibility that when certain shares are being transferred by the non-resident, and since the transfer is made by non-resident, the 195 will apply. But transfer is made at the loss. When the loss has been made, though the transfer of shares is taxable, falls under taxable category. So in that scenario, whether Part C or Part D will apply. Part C is the part where the remittance exceeds rupees 5 lakhs and amount is chargeable to tax. Say you are remitting rupees 6 lakhs. This is the loss also. There is loss also. And you are obtained the certificate from the chartered accountant in this regard. And So whether part C or D will apply, the issue may arise because part D is applicable when the limit is not taxable under the provisions of Income Tax Act. Since there is a loss, there is nothing taxable. But in my view, the income includes the losses and the loss may be computed by the taxpayer, the part C to be used and not the part D to be used. So the payments which are exempt under Rule 37BB is the list of some 33 payments. The scope of declaration has been expanded, whether it is taxable or not taxable, and it has been expanded. Ambit has been expanded very much. So now it says that Form 15 says it is not required to be filled if the amount is not chargeable under provisions of the Act, if remittance is made by individual and does not require the prior approval from RBI, or if the remittance is in nature of the specified the 33 items which are there. So all remittance are required to be notified, reported under the Form 15 CA or CB to the income tax officer through authorized dealer. Authorized dealer subsequently under the Form 15 CC will also remit information to the tax officer saying these are remittance which has been made from me, and the name of the person, if 15CB has been obtained, the name of the chartered accountant and all those things. Relevant details will be submitted by the authorized dealer. So form is not required if the sum is not chargeable under the Act, if the remittance is made by individuals. So for in case of non-individual remittance, even though they are exempt, Form 15 CACB remit will require to be specified, and the remittance which are in these 33 categories, it can be made by individual or non-individual. It may not be required to be a 15 CACB is not required to file. For example, the investments made by Indian company in the subsidiary company or any other company, equity shares, debt securities, the payment which is made under the liberal remittance scheme, if the imports are below 5 lakhs and so on. There's a list of the things which can read to it, and along with the list there is a code is mentioned. This code is required to be mentioned when you're filing the Form 15 CA or CB. What's the process for filing Form 15 CA CB? The process is that you need to log into your e-filing website. There can be some issues which we discuss subsequently for login, and the work list if the 15 CB has been uploaded. So you need to authorize the chartered accountant who can upload the 15 CB. Once the chartered accountant uploads the Form 15 CB, on login you will find in the work list. From work list you can download the acknowledgement number form, verify it, and then we prepare use the way we do it for the audit reports and other types of forms. Similar process is there. The password for opening the form is as usual the PAN plus date of birth. Then once this is done, then you submit the form. While submitting it, to verify it using a DSC, and the form can be submitted. In case of the part C will be submitted, it will ask the acknowledgement number of the Form 15 CB. You need to fill that acknowledgement number. Once everything is filled, if the 15 CB is filed, all fields will get auto-populated, 90%. Few data you need to input there, and you can submit the form. And where you can find, and same can be viewed under my account once the form has been filed. The form which is there, in case you want to log into the e-filing website, you can log in using the PAN number as a username and the password. Without PAN may not be possible. If you see the form part A, it says that the part A and part D, PAN has to be mentioned of the remitter if available, and even in the 10 also. So in absence of PAN or TAN, and if the payment is made, and even though it is specified in the form that if available, you may not be able to log into the website, e-filing website, and you may not be able to file the form 15 CB or CA. You can, in some cases where the PAN is not mandatory, when you're filling the part A or part D, you can also use the TAN as a login, and you can log in from using the TAN and then upload the forms, available forms in that system. Preparation is very important for filing the form 15CA CB. You need to verify what is the underlying agreement on the basis of which the payment is made. Because the first line of the form 15 CB specifies that I have verified the agreement between the parties, and at times the difficulties have been faced that the foreign company will say that we don't want to share our document, this is a secret document, this is a that document. In this case, you always take a stand that first line is the of the 15 CBs that I need to verify document or verify agreement under which the payment is emitting. Without that, I cannot certify it. Hence, the agreement is very much important. You may not keep the copies of those agreements, but you can make a notice of those agreements and give it back to the original agreements to them. Notices which are relevant for you for filling the form 15 CB and CA. You need to have verify the invoice, debit note from which the payments is made. There is correspondence between the parties which is happening. Correspondence may be oral correspondence, may not have any data for that, but from discussion with the client you may get understand what is oral correspondence that happened between the parties. You also look into the various email communications or any other mode of communication which you can lay hand to it. Review the secondary sources, for example, website of the payer and payee or some other things, what is available in the public domain, verify it. Obtain TRC from the payee and form 10F if the details of are not available in required details are not available in the form TRC. We'll see the form 10F subsequently. Details of payee's tax identification number, TIN, and if there is no such TIN in that company, the country, what is the document or what is the number that is been used by the company, by that country to identify the that tax. For example, social security number, which is there in the US. Similar types of numbers can be considered by the need to mention there. Need to obtain written communication from the payee. Being who is the beneficiary of the payment. There is no PE in India, and he is a tax resident of a home country of which a TRC has been issued. Verify the orders or certificates which are issued under section 195.2 or 195.3 or section 197. And SBI certificate, you can obtain certificate from the SBI for the obtaining the rate at which tax has been deducted. In case you don't have that rate of tax available, rate of exchange not available with you. This is a certificate which has been issued by chartered accountant. Hence, ICA guidance note on the audit reports and certificates for the specific purpose need to be verified by the accountant who is issuing the certificate. This is the factual data. Besides this, you also need to verify what are the provisions of the Income Tax Act, provisions of DTAA, including the protocols, MFM, whether there is a most favored nation clause or not, limitation of liability, LOB clause, and finally the commentaries on DTAA, as well as the read those commentaries in light of MLI, which is the multilateral instruments, and which has modified nearly 6,500 DTAAs across the world. And judicial precedents, because judicial precedents will help you to understand the characterization of transaction and whether taxes should be deducted, if yes, at what rate. If you don't have PAN or if you don't have PAN, then the section 206AA provides that tax is required to be deducted at the higher rate the higher of the three, that rate specified in the rules of act, rate in force, or 20%. So when the tax is being deducted, the issue is that whether the 206AA will apply, or a provision of DTAA will override the provision of section 206AA, because this is under Income Tax Act, and DTAA doesn't provide certain types of higher rate of withholding taxes. So there is circular of 333 number of 1982, which says that while computing the income under DTAA will prevail over the Income Tax Act, irrespective of whatever the provisions are there. Similar thing has been held by the Supreme Court in Azadi Bachao transaction. Even the provisions of DTAA are not in not favorable or to the favorable to India, still DTAA will prevail over the Income Tax Act. We had a first decision from the tribunal in case of Serum Institute, the company which has been in the news nowadays for, of course, for the good reasons. The Pune tribunal held that rate of DTAA will prevail over section 206AA, and the 20% cannot be evoked under section 206AA. There are subsequently various decisions has been held, including that of Delhi High Court. Subsequently, rule has been modified or introduced a new rule saying 37BC, which says that in absence of a PAN number, if the payments are in the nature of interest, royalties, or FTS, or in case of transfer of capital asset, payee need to provide the name, email ID, contact number, address of the resident country, tax TRC, and the TIN number or unique number. So even if the PAN is not there, then if these details are available, then 20% rate of tax will not apply to in that scenario. The TRC, so here heavy reliance has been placed on the TRC, and whether TRC is mandatory or merely a compliance thing. Ahmedabad tribunal recently has held that the TRC is the important document, but you cannot rely purely on TRC. In case the P is able to provide certain other documents which will prove his residency in a foreign country, which is a tax residency in foreign country, then TRC should not be asked for. It is just directory and not mandatory. TRC and Form 10F. As I said earlier, if the TRC doesn't capture the detail which is being required by the Income Tax Act, then you need to obtain the Form 10F from the payee. This form contains details of status, then PAN if available, nationality of a country, or specified territory of incorporation or registration is there. Then the period for which the TRC is been issued, address of the assessee in the country where the TRC is issued. All these details are generally not available in all types of TRC. For example, TRC which is issued by US tax authority, don't write the address and the PAN number. Anyway, PAN number of any taxpayer will not be quoted in the foreign jurisdiction. Hence, in that scenario, Form 10F becomes virtually important in all cases. Whereas in countries like UAE, they don't mention the status of the assessee or residence in the country. There can be practical difficulties when you obtain the TRC or the Form 10F. Is that there can be different financial year between the India and foreign countries. India follows the financial year, whereas many of the foreign countries follow the calendar year as a financial year. Remittance is different from that what is mentioned in the tax deducted at source. Then TRC is for the earlier available, for current period is not available, and the assessee has filed the payee has filed the application for the obtaining TRC. The TRC generally in countries like US takes around 30 days. And if during this scenario payment is being made, how we will counter it? Certificate issued by the authority, which is where the assessee is working, along with that of the certificate. The language, it may also happen in some cases that language on the TRC, like so for example, the TRC which is issued by Japan is usually written in the Japanese language. So in that scenario, how we will obtain that? Some countries don't have TRC, and whether the business license which is being issued by those countries can be used or not. The certificate is issued by the certain association and not by the tax authorities. These are some practical difficulties which we don't have a ready-made answer, but certainly the difficulties have been faced, and in that scenario, whatever TRC is available, whatever the certificate is available, you may rely on that with the appropriate disclosures made in the Form 15 CB or CA, wherever you are able to make it. Another thing is that the section 195A makes it mandatory if the payment is made net of taxes to be grossing up. So how will make a grossing up, especially when you are subject to the higher rate of tax due to section 206AA. So because that rate of tax is 20%, in normal case, the scenario one is specified here. When the transaction is there, 100 rupees is payable, rating force is 10%. So you need to grow what you are paying. 100 rupees is the net of taxes. Hence, you will grossing up. On grossing up, you will get it the amount is 111. You will deduct 10% on that amount. But when you are making the payment under 206AA, higher rate of tax, so whether grossing up to be made at the higher rate of tax or normal rate of tax. There is a decision of Bangalore ITAT in case of a watch, which says that the grossing up to be done with the rate of tax at the rate in force, not at the 20%, because 20% is not the charging section. It's merely a section which says the tax rate in case certain conditions are not fulfilled. The section 195.2, 195.3 and 197 is there, which you can obtain the certificate from the tax officer when you want to make a payment at the lower rate. I'm considering paucity of time. I'm not moving into this here. Coming to residential status, the person said to be resident in India if he's spent 182 days or more in India, or in the past immediately 4 years he has been in India for 65 days or more, and 60 days or more in the previous financial year. This is the being what we follow, but recently these provisions has been modified, and it says that in case from the financial year 2021, the period of 60 days which is mentioned there in the subsequent condition, you need to see that how that will be modified nowadays. So that 60 days, the relaxation is provided to the persons of Indian origin or who comes to visit to India, or a person is going out of India employment. The 60 days will be replaced by 180 days. Now that 60 days or 180 days which is there is going to be replaced by the new period, that is 120 days. And 120 days which says that and this will apply to whom? This will apply to the individuals who are citizen of India and who is of Indian origin and who has income, total income other than from the foreign sources which exceeds rupees 15 lakhs. There has also been made the deemed resident, new provision has been introduced which says that the person of Indian citizen or who is not liable to tax in any country shall deemed to be resident in India if his total income exceeds 15 lakhs and nil tax liability in the other countries where he is residing or domicile or whatever criteria is there. The tax in Indian government thinks the person is able to play with his residence such a way that he doesn't pay the tax in any of these countries. Hence, they have tried to capture such type of scenario here. Under any circumstances, the person will be treated as a resident, but not ordinary resident. Accordingly, provisions will apply to the person. Why what is the difference between ordinary resident and not ordinary resident? That income which accrues or arises outside India will be taxed in India in case of resident, but in case of resident but not ordinary resident, it won't be taxed in India. Hence, the person who is considered as a resident but not ordinary resident is receives any or deemed to receive any income in India is taxable. Accrues or arises or deemed to accrue or arise in India is taxable, but income which accrues or arises outside India is not taxable. The deeming brings various issues. What is the foreign source income? Which means income from foreign sources, the income which accrues outside India, except income derived from the business control in India or a profession set up in India. The different language is used for the business control in India and profession set up in India. Doesn't say the profession control in India. Then so that is the total income minus income which accrues or arises outside India plus income which is derived from the business control in India, income which is derived from the professional control in India. So whether I will consider income gross or net of expenses, income will be considered net of expenses. In case I am having a chapter 6A deduction like insurance premium under section 80C. When you determine this limit of 15 lakhs, chapter 6A deductions will not to be considered. It has to be considered gross of those deductions. Since that person is deemed resident in India, otherwise the transfer pricing provisions will apply to that any transaction between the resident and that non-resident. Since that is a deeming resident, the transfer pricing provisions will not apply to it. Provisions like disclosure of foreign assets and return of income may not apply to it. TDS you have to consider as per the TDS to the resident, unless until the CBDT comes to the clarification that you have to consider the TDS as per section 195, as it is done for the companies which are in the circulars being issued for the POEM countries. Black Money Act is not applicable. Chapter 6A, Chapter 12A will apply to that because that person becomes resident in India. However, by filing declaration, taxpayer may choose that Chapter 12A may not apply until the transfer or conversion of into money of such assets. Another point which is there on the residency is that due to lockdown, few people who have been traveled to India or who could not travel to India, their stay in India exceeded those days. So CBDT has issued a circular for the financial year 1920 which says that extended stay because of the lockdown or pandemic will be excluded for the purpose of calculation of the residency, and accordingly the period of residency should be considered. This from the current year, person of Indian origin is considered 180 days has reduced to 120 days. This will create the hardships to many people for the financial year 2021. And still date, there is no such circular issued by the CBDT, how they will treat such types of persons. This is one of the article which was quoted in the Economic Times, where I was quoted that this poem has created the issues, or because of this extended stay, the poem of foreign countries will be located into India, as a result of which the difficulties are being coming. The words are the use in the section is not liable to tax. So how this not liable to tax to be considered? Whether the say for the countries like UAE, there is a no income tax in the country, in the UAE. So whether that person will be considered not liable to tax, or how that to be considered. We have contrary decisions. Few decisions has been considered as stated that that country has right to tax, countries like UAE has right to tax, but they choose not to tax it. That should be sufficient. But there are also contrary decisions which is held that that is not considered as a tax payment, tax in those foreign countries. This all decisions were rendered in line of the DTAA, and the person will be subject to tax in India. But time will only tell us how this provision is being interpreted, or if the CBT comes with some clarification in this regard, we'll be able to come to know. The provision uses the word citizen. If the person who was citizen in India in the earlier years, but currently has given up his citizenship and taken citizenship of the foreign country, those persons will not be considered citizen and they will be excluded for this purpose. With this, I have end my presentation, and we may consider the question answers, if any, on the topic. And back to the organizers for this, for the time being.
Thank you so much, sir, for the wonderful and knowledge-filled session. I now invite CA Rikin Patel, Treasurer, Vadodara Branch, to propose a formal vote of thanks.
So on behalf of WIRC and Vadodara branch of WIRC of ICI, I thank sir for sparing his valuable time and an excellent presentation and wonderful session. It is very important these days regarding 15 CA-CB and the do's and don'ts of 15 CA-CB and other residential status related issues. I'm sure, sir, it was helpful to everyone present over here. Thank you so much.
Thank you.
Back to MOC.
Thank you so much, sir. The mementos to the dignitaries will be delivered to them. Thank you.
We are starting
We
with the
will
next
shortly
session immediately. We are starting with the next session immediately.
We Rahul sir आएंगे ना, राहुल पारिक सर ना?
Yes.
और मनीष सर और ये.
Yeah, I'm there.
हाँ टीम सर.
राहुल सर है, मनीष सर है, ओसवाल सर है.
We wait for Manish sir and Jayesh sir to join, and then we start.
Yeah, still there is 5-7 minutes to the session, Hitarth.
Oh, okay. Yeah.
Can you hear me?
Yes, sir.
Okay, good afternoon.
Good afternoon, sir.
सर आपका माइक ऑन करें, कैमरा ऑन करें.
Good afternoon, sir.
Good afternoon. I'm audible?
Yes, sir.
Yes, sir.
Manish, you are audible.
Okay, okay.
Do you want to start with the session or we wait for 4 o'clock?
Sir, we can wait if
We are waiting for Jayesh sir.
5 minutes to 4. If we can wait for 5 more minutes.
Yeah. Okay. So we have 5 minutes. I'll have a tea then. Yeah.
Okay.
Same here.
Okay.
अरे जयेश सर तो है ओके मैं लांबी 5 मिनिट છે
તમે જે વ્યક્તિને કોલ કરો છો તે બીજા કોઈ કોલ પર વ્યસ્ત છે
अरे
आणि આપી દેજો અહીં મૂકી દે ક્લાસ
एक मिनट बोलो
હેલો
સર માઇક્રોફોન ચાલુ તમારો
હા sure yeah
हाँ दिलवीर
The access will be given to Rahul sir right now. So it will be one at a time. If the presentation is to be done, then
I am not getting the option for sharing my screen.
Yes, sir. So you will be having an access in some time.
Somebody will share the screen with the questions so that we will answer.
Yeah, that, sir, I will do that.
And what is the process you are doing? You want somebody to read the question, or we will read the question and answer?
No, sir. I will read out the questions and then give some background and then read out the questions. Yeah.
Okay.
good afternoon Ostwal sir.
Oh, good afternoon, sir. Good afternoon. I said with your liberty I have taken, and I'm
no sure. It's tea time already, and these webinars now we are sort of we are not being offered food, tea, anything, so naturally we'll have to
we have to take our own privileges.
That is the reason why it is concessional, no? At times free. But honestly speaking, at a regional level and the city level, you need not hold webinars, because institute should have done something that all India level. This was the best opportunity to train all the members by the same quality. The speakers are there. There are a number of speakers, and therefore there could be a daily program, and the program should have been kept in advance so that people have an option of selecting the program and attending them. I think an institute ought to have taken advantage of this, the technology.
True. Is the screen now visible, the PPT?
Visible.
Yeah, PPT
Yes,
is
sir.
there. Yeah.
It's visible, sir.
Yeah.
Okay.
And Manish sir, you are always welcome at the branch for tea or anything you wish.
Oh, Ostwal sir also would like to join, no?
So good that you did not offer me that. Otherwise, it would have been a costly affair for coming for tea from Bombay.
Sir, we would have pleasure not to meeting you. That's more important.
I know one of the taxation committee meeting, the International Tax Group of the CBDT committee. Myself and Sonde attended that meeting. Vijay Mathur was the chairman. No, Vijay not Mathur. BK Singh was the chairman. And he said, sir, after going to Delhi and in a meeting room, he said, we are cancelling this meeting. Have a coffee and have a coffee having come there. I remarked immediately, this is the costliest coffee I am taking in my life. 20,000 rupees coffee.
That's true, sir.
So we are about to begin the third technical session.
Yeah.
For any doubts and queries, we request you to post your concerns in the chat box. Good afternoon, everybody. We extend again a warm welcome to all to this 2-day virtual sub-regional conference at Baroda, organized by WIRC and hosted by Vadodara branch of WIRC. The experts in this panel discussion are CA Jayesh Kala, Regional Council Member, CA Rahul Parikh, past Chairman, Baroda branch and panel moderator for this session, CA TP Ostwal, panelist for this session, CA Manish Shah, past Chairman, Baroda branch and second panelist, CA Parikh, committee member of Baroda branch of WIRC. I would now request CA Jayesh Kala to deliver his welcome address.
Good afternoon, one and all. Thank you, Hitath ji. Respected TP Oswal ji, Manish bhai, Rahul bhai, it's always a great privilege to listen to TP Oswal ji and Manish bhai, and who else can be a better person than TP Oswal ji in respect of international taxation. I believe when he is there on the panel, then international taxation will be really, the discussion will be really wonderful, and it will impart great sort of knowledge and wisdom and value addition to each and every participants present over here. Indeed, this pandemic has given various opportunities to all the practitioners, and virtually connecting through virtual mode is the one of the best outcome of this pandemic. We are able to connect from anywhere, and now the distance is no more a barrier. Probably if it would have been in a physical mode, then definitely it would have been much difficult for everyone to come at a common place, but due to this pandemic, we are connecting virtually. Friends, this international taxation is now becoming a very, very important topic per se, because especially after this pandemic, when the entire global is going to become one, all the challenges are going to come, which is really worth considering. And as a practitioners, as a chartered accountant, our clients look upon us to guide them in respect of each and everything. Especially nowadays, no one can be aloof from the international tax part, because even if you are doing purchase sale transaction or rendering some services, then it is quite possible that international taxation is going to come into your way, and you have to be well versed in the topic. We are fortunate enough to have Mr. TP Ostwal, Mr. Manish Bhai as the panelist, with Rahul Bhai as the moderator. I'm sure this will be a wonderful session. Looking for a wonderful session. Thank you very much to Hitat once again for inviting me and allowing me to address the participants. Thank you very much.
Thank you so much, sir. CA Rahul Parikh, past chairman, Baroda branch of WIRC, and also a member of IBBI, is specializing into consulting on domestic and international tax issues, as also litigation associated with taxation, handling of mergers and acquisitions of various corporate entities, including the procedural aspects of various laws, consultancy in implementation of ERP systems, including SAP and other integrated software systems for improving organizational business processes, evaluation of technical and economic viability of the revival of SIC units, as well as for setting up of new ventures, besides the other areas of practice. He is currently a member of WIRC ICAI COVID-19 Economic Response Study Group. With these words, I introduce CA Rahul Parikh.
Thank you.
We are privileged to introduce CA TP Ostwal, a professor, advisor, author, member of ICAI and other bodies such as Government of India's Committee Drafting TP Regulations, Transfer Pricing Subcommittee of UN since inception. He has been professor in many renowned universities, national and international, and authored various books on range of subjects covering international taxation, transfer pricing, and black money law in India. CA Manish Shah, past chairman, Baroda branch of WIRC, is having a rich experience in practice of 36 years in the areas of corporate taxation and income tax. He has been a member of various committees of the ICAI, WIRC, and CBDT, such as International Affairs Committee, Local Committee on TDS, Gujarat State Regional Direct Tax Advisory Committee. He has been a regular speaker at various seminars and conferences organized at various forums. With these words, I introduce CA Manish Shah. We request Rahul sir to take over the charge of the session now, sir.
Thank you, Hitat, for the very gracious introductions and extensive introductions of all. So today I think we have a very interesting discussion on international taxation. CA Jayesh Kala, Regional Council Member, our respected panelists, CA TP Ostwal sir, CA Manish Shah, and fellow participants. International tax is an area of practice which till recent past was considered as a niche area, more reserved for chartered accountants having HNIs who have overseas business interests, or multinational companies or large corporates. But today, with the increasing integration of Indian economy with the global economy, aspirational expansion of Indian businesses outside India, as well as overseas entities investing in India, cross-border transactions are now becoming very common. Adding to that is the phenomenon of active exchange of financial information between tax authorities of various countries. Transfer pricing audits and reporting requirements also ensure that profit shifting and other tactics to lower tax cost by jurisdiction shopping are now restricted. All these factors have contributed in ensuring that all of us, even at SMP level, are now required to deal with issues on international taxation almost on a daily basis. It is now not uncommon for individual clients to have overseas investments which may be required to be reported in India in their ITR. The reverse is also true. Hence, it is now very essential for all of us to be abreast with the issues that arise in such transactions and how to deal with the same. Today's panel discussion is an attempt to bring out some common but very pertinent issues on international taxation. We have tried to cover issues relating to individual taxation, partnerships, corporates, and trans pricing also. And we have two very expert panelists with us, whom I'm sure will clear all our doubts. Participants who would like to contribute any additional questions or resolve their doubts related to the existing issues can put in their issues in the chat box. I will try and ensure that our panelists cover the same. To kick off the session, I thought I would request our panelists to take a few minutes to provide some background with reference to the current scenario of international taxation. First, I would request Ostwal sir to brief our audience on the importance of compliances in case of foreign sourced income in this era of contemporaneous exchange of information between countries. Ostwal sir.
This is in fact one of the most important subject you have touched upon, that is exchange of information. And of course, in relation to that, the importance of the compliance in the foreign sourced income in the era of the exchange of information. No doubt, whether it was an era of exchange of information or otherwise, foreign source income required always compliances. It was not the case that it has become important because of exchange of information. Now the question is, if we hide the information, it is impossible for anybody to say that I will be successful in hiding. Income tax department has such a wide power, and now they have made use of those powers for the first time in last 5 years. They have created a forum world over. There are international forums under the OECD G20 banner came together. All the revenue officers of the world have come together, and they created a platform of exchange of information. Mr. Modi, our Prime Minister, when he was attending one of the G20 ministers meeting, Prime Ministers and Ministers meeting in the Australia, he whispered a word, why exchange of information? At the request, make it automatic. And that's why it became automatic exchange of information. Today, earlier, the exchange of information is not something new. The treaties have evolved over a period of time. And in most of our tax treaties have exchange of information article. I remember the days when Switzerland signed the tax treaty with India. It took 14 years for them to sign the treaty, and that was delayed only because of exchange of information was not agreeable by them. They said, we don't believe in exchange of information and we will not agree for this. Then finally, India in last 14 years, what they successfully convinced them, at least give some information. In India, we have a concept of khana purti. Aap kuch to de dijiye, hum accept karenge. And finally, we told them, give the information which you gather in the course of your assessment. And our treaty with Switzerland has that clause. You will exchange the information only which is available with you in the exchange, in the assessment proceedings. And Income Tax Department Switzerland, I was talking to them. They are good friends. In the UN they come. They say, we don't collect any such information. So here is the question of exchange. But your officers were hell-bent on asking for some information, some compliance on this clause. So we give this clause. So this is what up to 2012 it went on. Then there was a pressure. The government of India brought in some pressure. They signed the exchange of information article with some limited information. But later on, that we have an exchange of information, separate treaty signed and revised, the treaty was signed. So this was an exchange of information at a request. The government of India said, we will give you the bank account number of TP Ostwal in Switzerland. So give the information about his bank account details with us. So the Switzerland authority says, fine. If you are giving this information and you are requesting for that information, and it is at the request, we will give you that information. Later on, 2016, come 17, 18, we have now automatic exchange of information program of all the world. And for 135 countries have signed the program. And there is Switzerland is party to it, and India is a party. India is one of the pioneers initially. And all other countries have joined. Of course, Switzerland joined in 18. We signed in 16 or 17. And that is how exchange of information became now automatic. It is not required if suppose I go to Switzerland and open my bank account by mistake somewhere in any bank. It is the duty of the bank to convey that information to the government of Switzerland, Revenue Authority, and their job is to convey that information to the government of India's Revenue Department, Foreign Tax Division, who in turn will get that information transferred to the assessing officer, and who in turn will dictate or communicate to you for confirmation. He will look at your return. Have you disclosed that account? If disclosure is there, no problem. If not disclosed, then Black Money Act applies, Income Tax Act applies, all sort of things apply. So friends, one thing which is very, very important, don't take exchange of information program very lightly. Everything goes behind the back, and in every assessment, now the Income Tax Department has issued an instruction. Any foreign transaction more than 5 lakhs of rupees, every tax officer is entitled to exchange the information via CBDT, the Foreign Tax Division, to the competent authority of the other country and get confirmation. And if they don't get the confirmation, they will make an addition. So therefore, they are asking for, and the government of India is very, very active on this. We have been maximum requests for exchanging information were sent by India only. We received few information, but we communicated. Our advantage is our manforce. We have unlimited number of people available at a very cheap cost, and therefore we are in a position to get the information and request for the information. And again, the strongholdness, in case if you do not give the information, we tell them we will blacklist you. And we have created that atmosphere by blacklisting one country. Cyprus was blacklisted in 2013 and removed in 2016. Why did we do that? Because they did not exchange information. So therefore, friends, this is the area of practice. I believe people should specialize in it. And this is an area of practice where you can earn monies in dollar, spend the monies in rupees. So your revenue will be 74 times than the expenditure. So therefore, I would request everybody, try to concentrate on these areas of practice. And that doesn't come so easily. First of all, you have to be an international tax expert. There are 3 types of international tax expert. There are tax expert, there are 3 types of tax expert. One is domestic tax expert. Second is international tax expert domestically, your tax treaties and this and that. And third is international tax expert, in the sense you know the laws of the other country as well. And then you interplay between the treaty and the domestic law, and also use some other jurisdictions law, and then work out a planning area which is more foolproof than anybody else. There lies the money, and there you get the popularity also. This is the reason why I thought that it will be important. I told the organizers I will be taking little longer time than they required, because this is the area I always believe that you must endure, you must try to achieve the excellence in this area. Thank you very much.
Thank you very much, sir. I think some excellent advice given to our participants in relation to some growth in practice also, very necessary in these trying times. CM Manish has some power outage issue in his office, and so he will be joining us as soon as possible. So we will take his introductory remarks as soon as he joins. So meanwhile, we can start off with the first issue. The first issue is, of course, for Ostwal sir. If I had planned to take one issue for Ostwal sir and one for Manish sir, but if he is unable to join, we'll start with issues that we had decided for Ostwal sir. So and once Manish sir joins, we will take up his issues also. So the first issue, sir, for you, I will also display it on my screen. Yeah, I hope the audience can see my screen. So an Indian company has a joint venture in the United States in the form of a limited liability company, in which the Indian company holds approximately 20% stake, which it had acquired at a cost of 200 lakhs. The LLC acquired equity in another US company in exchange of intangibles. Now the joint venture partners have decided to dissolve the LLC and distribute the assets to the partners. Accordingly, the Indian company is expected to receive equity in the company based in the United States, which is presently valued at 500 lakhs. Now, what would the tax implications be in India in relation to the receipt of such?
Yeah, I think question is very clear and understanding. There's some voice coming in between. Somebody is talking.
Yeah, Manish sir, you are online?
No, I just joined. Yeah.
Yeah, okay. So we have taken up the first issue. We will pick up your opening remarks after this issue. Yes, sir.
In
Please,
fact,
sir.
in fact, I was told that I'm going to take this lecture is final discussion on the residency. So I thought that the residency is a cakewalk. There is no problem that section 6 has been amended, and I already spoken on number of occasions on that subject. I will deal with that subject. Yesterday the examination paper was changed. Yesterday evening I was told, so sir, we are now prepared all the questions and we are sending you the questions. At 6 o'clock around I got the questions and I went through the questions. I said, wow, this is also my lifetime examination still continues. So I will appear for exams without preparation, no problem. So now the issue is
residential status is something too simple for you. So we thought
I don't know the answer. After I give the answer, and if the person who has prepared the answer, he finds his answer is correct, then only I can be passed. Otherwise, I will be failed. So therefore, the issue is here. There is an LLC in USA. Please note the status of LLC in USA is a company, but it is assessed for tax purposes as partnership, a transparent entity, and therefore you will be assessed as they call even the member of the LLC as a partner only, and the taxation is on the partner, not on LLC. Second thing, this is what's most important. Conceptually, you must understand very clearly. Second thing, the first LLC made an investment in another LLC, and this is in exchange of intangible. They got some shares. So that is not relevant to India because LLC is a company by itself. As far as Indian authorities are concerned, Indian authorities have taken a view, LLC is a company, is not a partnership firm. And therefore, the distribution, the taxation will be in accordance with the company's provisions and not partnership provisions, even though it is a transparent entity in USA. Now, the issue is there was a joint venture in which they have assets and they got the shares of a company worth 200, they have acquired 20% stake of 200 lakhs. Partners decided to dissolve the LLC. When you dissolve the LLC, what happens? We have no complete facts here. The facts are only talking about the investment made and what is the status on the date of balance sheet or on the dissolution date, not known. So if the dissolution takes place as per Indian companies, Indian Income Tax Act, to the extent of free reserves appearing in the balance sheet, the amount distributed to the shareholder is a dividend. Beyond the free reserve, everything is a capital gain under section 46(2) of the Income Tax Act 1961. So section 46(2) applies. Now the question is, why should you apply section 46(2) when there is a tax treaty? The tax treaty, of course, exists between India and USA, and India and USA tax treaty in relation to capital gain talks of that the capital gains will be taxable in both the countries as per the laws of both the countries. It is not taxable as per the tax treaty provision. There is no separate provision. So therefore, if the tax treaty says that the capital gains will be taxable in accordance with the domestic law of each country, then one has to look at the Income Tax Act. And section 46(2) in my opinion comes into the picture, and therefore any gain arising on account of the distribution of the shares, the distribution of an asset on dissolution to the extent which is beyond free reserves will be capital gain and liable to capital gain tax. This is what my view on the subject is. Unless my analyst holds a contrary view or he want to supplement it, I welcome it. Manish bhai.
Sir, your microphone is off.
Unmute.
Yeah, I just unmuted. Actually, because of the power, I was off for some time. Now the power has come back.
Power is very important.
Yeah. Yes, sir.
Power is very important. And in
Power
Maharashtra,
is.
power is important.
Yeah, that's true, sir. Sorry, I missed the whatever you were saying. The first question I missed. Even your opening remark also I missed.
So, sir, I'll just in order to brief you on Manish, sir. So, I think the crux is that the treaty has no role here because the treaty says that the domestic law will apply. And so, if that company had some free reserves, then part of it will be to that extent would be treated as dividend, the excess, and the part would be treated as capital gain. This is the understanding that we get, sir. Right, sir?
Yeah, that's true. That's true.
Fine. So, I think
we can take Manish Bhai's opening remarks also first.
Yeah. So now we'll come back to Manish Bhai's opening remark. Manish sir, since you were not available at that time, we started with the first issue. Now, friends, I would request Manish Bhai to give his views on frequent errors and omissions in tax returns of non-residents in India and their impacts in the returns in India as well as the returns in the resident jurisdiction. That is something which is, I think, very pertinent today.
Yeah, good afternoon, friends. Sorry for a breakup. I'm fortunate for sharing a dais, or I would say now the screen with the Ostwal sir, from whom we have learned a lot of things on international taxation. He is an expert on this. So I would also request that I have tried to prepare on this subject. But if anything is there, he can supplement it. And I would also look forward to the knowledge gaining. Friends, as far as the topic is concerned, frequent error and omission in the return file is concerned, we find that nowadays the income tax laws is being amended and returns are made more comprehensive, and we have to provide a lot of informations. And by making such mistakes, it has a grave consequences. See, as we all know that earlier the returns we were filing, manual returns, we write resident, non-resident, not ordinary resident. Nobody was able to check it, and nobody was able to see what are the consequences of it. Now, with the change, the return form being modified every year and more information is given, we have to be very careful because there are consequences of it also, and there are a lot of compliances also based on this. Now, as we know that in a return, we have to show resident, non-resident, and not ordinary resident. And again, with that, each selection of the status, you have to give a lot of information. Like in case of residence, we have to inform how many days he has remain in India, and so forth. Now, once we select a resident, then we have to inform about the fixed asset details also. I'm sorry, foreign asset details. And that is an elaborate list of that foreign asset schedule is so elaborate that we have to fill up that thing. Now, after that, we have to fill up even the details of foreign income, that is FSI schedule. Then we have a tax credit also schedule, that is TR is also there. Then we have in case of a non-resident, we have to give a jurisdiction of his residence. Then we have to give his TIN number. Now, even in case of a person, citizen of India and person of Indian origin, he has to give a number of days stay in a previous year and stay in the preceding 4 years. So all these things in a nutshell makes you to comply and commit that you are a resident, non-resident, or not ordinary. Now, if you make these choices and tick it like without going into detail, then it will lead to a lot of consequences. Your return, first and foremost thing is that your return becomes invalid. Then even they will be for giving a wrong information, you will be liable for prosecutions and penalties. Even when you file a return and when you make a non-resident, just to avoid the information of giving fixed asset details and foreign asset details and everything, then you may be subjected to Letter Date and Black Money Act also, because you have not disclosed these foreign assets in the return of income file. So these are very, very pertinent now. Whenever you file the return, you should not go mechanically and file the return. There are a lot of compliances also. Now, earlier people were claiming the credit into income for a foreign tax credit by just making some working, and they were claiming it. Now there is a specific requirement of filing a form 67. Now this form you have to file. The requirement is that before due date of filing of return of income. Even it is not that with the return of income, it is before filing of due date of filing of return of income. Of course, many decisions are there that we says that due date of filing return income may be extended to 139.4, also covers the 139.4. But these are the information which you have to give. Now with this form 67, you have to give proof of the taxes paid and working of your tax credit. So these are information is now available with the department, and it will be the machine will cross check it with the data is available. Now this information of your foreign travel and all are also being coming into income tax record. So that also would be linked with your return of income. And so if you make any wrong statement, you will be liable for a severe consequences. And in such a situation, you cannot plead that I was innocent, I made a mistake by just overlook the provisions and I made a mistake. So these are very important thing, and keep it in mind. See, there are people who says that I will just make a resident, select the status resident, just to avoid the information about the foreign assets. Now these will be in a return of income. You may not get it. Sometimes you may get away with this. But the problem is that US is also sharing this information. Now US or other countries are sharing this information. Then you immediately caught that these information are you are not disclosed in the return of income file, and there are serious consequences under Black Money Act for that purpose. So you have to be very careful, and you cannot now simply rely on the cannot take it very leisurely. This is my opening remark.
Thank you, Manish bhai. So I think basically what the crux is that even as a non-resident or either as a resident, because of the exchange of information, as Ostwal sir also mentioned, now there is automatic exchange of information. The returns at both sides become very, very important for people who have cross-border transactions. It is very risky to basically take the shortcut where people say that ye nahi batana hai ya ye nahi batana hai. Now that era is gone basically. So
that's true.
And the consequences are quite heavy. It's like till the day you get caught, you don't realize how heavy they are. So thank you, Manish bhai. Now moving on to the second issue, which is for Manish bhai. Manish bhai, so we have a Dr. Shah, who is a practicing general physician, and he has a successful practice in India and his own clinic. His gross fees during the year from his clinic in India was 45 lakhs in 1920.
Slide change.
Sorry. Yeah. So his practice, his gross fees during the year were 45 lakhs in India. He also practices in part of the year in London for say for 3 months, where he earned a gross revenue of 25,000 pounds. He is also filing a return of income in UK in respect of the income earned in UK. In his income tax return in UK, he had claimed an expense of 10,000 pounds. He also had a house in United Kingdom, which was acquired when he was actually a resident in United Kingdom. And from that, he is earning the rent of 5,000 pounds. In his UK return, he has offered that rent for tax and has claimed a deduction of repairs for that house for 500 pounds. Thus, his return of income in UK shows income from house property of 4,500 pounds and income from profession of 15,000 pounds. Now, while preparing the return of income in India, the following questions have come up. His income from Indian practice is rupees 45 lakhs. However, if because he is an ordinary resident in India now, we would be required to also put in his income from outside India. So if we consider the revenue from UK, his revenue from profession will be above 50 lakhs. First question is whether tax audit will become applicable. And if yes, whether the tax auditor in India is required to examine the allowability of expenses claimed in UK as per the Indian tax laws also. The second question is that even if he is not subject to tax audit, whether the net taxable income as per UK is to be consolidated under each head, or gross income is to be consolidated and each deduction is to be claimed separately considering Indian tax law. And the last question is, in case of his income from house property, instead of 500 pounds actually incurred, can he claim 30% deduction allowable under section 24? So Manish bhai, this is the question for you. Sir, over to you.
It's a good question, and is trying to cover so many aspects of the international taxation. See, first of all, we'll have to look into the section 6, section 9, section 90, and double taxation treaty DTAA with the UK. Now, as per Article 15 of DTAA with the UK, it says that the independent personal services is subjected to tax in UK if the person stays is more than 90 days or 90 days and onwards. Now, in the question, it is said it is 3 months. So we presume that it is 90 days. Suppose the person has gone into January, February, March also, it may be less than 90 days. Then also, what will happen is that there is a second condition in that Article 15, which says that if a person has a fixed base regularly available in that country, then his income is subjected to UK tax also. Now, in this case, as question says that he has already got a house in that. So once the house is there, we can presumably say that it is a fixed base. And he's regularly visiting this place, and he was earlier having a UK citizenship or UK residency also. So once this fixed base is available, I think even if he stays is 90 days, less than 90 days also, he will be subjected to UK tax and he will be liable to UK tax. Now, as far as coming to double taxation, since he is a resident of India, these income would be subjected to Indian tax also. Of course, he will get a credit as per Article 24 of the DTAA, subject to Section 90 and Rule 128. And for that, he will have to even file Form 67 as we discussed, and he will have to give an evidence of the taxes paid and all that. Now, second part of the question is whether his receipts from UK would be included for the purpose of Section 44AB. Now, as far as Section 44AB is concerned, the definition of turnover is not defined in the Income Tax Act. The definition, we have to rely on our Institute guidance note on the definition on a tax audit, and which says that the turnover is to be considered from a commercial sense. Now, in this case, once the turnover is of a UK and Indian turnover, both has to be clubbed, and then he will be, if his limit exceeds the required specified limit under Section 44AB, he will be liable to tax audit, and he will have to file the return of income. We will have to file a tax audit report. Now, second part is that how to compute the income. Now, as per the once the income is to be clubbed, one principle is that it will be clubbed in the same heads of income, and it will be subjected to tax. Now, in UK, suppose he has got certain allowances, which is not permissible in India, then you have to recompute the income as per UK Indian laws, and you have to club it for the purpose of taxation. You cannot rely, say in UK, suppose personal expenses are allowed, but in India, as we know that personal expenses are not allowed. So then such personal expenses has to be added, and then you have to work out the Indian income as per Indian income tax. And so it is likely that income as per UK would be different than the income as per Indian income tax. Now, coming to the third part is that the rent income. It is rightly said that Section 24 allows you 30% deduction under Indian income tax. But in UK, it is on the basis of, we presume that it is on the basis of actual expenditure incurred. But since the income we are computing as per the income tax laws, this 30% rebate also should be available. And whatever expenditure incurred in UK, we have to ignore, and we have to consider the 30% expenditure of the total rent income and claim it as a deduction. For working out exchange ratio, we all know that there is a rule 115, and we have to follow 115, and accordingly we'll have to work it out.
Thank you, Manish. One side question that while form say he has to claim a tax credit for filing the form 67, would the say if the return of income in UK is already filed, would the return where the tax payable or the tax paid is already indicated, would it be a sufficient proof for the claiming the credit?
The return income is to be considered, but the proof of the payment is also required. And the proof of payment we can be submitted. There would be some deduction also, maybe withholding tax also there. So in certain items there would be withholding tax also. That proof you may be required at submit. But generally what people do is file the return of income, and they presume that it is a correct reason and that return is attached. But even given case, we might have to produce a proof also.
So I think basically the return would still be required, because it is also important to determine whether any refund is claimed, because you cannot claim credit for a refundable tax.
That is also
Oswal sir, your views on this issue to supplement or add?
No, I agree. By and large, I agree with him. Only in the case of US, there is no proof available. Generally, if the checks payment is made to the tax authorities, that itself is evidence. So, if what sort of a proof you can attach with the return of income? Only a copy of check issued to the IRS, nothing else.
Oh.
In fact, interestingly, I have an experience few years before. One of the resident taxpayer who sold his property in Japan, and he was subjected to capital gain tax in Japan, and that was around 30 million, equivalent to 3 crore rupees. And income tax officer here, well, when he filed the return here, he reported that income and said this is double taxation. Japanese rate of tax is higher than Indian tax rate, so therefore he claimed he claimed that no tax is payable. The tax authorities in India, assessing officer, assessed the income and levied the tax as per tax rate, and said that he denied the credit, and the accounts were immediately attached. When we came to know about it, we met the commissioner, and commissioner called him. Why did you attach the account? Sir, the tax, there is a demand. How the demand had arisen? He says, sir, the person has filed the return and offer a capital gain tax, and he says capital gain tax is not payable because the tax in Japan is higher than here. But where is the evidence? He has not submitted any evidence, and therefore I have attached the account. I said, what evidence you require? Form number 16. I need form number 16 from the tax. I said, in Japan they don't issue form number 16.
16.
How do you expect this to happen? So these are all practical problems which arise, and then there is a solution, of course. The commissioner realized the mistake committed by the officer and immediately asked him to sort it out immediately. Anyway, good explanation. I agree with Manish bhai fully.
Thank you, sir. Thank you very much.
Thank you, sir.
Only one thing which I would like to add here, that the payment made in cash more than 10,000 are disallowed in India, right? He is a professional doctor. Let's assume he has made payment of more than 10,000 equivalent rupees in UK. That will not be subject to disallowance in India, because it's a payment of rupees 10,000 or more paid in cash is subject to disallowance. In UK, rupees is not paid. It is only UK pound. Even if it is equivalent of rupees, it will not be covered.
Okay.
So, sir, that means that cash payment rules that are existing in India, even say related to advances or loans or anything, would not be applicable in case when paid in foreign currency.
Wherever the rules in India talks of rupees payment, they cannot apply. And we have a Bombay Tribunal decision in this connection. Some payment when the traveling expenses were subject to disallowance on those days, and we had argued the matter. It was a rupee. The limits was on rupees. Therefore, it was foreign. Is in foreign currency. The branch outside India is not governed by the rupee payment.
Okay, sir. I think that's very important, because in certain jurisdictions there are possibly the local customs would dictate that a lot of payments are made in cash. Maybe possibly in a lot. I've seen in African countries, even Indonesia, where a lot of payments are sometimes business necessities required to be made in cash. So that branch would.
It is not law, but it is customary. People accept the payment.
Yeah,
and
it is customary.
When there is no restriction, how can you say that it will be disallowed?
Correct.
Thank you, sir.
The next question. Shall I take the next question? You can take the slide.
Just go through it.
Yeah, please.
The next question is for Ostwal, sir. So we have a small private company in India with a turnover of about 10 crores, and it is engaged in providing outsourcing services to its parent in Australia. For this purpose, it has engaged engineers and other administrative staff, and the services include preparing drawings for mechanical equipments, etc., procuring material, etc., and accounting work also. The billing of services done at the actual cost, including depreciation, plus a markup of 15%. The Indian company has no exchange fluctuation risk or any other risk virtually. Actually, the company needs to prepare transfer pricing documentation to support the 15% rate. However, it has not been able to identify any comparable. how can the rate of 15% be justified for transfer pricing purposes? This is one of the questions that we received by email from one of the participants. So, sir,
well,
please.
We are talking about this transfer pricing compliance in India, and therefore I'll restrict my explanation to India. In fact, somebody want to look at the guidance on this subject, not qua India, because India is a vast country with the documentation is possible, database is available, and everything is possible. In fact, we are one of the aggressive countries in the world for transfer pricing litigations. We have 70% of the world's litigation is in India on transfer pricing. Let me tell you. Total aggregate value of litigation is not even one case of USA, which is, penny wise pound foolish is type of an attitude which we have got here. But nevertheless, that's the case. Those who are interested in knowing how do you go about scenario like this in other countries, smaller countries where the database is not available, documentation is not available, genuine comparables are not available, one should look at the UN transfer pricing manual. We have given sufficient guidance on the situations like this, how to overcome the documentation. In fact, we have gone to the extent of saying that look at comparable other jurisdictions, comparable other countries, and make a geographical adjustments on account of the country adjustment, risk and all these things. And then come out with a comparable, because it is such a subjective subject, transfer pricing, anything is possible. It is you are given an answer, you have to find out how to tally that answer, and everything is available for you to tally that. Now the issue is you have a 15% markup you have charged, and you are not in a position to, based on the data search which you have created, you have undertaken, you are not in a position to find out whether comparables are not available on that particular type of business. It is not necessary in the transfer pricing. It is not an exact science. You have to do articulate and find out what are the other comparables. Expand your comparables list. Give the new command, new changes, and try to give make a comparable search of the services industry generally. If you can't get specifically with reference to your services, go by other services. And then find out what is the mean profit made by those companies. And if you can get to come around nearby the figure, you'll be able to go through that. And if you cannot, by any reason you cannot, and frankly, while selecting such companies, you should select the companies involved in export of services turnover, because you are exporting the services to your parent. So therefore, that is one of the criteria what possibly you will be able to meet. And then a factual comparison should be with reference to the different type of services. If you can make different type of services and compare that, nothing like that. And if you cannot still, then safe harbor rule. India has come out with a safe harbor rule which says 18%, which is higher than 15%. I would not go by safe harbor. Given a choice, world is shouting at Indian safe harbor, which is very aggressively done. And I agree with them, because this is not the way you can expect people to have 18%, 20%, 23%, 30% safe harbor. And for this, I'll give you another guidance. Look at UN transfer pricing manual. Look at EU transfer pricing on services. Look at OECD transfer pricing on services, and look at US recommendation on markup on transfer pricing. US says 5%, US says 0, no markup on such services. The EU, OECD and UN says 5% markup. 5% markup is justified. Now we say that our costs are low, therefore 5% markup may not be justified. We must have a little more markup. All right, I have 15% markup. 15%. What else is required? In case if the department believe that 15% markup is not satisfied, then they may ask a transfer the profit split method. That will be the worst case scenario, provided they have to establish why this method adopted by you is not an arm's length method. So therefore, it is ball is in your court to substantiate, not difficult job.
Thank you, sir. Manish, you would like to add something?
No.
Or supplement?
No, no.
Okay. Okay.
See, 15%, in a given question also, we feel, I think it is more than sufficient in that scenario. Because in so many other cases also, there is a 5% available, as so many examples you will find it. So in a small company like this, a 15% is a quite reasonable figure, I think.
Right. Right. Thank you. Thank you, sir. Manish bhai, the next question is for you.
Okay.
Right. So, Mr. Patel in India is a partner in a partnership firm in USA. He is a resident Indian, ordinary resident. During FY 1920, his share in profit in the partnership firm was rupees 50 lakhs. In USA, partnership firms, as Ostwal said, mentioned earlier, are pass-through entities. Hence, Mr. Patel was required to file a return in USA and he paid tax on his share of profit in USA. Since Mr. Patel is an ordinary resident in India, he is required to incorporate the partnership profit income in his Indian ITR also. How and under what head would he reflect the income from US partnership firm in his ITR in India? The second part is under Indian tax laws, profit from a partnership firm is considered exempt. Does this same exemption apply to income from the US firm also? Sir.
Okay. See, residential status of a partnership under DTAA is very complex. And I think it requires a topic itself. But we don't go into that detail. We presume that it is being done. And secondly, Article 7 of the DTAA with the USA is clearly says that business profit in respect of enterprise carrying on the business is taxable in the country in which the said business is carried on. So here it is said that it is being taxed in USA. Of course, as per US law, it is a pass-through entity. So no tax is paid by the partnership firm, but whatever the income is received by the partner is subjected to tax. So that is as far as US law is compliance is there, it is there. Now we know that there is a section 28 under the Income Tax Act that this says that this is income from business. The share from partnership firm is subjected to business income. Now this refers to only this clearly says that it is from the income from business. So this will be also considered as income from business. Now the question says that there is a section 10(2)(a) also Income Tax Act, which says that the income is share of profit from a partnership firm is exempt. But we have to look into the definition of section 10(2)(a), which says that in case of a person being a partner of a firm which is assessed as such, his share of total income of the firm is exempt. Now, since US firm is not assessed as such in India, so naturally his shares would not be subjected to exemption, because the US firm has not paid any tax in India. So this firm is not assessed subjected to, once it is not assessed to Indian tax, it will not become to you will not be entitled for an exemption. However, the taxes paid by the Mr. Patel in USA would be given credit under Article 25 of the US DTAA, and that the modus operandi, as we have already discussed, that this will be there. Only one thing we'll have to I earlier also forgot that we get a credit up to lower of Indian income tax or US tax. That is we have to see that it cannot exceed that thing. So that would be available. I think this is the sufficient on this part. Anything Mr. Ostwal wants to? Yeah.
No. Yes, very interesting. In fact, the last bullet, I got a good idea from you people. And this can only be taught in Gujarat. Bombay people cannot think about it. You see, partnership income છે તો મારી income તો tax થવું જ નહીં જોઈએ. So if it is a US partnership firm also, my income should not be taxed. But that is not what Manish bhai has explained is correct. But partnership firm as such is not an issue in the India-US tax treaty. The problem is only India-UK tax treaty. And that UK-India tax treaty has been amended. Now partnership firm also under the India-UK tax treaty is not an issue. Earlier, Linklatter's decision was prior to the old treaty. And after amendment, that issue is resolved because the language of the treaty on a partnership. And US from beginning had the partnership. There are only few countries where India was specific that the tax treaty is available to the individual, to the firm, and to the company. And certain article, we are specifically saying that firm is also covered by that, and firm is defined under the India-US tax treaty. So there is no much issue on that.
Manish, one practical issue, I think somebody yesterday only was once who had gone through the issues was telling me that in India, in the utility, if we put in as profit from partnership firms, then it automatically goes under exemption. So then we should reflect it as normal business income. How would you prepare?
See, this is normal business income, and as there are foreign partners. So what is Indian partner is getting, it is a business income, and you have to treat it as his own business. And as if it's own business, and if you put it that income, then it will accept the return of income. And to my view, even expenditure against this income also would be available. Suppose if he has a water car in India and he has no other business, then he can claim an appreciation on that water car against his share from partnership firm.
If this goes above 1 crore rupees, then tax audit.
You're talking of tax audit. It is share of profit. Where is the question of tax audit?
No, sir, right. But the problem is in the utility. If you put it in the under partnership firm profit, then it is taking it as if it's exempted. So we put it under net profit from business, other profits, and there again the utilities then saying that tax audit becomes applicable. The CPC probably would issue a notice. Something like that would happen practically.
No, that's why I said no. I don't file the returns, and therefore those who file the return in my office would also know this subject. And if they have difficulties, they come to us, and we resolve the problem. But very interesting scenario I found. Okay.
Okay. So, Ostwal sir, the next issue is for you, again related to transfer pricing. Again, some guidance, basically, I think it's more in the form of a guidance that an Indian company has several transactions with its parent, including purchases, sales, services, royalty, maybe interest also. Whether do we need to establish arm's length price for each of these transactions, or whether transactions can be justified directly with the reference to net profits of the company after comparing profits with of other companies?
Well, very, very interesting question. You see, in fact, let us assume purchase and sales transactions are with the same party. So therefore, to justify the transactions, each transaction separately could be a challenge by itself. And at times, you may possibly get the solution only by one method, that is TNNM method, transactional net margin method. But to come to the transactional net margin method, you will have to look into other methods and reject those methods. Why those other methods are not applicable and why this method is applicable, that justification you will have to make out very correctly and clearly. There are some transactions where possibly you can get a direct method also, cup method or cost plus method, something like that. Like say, for example, purchases, sales, etc. But sometimes like services and royalties, you can distinguish. You can then therefore you say mix of all, you can't get the comparables exactly of all the transactions of this nature people have and exact comparables. In such situation, I would take, if I can reject, I can demonstrate why other methods are not applicable properly, then I'll follow TNNM. In fact, TNNM is the correct method.
Right, sir.
Which is least recommended by people, but most followed by the people. It is least recommended. Least recommended by authority.
Preference for TNNM, if I'm not wrong.
Department has a preference on TNNM? No, taxpayer has a preference on TNNM.
Okay.
In fact, Germany rejected TNNM for a number of years, but now they have acceptance on the TNNM. Otherwise, number of countries I have experienced, they don't accept TNNM as a method. It is, in fact, they say it is a method of last resort, but people here follow method of first resort. And another experience is people follow TNNM and department will reverse it. They will find out something else. And if we follow something else, department will say TNNM. That's the problem. That is why I said no, 70% of the world's litigation.
Yes.
Without much revenue involved. We have created all these litigations for capacity development of all our officers. Nothing else. At our cost, they are learning.
Right, sir. Thank you. Thank you very much. The next issue is for Manish Bhai. Manish Bhai, this is a very practical situation. Many Indians who return from abroad continue with their NRE accounts and other assets, which actually are only, say, non-residents are entitled to afford. Such persons may have returned with intentions to stay in India permanently or have no clear view. They continue their NRO and NRE accounts consciously or unconsciously, and maybe in contravention or not in contravention of FEMA laws. So, from a what are the implications of continuing to hold such assets, and whether such, suppose the interest on NRE deposits is exempted, some of them continue to claim the exemptions. In reverse, in several cases, Indian residents also leave India and become non-residents, but then they continue to show their savings accounts in India and shares everything as they hold as residents. What are the implications in such cases?
See, if we look into the FEMA Act, and you rightly said that these are very common in each and every client. We find that they are not converting into with the changing in the status. But as per the FEMA Act, you have to convert this into these accounts with the change in your residential status. So once you become non-resident, you have to change it, or once you become a resident, you have to immediately change it. The definition, there is no provision, explicit provision about the time limit. What is being said by is that reasonable time. Even the Reserve Bank Master Circular also doesn't give any guidance on that what is the time limit. Now, the time limit is not there, so that doesn't mean that we can go on doing this and continuing like this. See, one of the important implication is about the violation of TDS. As we all know that in case of a non-resident, the rate of tax is very high. It is under section 195, it is applicable. So as a result of non-information by you, the deductor is violating so many things. And this type of cases happens when there is a survey on the deductor. And the deductor, they find that deductor is deducting tax on a non-resident at a normal rate. And they are being penalized. In Baroda, we had a very big case on this issue, and when the property was sold and he was a non-resident, and they deducted tax on a resident on the basis of resident, and income tax had created a very big demand on that organization. So this type of thing happens because of that. But there is no clarity as far as the FEMA is concerned that this there. Now, as we know that in FEMA there is a section 13 which levies the penalty. And there is a very severe penalty amount equivalent to the amount involved. And if amount is not quantifiable, then it is 2 lakh rupees. And in addition to that, for each continuing default, 5,000 rupees. Now, but we hardly find such a penalty in a practical experience. Our practical experience, we find that there is no such penalty is levied. Now, people are doing intentionally also just to avoid the tax liability, particularly in case of a non-resident becoming a resident. See, why is doing that? Section 10(4) subclause 2 gives him a benefit. See, if you read the section 10, there is a different type of definition is there. Now, section 10(4)(1), Roman 1, if you see clause 1, you find that there is a word used is non-resident. But that the word used is non-resident, but non-resident as per Income Tax Act, that is not being mentioned. But the non-resident definition is there under in income tax in section 2. So where we have to implement that it is only applicable to non-resident as per Income Tax Act. But when we go to section 10(4) subclause 2, it provides that in case of an individual interest income on money standing in the credit of NRE account in any bank in India in accordance with FEMA and rules made therein is exempt. Now, which individuals are benefited? That is also in a proviso it is provided. And that proviso applies to this subclause 2 only. That such individual should be a person resident outside India as per section 2W of FEMA Act, or person who has been permitted by the Reserve Bank of India to maintain such account. Now the ball goes to the Reserve Bank also. My Master Circular, Reserve Bank has not specified any time limit that it is to be converted. So people are continuing with this and getting a tax benefit. And income tax authority in some cases have raised this question that you are claiming deduction exemption without not being eligible. Now, if you go to the FEMA definition of a person non-resident outside India, mainly is a 182 days stay in a particular year plus his intention. So intention is very important, and people are misusing that. He comes in India, he starts a job also, but he says that it's a temporary. And we have observed that in many client cases, the persons who have migrated from USA or UK or any other place, he is not able to settle and he leaves the job. But that doesn't mean that his intention to stay in India is not a permanent, uncertain. If intention to stay in India is uncertain, then it becomes a resident. And then he will be liable to pay tax on this. So litigation is happening, but I think there is no clear-cut guidance on that. And I think once the income tax authority comes to know in a very large cases, then they may start chasing all these people. There are decisions I have found out that for listeners I can share: 94 ITD 79, 88 taxman.com 915, 3taxman.com 767. But all this decision, they were said that your intention to you were person resident outside India, that's why this exemption was given. But there is one against decision also, that 111 taxman.com page 508. So we have to be very careful about this. Sir, Ostwal sir might be having some knowledge about this penalty, whether some information penalties are living under FEMA.
No, I have not come across any such cases on account of this particular situation. And in fact, Harshit Bhuta has written 2 volumes on compounding of offences. Also, if you look at, there is no such case reported on compounding. But the question, what you are saying is absolutely correct. The intention, which is not defined anywhere, intention to stay indefinitely abroad. If you have come back from foreign country, you are exploring some jobs here and there, you are not getting any job, and subsequent event you can prove that you have gone back, then your intention can establish. So therefore, these are all the tricky issues. And the FEMA number of days stay in the previous year is relevant and not the current year stay. And whereas the Income Tax Act is current year stay is relevant. And therefore, your intention is very, very important. And we have come across number of cases where, for example, a person is staying in India for a long, whereas he is employed abroad, and he takes the remuneration and he pays the tax also in India. And he is not employed anywhere. His companies are there abroad, and he is the director of the company and taking some remuneration, not very high. And then he pays he says, my intention is to remain there. I have come for COVID situation. I have come here for other family reasons. I have come here for various reasons. I have also businesses here, but I am not employed here. So these are all purely question of fact. What you have explained is absolutely correct.
So practically speaking, sir, a person coming back to India maybe with a permanent intention to stay, and if he continues to hold NRE deposits, probably most in practically a lot of.
An example, you have given the when you have given a declaration, I came on a transfer of my residence, and you claim exemptions under the customs authorities, custom duties.
Correct.
Intentions are very clear. You came back on this, not an exploratory tour. You are coming back here. Second thing, this question is relevant because these days, dodging the cross-border information exchange, people are not disclosing this information correctly. For example, if I am in India and I have got my account, in which bank account is there, and my address is found to be Indian, and I have not declared I am non-resident, I am employed abroad, and I continue to show to the bankers my Indian address only and my residential status is in India. Bank in India will not exchange that information with any other country. But if I disclose my residential status that I am residing in USA, then I am having a passport of USA, then the bank is required to take a declaration from us in form W88, and then they have to communicate. Bank also has to get the GIN number from USA, and the bank has to communicate with the IRS indirectly via our revenue under the FATCA, under the foreign tax division, and therefore bank is at default. So at times bank also close eyes for this reason that they are at default, and at times it suits the person concerned not to disclose his real residential status so that exchange of information is skipped. Normally my experience is the person who is non-resident genuinely and he has got his accounts here, his parents are running his accounts, they are filing the return in the residential status as a resident, so that information is kept and they don't report that income to the US authorities.
Right.
And that is happening regularly. Abhi bhi chal raha hai.
That's all right. So, but
Okay.
one thing is that, Rahul, one thing is that suppose you have a house in USA, you have a family there, you are earning some social security also. So all this benefit, all this fact can change your support your stand. That I'm got here.
Exactly. You rightly said it is a purely question of fact. One has to look into facts and then decide the issue. It's not that easy to clear cut give an answer.
True. Okay. Moving on. This again is for Ostwal sir. Again related to transfer pricing.
No, not transfer pricing. It is a foreign tax credit.
So issue number 7.
Oh. Okay. I thought I jumped on 9 number.
9 will come. 9 is I think a longer, much longer. No, 9 is still not that. We have some longer issues also.
No problem.
So the issue 7 is related to transfer pricing. So rule 10D subrule 4 requires us to use contemporaneous data. As regards profit level of comparable companies, such data would not be available for at least for a few months after the end of the relevant previous year. So whether it is appropriate to use data of preceding year. So this is basically a practical.
No, but what it says, the information and documents specified under subrule 122A should be as far as possible be contemporaneous and should exist latest by the specified date under 92F4.
Right.
So what is contemporaneous? Contemporaneous says at the relevant point in time when the transaction took place. They don't say that you must collect the information immediately. If that was the case, then it is impossible to do a business. What competitor of mine is doing business, what is the pricing he is charging, I'll come to know only much later. So I have to establish at the time of filing return contemporaneous data. So therefore, now the question is, at the time of filing return, if the data is not available, because our database is not updated, immediately current year's database is not available, then you can go to 2 years previous year's data and then compare it to yourself. But your job is to revise the moment the data is received. If you don't revise this, and it is not favorable to you, therefore you are not revised, the officer will revise it. Because at the time of assessment 2 years later, 3 years later, you will have complete information. So it is your interest to ensure that you revise the data. And when you give a transfer pricing study report, keep the data of the time when you have done the report and keep some evidence that at that time this was the data available, this is the version of whatever cap line or whatever you use was used, because you don't have the data, and therefore that data, otherwise you can save yourself from penalty if you keep all the data records available.
That's true. Something all the AO always, in all cases, they always try to ask you to revise the working. Whether that is
that justified, correct? I would take a view that it is correct.
Okay.
Right, sir. Moving on to issue number 8, Manish bhai, for you. So Mr. Patel intends to apply for a US visa under EB-5 program. He has following questions about taxability of his income generated out of investment made in USA. He has 2 options. The first is whether he can make an investment in an LLC and he would be earning interest income on the same. What would be his taxability? And suppose he runs a business as a proprietary concern, and he how the profits from the business would be taxed. So the first issue is regarding taxability under both options, and would it make a difference if no income is repatriated to India? And suppose if no on such income no tax is paid in US on account of the income being below taxable limit or any other exemption, how would the income be taxed in India? So these are the 2 or 3 basic questions.
Yeah. This is most common, Ostwal sir, in Gujarat, because all Patels, all Gujaratis wants to migrate. There is a joke going on that a person from Gujarat would not try to go to Bombay also, but if he wants to, if he is given an opportunity, he will go to USA.
એટલે તો અત્યારે તમારે Air India flies from Ahmedabad directly, and there are number of international flights flying from Baroda and Ahmedabad.
Yeah, and this is very common. EB5 program is now very hot cake in Gujarat particularly, because a lot of money people also have, and they want to invest, and they want to go legally to the migrate to the USA. Now, just to give a brief answer to for the benefit of the listeners, that EB5 program entitles you to have a visa, immigration visa for a family, for a and the minor children. So under that, you have to make a specified investment in USA of a specified amount, and there are 2 options available. That one is the regional recognized regional centers are there. You make an investment there, or you yourself buy a business and do the business and generate an employment. Generation of employment is also specified area wise. Investment is also area wise specified. Then you get an in. Now this type of there is a now taxation issue involved in it, because there is a time gap between the investments made and your right to get a visa also, because there are a lot of rushes also there. There is a waiting period also, and at the same time, the US authority wants to investigate your background, and then only allow those who are eligible to go in the USA, and they want to see that terrorists and all other people are not coming to this country. So they are doing a lot of investigation part. Now the question, so the taxation part would arise into 2 parts. One is that the pending your visa application, and secondly, once you get a visa, then what is the tax statement, taxation part would be there. Second part we are not concerned because it is a very complex also, but at the same time the question is also limited to first part. First part it says that he has made investment into LLC. Now, once the investment is made in LLC, and we have already discussed in question number 4 also, that LLC investment is there, then it's a pass-through entity, and he will be liable to pay tax on the income which is received by him in USA, and he being a resident, it will be taxed in India also, subject to tax credit to be available. So that is the one part. Now, second part is the
in LLC in US is treated as a company, but in LLC in US would be taxed as a partnership firm, but in India it would be company. So would dividend distribution be an essentiality for taxation? That I think would be
correct. Share of profit possibly will not be taxed in India unless it is distributed to him, unless it is credited to his account.
So then the issue is also that the tax paid in USA, maybe the tax credit may not be available because there may be a difference between
offer it to tax. If you receive this as a dividend, then only you will get possibly as a tax credit. There is no underlying tax credit India has with USA. We have underlying tax credit only with Mauritius and Singapore. So therefore, entity paying tax is not entitled to be credited by the owner.
please continue.
Yeah. So now coming to LLC, whatever the tax is paid, as Ostwal sir said, that credit will not be available to India. Now, if the income is distributed to the partner, then he will be subjected to tax in USA also, and if he is not able to substantiate
distribution, USA will not levy tax because they have levied the tax at the time of share of profit is determined. They create the tax.
What I'm saying that once the share of profit is taxed, that portion would be subjected to US tax. And seeing that what is the situation that he is being a non-resident, he will have to obtain a tax identification number in USA. He will have to file a return of income also, and that is always advisable also for getting his EB5 credentials also, that he has paid tax in USA on this income. So one part is that, and in USA there is a social security number, is a tax number. But he being a resident of India, he will not have even social security number. So we'll have to take a TIN number and have to file the return as a non-resident, and then pay tax accordingly. Now coming to second part, which says that interest is paid. Now the issue is a little complex. That interest, as we know, that section 28(4) under the Income Tax Act says that interest income, or sorry, section 28(5), sorry, says that interest income to a partner is taxable as a business income. So we have to see whether this will be taxed as a business income. Now, if it is taxed as a business income, then there is a problem under the DTAA. See, the problem says that 28, if you read the section 28(5), it says that interest income from a partnership firm is taxable as income from business. And what is the definition says? Any interest, remuneration, etc., by whatever name called, due to or received by partner of a firm from such firm. So in a given case, US firm is not a such firm. So it is to be, as we discussed, that such firm is not taxable in India. Since the firm is not taxable in India, whatever the such firm applies to firms which are taxable in India and got a deduction. Now, if we see further, in the section 28(5) also proviso says that okay, whatever deduction is allowed in the hands of the firm, that only would be taxed as an income. If the deduction is disallowed, to that extent, the adjustment has to be made. So these are applicable. So in that scenario, what is the situation is that okay, this will be considered as a business income. Now, if this is a business income, then as per US treaty, DTAA Article 7, this will be taxable only in USA. It cannot be taxed in India. Now, the department would say that okay, this 28(5) is not applicable to you because the firm is not taxable.
1 minute, Manish bhai, you have no permanent establishment in USA. How can it be taxed in USA? What you explained, it is taxable in USA and not in India. It's the reverse on the contrary. You don't have permanent establishment in USA, and therefore, if it is the business income, USA cannot tax it.
No, but the share of profit which is going to a partner would not be subjected to US tax.
And the reasoning you gave, because you have no presence, you have permanent establishment not there, therefore you are not. You are saying that it is taxable in USA, but I have no presence in USA. I have no permanent establishment in USA.
Okay. So what do you mean that what do you feel that it is taxable in India only as an interest income?
No, I'm just from your explanation. I have not applied my mind, but
yeah. So my feeling is that my view is that this will be taxed as the income tax department would try to say that it is taxable as a interest income. You are not eligible for 28(4)(5) because it is not subjected to tax. My humble submission is this interest income which I have invested the money is for the purpose of getting visa. So this is not and buying a business and generating the employment. It is not simply an investment activity. I have not invested the money into USA and earning a interest income out of that. So to my mind, it's a nature of business income. And if it is business income, then Indian and the business is also carried on in USA. This will be subjected to US tax and not Indian tax. This is my submission.
If I am the US authority, I will say that you are not carrying on any business. Your company is carrying on a business. So you have put the money into the company, and therefore it is lending the money, and therefore it is an interest income. It is not income. Of course, there is a classification. Heads of income in USA has to be seen, and therefore they say it is not a business income. This is income from other sources.
So just to
very interesting question.
This is becoming interesting because in US it is taxed as a partnership firm, and in India it is being treated as a corporate. So the first takeaway,
USA will be taxed. That is a classification issue. There is a conflict of classification between India and USA. The classification qua entity and classification qua income, both controversy is here. The classification qua entity is India consider it to be a company and US consider it a partnership firm. And classification qua income, and if the Indian authorities, as rightly Manish bhai said, it's a business income under section 28(5), then it is a business income here. And how USA takes a view, it all depends upon that. So if there is a difference, possibly this will be this will trigger another controversy.
Okay. And what happens? Suppose the investment is made through C corporation, then, sir?
C corporation is different. A C corporation is a transparent, it's not a transparent entity. It is an opaque entity. And therefore, it is that then issue is clear that what you are earning is a purely interest. And the USA, it is arising in USA, and therefore USA says will tax it. Resident or non-resident, all the incomes are taxable. As income, it is not a business income, and they will tax it. And then you will claim credit for the taxes paid in USA here.
So suppose that interest income is taxed as an interest income in USA, then can I claim it as a business income in India?
I doubt.
Claim a deduction?
I doubt because it's
a income from other sources.
See, it is paid by C corporation, which is not a partnership, and therefore I doubt whether you will be able to claim as a business income.
Okay.
Other sources.
It would come under iOS. That's what my humble submission would be. So, Manish, the next part.
This question analysis is very nice. What you have explained.
No, that's why we have to explore something, no, sir. Otherwise, it will.
We are all learning, sir.
Yeah. And just to last question, we says that whether the money is remitted or not, I think it doesn't make much difference. And even tax is paid or not, that also doesn't make difference, because if the income is doubly taxed in India, then naturally you will get a credit of the taxes paid. If you have not paid any tax, then you will not get a credit.
Yeah.
No, but I think the issue would be a little bit. Sir, please. Sorry.
Please. No. When I said about capital gain, at least the treaty is very clear. It will be taxable at both the countries as per respective law. On interest, there is no clarification. So therefore, interest will be taxed under the US law. You can apply at the most the interest article under the US DTA, and then tell them that you can withhold the tax only as per the India USA DTA, which comes to around 15%. Under the local laws, the rate of tax could be higher, and that whatever 15% they credit, you will get they deduct, you will get a credit.
So, sir, just to add, so that would mean at least under option 1, if he is investing it in an LLC, to maximize or optimize the tax treatment, it would be advisable for him that he should distribute the profits also in the same year when it is earned, so that at least he gets some tax credit.
At least, yes, obviously. And there I would take, of course, strictly speaking, if it is a company paying taxes on the share of profit of that partner, and you should not get a credit, but India is giving happily credit for that. My experience is. In fact, despite the fact that there was in one of the meetings, we were saying that we made one MAP application to the authorities, the competent authority. We were subject to tax on we created a liaison office of a company in India, in China, and China said liaison office is liable to tax. The liaison office is exempted, not taxable, but they said no, 15% of the total cost incurred by you on employees will be your profit and will pay tax on it. And the company had no choice than to pay, because दादागिरी के सामने कोई answer नहीं है. So they paid it, and after paying, we made an MAP application. And MAP competent authority of India, and luckily competent authority of China was a good friend of mine, because we were meeting in UN together a number of times. So then both the competent authorities, I organized a meeting in Geneva, and they said, "Acha, Ostwal ek application karo MAP mein, we will give you refund." After having made an application, they were still adamant, because competent authority is a boss. A lower authority, there also the attitude is exactly like ours. वो नहीं कर रहा है, कुछ भी नहीं कर रहा है. Second year also I told him, and ultimately our authority prevailed on him. And then finally he said, Ostwal, we are not resolving your problem because there are a number of our applications pending in India. They need to be resolved. The political issue. And then finally they agreed to resolve. Now, in the process, the competent authority asked me a question. What happened to the taxes paid in China wrongly by you? I said, we have claimed the refund under the Indian law. The tax paid in China and Indian authorities have given a refund to us also. And the refund, in the sense, they are adjusted against my tax liability in India. He said, but then I told him, honestly, that is not correct. That is not correct. because it is not taxable in India, and China was not entitled to tax it, so I should get a refund of that. So if I get a refund of that, I will pay taxes here in India. Of course, he, being a friend, he said amount was not very big, so he says I'll ignore that for the time being. But honestly speaking, he said, does it mean that we need to revise our? He asked me one question, more question. You mean to say India gives credit very happily on all the taxes paid, and why Indians are not raising MAP against foreign country? I said, this is the reason why MAP. You are one of the first stupid person who have raised MAP against China, but people are not raising that issue because उनको आराम से इधर credit मिल रहा है taxes paid का, तो हमको जरूरत क्या है? That is why a committee was set up to give the foreign tax credit rules, and the rules were revised. All the rules were revised, and I made a first presentation to them how the tax credit rules should come, but they partly accepted, partly not accepted. But anyway, these are interesting development facets of the development.
Maybe anything else?
No, that's it. I think we covered it.
So we move to the next question. So this is the foreign tax credit issue.
I will because of the paucity of time, I'll give you a quick answer.
Yes, sir. I'll just run through the question. Whether foreign tax credit would be available under Section 91, where there is no DTAA, to an Indian company in respect of income earned from overseas supplies taxed in the country where the goods are supplied, say country S, in accordance with the local laws of the country S. Yes, sir.
Answer is yes. 91 will. For example, we have an experience here. Bangladesh and Iran, both are deducting taxes. In fact, in Iran, the exploring our rigs were under the exploration on the gross revenues received from the rig employed in Iran. They were deducting 3% tax, and we had huge profit, and we claimed the credit in India. But if I have no profit in India, I can't claim a credit at all. Credit is available only if I have a profit here and I am paying taxes in India. If I have no tax payable in India, I can't credit. That is lost. Now, in such a situation, recently a Bombay tribunal, last week's decision, had taken a view. You can claim the tax paid in the foreign country if there is no credit available because of the various reasons, because of the non-profit. You can claim the payment of tax made in the other country as expenditure, because the tax paid is in a foreign country and the tax paid in India is disallowable, and tax paid in a foreign country is not is a cost and it is not a tax, and therefore you are entitled to claim the deduction. And that has been the attitude of number of countries, but India, rightly or wrongly, was not following that pattern. So therefore I believe Section 91 credit you are entitled to, provided there is a profit. In the Bangladesh also, if you are EPC contract and you are supplying goods, they deduct tax at source. They deduct tax on that. So you get a credit for that. Whatever tax you have paid, if there is a profit, you can get a credit here. Then second thing, the same situation on a presumptive taxation basis in India, we are doing it here. On a lot of items, we are doing a presumptive Section 44, A, B, AB, AB, B, 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 blah, blah, blah. On that, foreign countries, people are claiming the tax credit only on account of that, provided there is a profit. And now the problems are going to be multiplied when significant economic presence will come up next year. And that time, the other foreign countries will have the same problem. But this whole bogey of significant economic presence, equalization levy, TDS, which was recommended by the OECD, was created. In each country were told to create unilaterally, only to bring USA on the round table. So far, nothing happened because the Trump election was there. Now Biden will be coming in. God knows by 2021 December, this digital transaction tax is finalized, possibly significant economic presence and equalization levy will go away. But if this is not finalized, this problem is going to continue. And therefore, the problem will be in the other countries, not in India. We will deduct it. But similarly, other countries also deducting. That we call significant economic presence. There is a diverted profit tax act. There is a tax on the digital transaction tax act. All sort of taxes are covered by the other countries. So therefore, that problem will continue.
Right, thank you. We have over 3 or 4 issues more. I think we are running a little late, and I think possibly it is the last session, so we may be able to continue. Quickly moving on to issue number 10, which is a simpler issue, but I think very relevant for the SMP segment of our audiences. Manish bhai, what resources are available for transfer pricing studies in case of small companies at a reasonable cost? I think this is typically more relevant where very small value of transfer pricing transactions are involved.
Yeah.
Yeah,
we all know that transfer pricing study is a very complex and involves a lot of cost. But our institute has come out with in the support of our members, and they have now given a concessional benefit that if you are a member of ICAI, then you can have a Capital Line Plus for just 30,000 rupees, and Capital Line Plus even online version 15,000 rupees, and if you go for a desktop version, then it is 65,000 rupees. So that is one thing is that, so if you have to use the software, then you can take this benefit as an institute member. See, second thing is that in some of the cases, you can apply your own records and apply your cup method. So in that method, that your own records will be sufficient. Even you can have a Google search and ROC search, and on that basis, you can verify, of course, data's authenticity. And on that basis, you can compile a study. And Ostwal sir rightly said that you have to preserve that records for which, on basis of which you have compiled the study. And that date and that data's validity will be required. So you can minimize the cost on this type of basis, and can, in a given case, you can apply like this. Even nowadays, the Capital Line Plus and Proves IQ, which are available to the members at 1.5 lakh and 1.7 lakh is the rate. So depending upon, of course, what is the naturally how much study income you will be generating out of the study, that, but if it is a simple case, one single case, then it will be naturally very costly. You may not get that much revenue also, but you can use this type of thing and try to minimize your cost. TP sir can give us on some idea on that, how to minimize this cost.
When this law came in, we in Mumbai, at the office of the International Fiscal Association and also the BCA, took a subscription of the cap lines and other database, and gave members option of coming to the office and do your study yourself here at nominal cost of time. Not, but you don't have a luxury of sitting in your office and doing it. Come to the BCA, we created a desk. So same thing can be created in regional offices also, rather than asking every member to pay 35,000 rupees. If you have 1 or 2 cases, why should I pay subscription? And second thing, your Google search, etc. will not work. Only thing is the database. What first point which you mentioned is internal cup. All the methods you have internal cup available, and therefore try to accept profit split, and therefore try to get internal cup if the transactions are there with the third party and related party, and the pricings are comparable, and if the internal cup shows my pricing charge to my related party is lower than the third party, then you can say that why I have charged lower, because I don't have to, they have to incur the marketing cost, and third party has to incur their marketing cost. But here I am giving them lower cost because my own enterprise, other part will be incurring selling and marketing and distribution cost, and therefore concession has been given. So in my opinion, that is possible. You can demonstrate that, very easy to do that. And in fact, I have come across in Bombay also some 4 or 5 chartered accountant or 6 chartered accountants, small timers. They come together and they subscribe to a particular database, and they send their representatives, do the work and take the papers. Don't leave trail over there, so that secrecy of your client is continued with you and not given shared with others. This is done in a city like Mumbai. Obviously, Gujaratis are more baniyas, and Americans call you good Jews. Good Jews. Good Jews means like Israelis. Jews. Therefore, you are smarter than us and you have more innovative techniques of getting cheaper cost than our cost.
Thank you, sir. Moving quickly to issue number 11, I would just confirm, Hitat, we have some time?
Yes, sir. We do have. We can complete, sir. I'll just ask Dhruvik as well.
In fact, you should have kept 11 and 12 together earlier. 13 is a repetition of 11, so there is no 13 question.
No, sir, I substituted the 13 part, so that.
Oh, I don't have that.
Yeah, sir.
Now, sir, Dhruvik is here. Dhruvik, we can have some more time. Yeah. Okay, fine. He's saying yes. You need to unmute yourself. Yeah. Fine, sir.
Okay.
Okay.
Yes. You run the question quickly.
Yeah, sir. So issue number 11, Mr. X, an individual has stayed in Dubai till 10th October. He relocated to India on 11th October. After staying in Dubai for 2 years, he would satisfy the criteria of being an ordinary resident in India. He is a resident of UAE for year 2020. During his stay in Dubai, he had a rented home available to him. His family also stayed with him. His family returned to India along with him. While in Dubai, he received an income of 1 crore in May 2020 in relation to the employment in Dubai. Can Mr. X take recourse to split residency in order to claim that he was a resident of UAE till 10th October 2020 by virtue of tiebreaker rule? And accordingly, income earned during that period should not be offered to tax in India as per Article 16 of India UAE BPAA.
There are few aspects of this question. One, if he is strictly from 1st April till 10th of October in Dubai, his period of stay abroad is more than 182 days. So therefore, strictly he is a non-resident in this year because his stay in abroad is for more than. But because of the change in the law in the current year, Section 6(1)(a), wherein your stay in India exceeds 120 days, and you have a domestic income more than 15 lakhs of rupees, you can become not ordinary resident. That would be one issue which is relevant, because I thought that could be one angle one has to look into it. But there is no concept of split residency as far as India is concerned. India goes by strictly fiscal year and number of days stay. USA has a concept of split residency. India does not. And therefore, his income, if he has received this 1 crore of rupees in the month of May 2020, which is if related to the earlier year, and he has filed his return of income in India in which he has not disclosed, and he has disclosed he's abroad, or he was not required to even file the return, and that income he can say that he has taken employment certificate from employer that this is in relation to up to 31st March. Then the question of in India it is offering to, it does not arise. But if he has received this income in relation to current year, say in 2 months he has earned 2 crore of rupees, which is possible. In that case, full amount is liable to tax here. No foreign tax credit because there is no split residency. Dubai is tax exempt, heavy tax haven, but India is tax hell, and therefore you pay full tax. Okay. And then the question, Article 16 of the India-Dubai tax treaty again will not apply to you, because here you, 1 minute, X is taxless under India UAE tax treaty under Article 16. If you are dependent agent and you are employed in a foreign country and you have no permanent establishment in that country, and you are not claiming the deduction, 3 conditions are there, then only you will be not taxable. But here is the case, can somebody, the foreigner, possible, Article 16 can apply. One has to look into this separately, because he does not have, the foreigner does not have a presence here, that has not been given, one. And second thing, even if he has a presence, the foreigner is not claiming this as a deductible expenditure, and his stay in India is not exceeding 183 days. If all the 3 conditions are fulfilled, then right of taxation goes to UAE in respect of this remuneration. and therefore possibly can get out of it. Next question.
Next. So, Manish bhai, this is for you. Issue number 12. An Indian resident takes up a job in 1920 with a company whose HO is in Dubai. The company is a subsidiary of a Russian company, and the Indian resident is posted in.
No, this is not the question. The A is an Indian citizen who was in USA on H1 visa.
Sir, that is for you.
अच्छा मनीष भाई के लिए. Okay.
ये मनीष भाई के लिए. That the last question is for you. Issue number 30, which I had put for you. We'll take it up. So, Manish bhai, for you, an Indian resident takes up job in 1920 with company whose HO is in Dubai. The company is a subsidiary of Russian company, and he is posted in Iraq. As per job rules, he works for 4 weeks in Iraq and then has 4 weeks off, during which he returns to India. He had come to India on 7/3/2020 and was planning to go back in the last week of March 2020. However, because of lockdown and cancellation of international flights, he could not go. His total stay outside India in 1920 is 174 days. His salary is credited to his NRE account. How would his taxability be in India?
See, here the main issue is about whether he's a resident in India for financial year 1920 or not. So that is the main issue. And as per the question, the details given in the statement, that he has been in India for, he was in outside India for 174 days. So in other words, he was in India for 191 days for financial year 1920.
अरे सर अभी तो इंडिया ईयर चालू है, अभी तो बाकी कहाँ हुआ पूरा?
1920 financial. Financial year 1920, sir.
कोविड तो अभी है ना?
So March 20 में the lockdown started.
So there is one board. See, because of this lockdown, as we all know, that people are now held as hostages and they cannot travel. Because of that, they are even likely to be burdened with income tax liability. So this question is from that angle only. And as I discussed, that he is there in India for 191 days. So he becomes a resident, and because of that, his income would be liable to tax. Foreign income would be liable to tax. But there is a saving by the board has given a circular number 11, 8 May 2020. Of course, the announcement was made earlier, but the circular came very late. And as per that circular, those persons who have come in India before 22nd March 2020. Now, this gentleman has come before on 17th March. So he will be covered by this. And those persons who have come and could not go out of India, then his stay from 22nd March to 31st March will not be considered as a stay in India. So in other words, a 10-day stay would not be considered in India. So if we exclude from 191 days, 10 days stay in India, then he becomes a 181 days. And since he has been not in India for less than 182 days, his income would not be liable to tax. This is my humble.
Correct.
So,
of course, Iraq and that treaty and all that is not there with the treaty. Iraq, there is no treaty. But I think Iraq, there is a tax. But that tax,
all these countries have been created confusion. Russia, Dubai, Iraq.
Yeah.
वो मस्त confusion create किया है. बहुत बढ़िया question है.
जी sir. Thank you very much, sir.
Thank you, Manish bhai. Sir, the 13th issue for you, the last issue for the day, and this is a slightly longer one, and I am not sure whether you had received this issue. So.
No, this issue I have received. I can answer this.
Okay. Mr. A is an Indian citizen who was in USA on H1 US visa. He is employed by the US company and currently on its payroll in USA. The US company pays salary to Mr. A in his bank account held in US and also deducts withholding tax. Mr. A is regarded as a resident alien in USA as per the local laws. During the month of August, Mr. A came to India to meet his family and decided to stay in India for a longer duration. Mr. A informed his decision to his employer in USA. The US company wanted to keep him on the payroll of the US company and continued his employment with the US company while he worked from India and rendered his services remotely from India, and thereby fulfilled his obligations under the employment contract with the US company. The US company continued to pay him salary in the US bank account and also withheld tax. even though he was physically present in India. Mr. A is considered as a resident but not ordinary resident of India for the year under consideration as per the provisions of Income Tax Act. So we have now the following questions. Whether the salary earned by Mr. A in his bank account held in US from a US employer for the services rendered while physically present in India and working from home in India is chargeable to tax in India. The second question is, in which country Mr. A is eligible to get the credit for taxes paid in another country, since he may be subject to double taxation. The third point is, if such is chargeable to tax in India, whether the US company is required to withhold tax obligation in India. Whether such circumstances of an employee of the US company working from India and rendering his services under employment from India would constitute a PE for the US company. And the last is whether if the US company has a subsidiary in India, would it make a difference in the above scenario? Sir.
Firstly, the answer is there is nothing like split residency. Again, I said the USA, he has been under problem arises only because of the different fiscal year concept. India believes in April to March and USA believes in January to December. Strictly speaking, possibly he is non-resident. He is a resident of USA because he has been in India. He has been in USA up to August, January to August, almost substantial period. And then for only 3-4 months he is in India for the US purposes. But for Indian purposes, from April to August he is in India, and therefore the salary for that period will be taxable in USA as well as in India. And therefore the taxes paid in USA will be entitled to get a credit in India. And whatever may be the residential status, even if it is a not ordinary resident, his services, if he is a not ordinary resident, possibly for the whole year, the foreign income will be excluded. It will not be taxable. So therefore, one can argue it out. I was a not ordinary resident, so my foreign source of income till I was abroad and earning income over there should not be taxed here. However, the Indian tax authorities, if it can establish that you are not ordinary resident, till August you have an arguable, excellent case. But after August, when you are in India for doing the job, work from home from India, then that income is taxable in India, because section 912 says salary is taxable at the place where the services are rendered. Salary is deemed to accrue or arise at the place where the services are rendered, and therefore income will become taxable. Why did they change this law? There was a Gujarat High Court decision in the case of Patlange, where the FL Smith Swedish company's employee worked on a cement plant in Gujarat, and then he was paid salary, and it was argued before the authorities, his contract of employment is in Sweden, and therefore his income is not taxable in India. Ultimately, he gets an income from the employment contract. The source of income is employment contract and not the place where he is working. The Gujarat High Court upheld that decision as correct. When Gujarat High Court upheld that decision, the law in India was amended. Section 912 was introduced. Salary will be taxable at the place where the services are rendered, irrespective where contract is signed. And therefore this issue will be very clear that he will become taxable here, and in respect of the salary after August when he has been here, and therefore he will be paying taxes in USA. Suppose US company has deducted taxes at source. Honestly speaking, India should not give credit for that, because then they should say very clearly that your taxable primary right of taxation exists with India. We will not give you credit for wrongly deducted taxes by USA. You claim refund in USA and therefore pay gross taxation. And that view cannot be ruled out. And that cannot be ruled out because you are a resident. However, up to December, USA can say he was a resident on USA, so therefore we deducted tax. So for the period from August to December, the situation could be different. But from January to March, if they still continue to deduct tax, the Indian authorities will say, sorry, you will not get a credit for taxes wrongly deducted, and you will claim the credit. Sometimes it is possible that one can say I am a resident of both the countries. I am a resident of India because of not ordinary resident, and I am also a resident of USA because I have got an H1 visa and I am staying there, and therefore I am a resident of USA. And if you are a resident of both the countries, then it is possible for you to say that tie-breaking test should apply. But if you look at the tie-breaking test of India-US tax treaty, 4 clauses: permanent home, the economic nexus. Possibly, if you can say that you are an Indian citizen, why did you come here to stay permanently with your parent? If you have got parent here and children's over there, then economic nexus is also divided at both the places. And you have a Korean Supreme Court decision. Father in USA, the wife in Korea, children's divided. Question is, what is the economic nexus? They have said both the places. So the third is the permanent home. You have permanent home at both the places. So last condition will come up. And here the Baroda questionnaire said very clearly he is an Indian citizen. So therefore the tie-breaking test goes in favor of India, and therefore India has a right of taxation. So India will tax it, and foreign countries tax paid will be given credit wherever possible. I have said, and wherever not possible also I have said it. Now, where the foreign tax credit is available here in India, in USA there are 3 types of taxes which are levied on an income of an Indian or individual working. One is for federal tax, second is state tax, and third is city tax. In my opinion, federal tax credit is available certainly because the treaty provides that. State tax and municipal tax, city tax, there is no credit available. However, if you look at the Bombay Tribunal decision in the case of Tata Sons, they said if the state tax is, there is no reference, there is no provision under the double taxation avoidance agreement for the giving credit, relieving double taxation in respect of that tax, then such taxes will be governed by section 91 of the treaty and 91 of the Income Tax Act, non-treaty country, and therefore you can get credit under section 91. Very interesting landmark decision from Pramod Kumar, must read it. And therefore that has been followed by Wipro, that has been followed by Karnataka High Court as well. So therefore the favorable decision, I have not come across a decision contrary to that. The next issue is such taxes and whether USA can withhold the tax for the reason that they say you are on employment in India, but on behalf of my employer in USA. But honestly speaking, if the case is made out to USA that my service is in India and they are entitled to tax, USA will not withhold the tax. But this misnomer continues. Even big companies like Wipro, TCS and all those things also make a mistake. So therefore this is bound to end. Therefore timely tax advice and representation will be very, very important and very relevant. Next question is, since he is working from India, whether it can create a permanent establishment of that US company in India, assuming he is in that line of activity where he is required to do marketing, he is required to do negotiating the contract, he is required to do conclusion of contract on behalf of the US company. Certainly he will create a permanent establishment in India, and therefore we have a decision reported today only of the Danish Tax Council. The Tax Sutra has reported today a decision. A Danish employee working, German employee working from Denmark because of COVID-19 situation, and he was working from home. Question is whether he was exactly involved in marketing. Question is whether he was creating a permanent establishment of a German company in Denmark, and German council, tax council has taken a view, yes, it is creating a permanent establishment, and it is today's tax Sutra report. There is no citation etc. given, but it has come today, luckily for you. When I was reading, thereafter I read this question, I thought that this is something relevant, so I must take a printout of that. The next is subsidiary, in my opinion, will not make any difference. Only thing is advantages if he is if he has a subsidiary, he can take up an employment or he can be deputed to the subsidiary company. On that, the taxation system will be from India. One question escaped. If he is working in India and it is considered as he is liable to tax in India, whether his employer is required to withhold the tax in India as per Indian law, answer is yes. We have a Supreme Court decision in the case of Ilili Corporation, which says an employee working for the Netherlands company or some Swedish company working in India on Ranbaxy's job, and the employee was a foreign employer. And what in this situation was very interesting, Ilili told, you pay your taxes monthly. We are remitting your taxes to you because we don't want to take permanent account number in India. You pay the taxes yourself. So he went on paying every month tax as an tax deducted at source, as if he from his own salary, employer was giving him and he paid it. And the income tax department challenged. But whatever you have paid, nevertheless your employer has defaulted, and therefore we will hold him responsible. We levy penalty. The issue was penalty issue, and the matter went up to Supreme Court. And Supreme Court said normally penalty is leviable. There is a default. However, looking at the compliance which has taken place, the tax revenue has not been lost, so we do not levy penalty. Otherwise, they obiter dicta, they have said the tax deductible at source. With this, thank you very much for giving me an opportunity to be with you and share my thoughts. I may be in my own way I have dealt with. Some people must have understood, some people must have not. Those who have not understood, they can write me, I'll clarify. Thank you very much.
Thank you very much, sir. Thank you to Ostwal sir, Manish bhai, for an excellent resolution of various queries.
Rahul, I have one small question. Rahul.
Yes, sir.
Sir, in last question, we referred to the board circular, which says that 10 days is to be excluded. Now, the board circular is silent about that. The person could not travel. So what does it mean, that he will have to prove that he could not travel? That either he had booked a ticket?
No need.
And that's why he could not travel?
Government of India had cancelled all the international flights. You don't need any other evidence beyond this. Now, in fact, frankly speaking, this issue is relevant in the current year. The Government of India, in that circular which you are referring to, said that, however, for the issue 2021, we will examine and give clarification once the regular flight starts.
Right.
Today also the regular flights have not started.
Not started. Okay.
And they are only bubble flight. Bubble flights are not regular flights.
Okay.
Now, therefore, more than 183 days are already you are here in India. Let's assume. But I have clients who have gone to Dubai and come back. For them, there is a difficult thing. But otherwise, and genuinely, people have gone back also. It is not the case. We have clients who have gone back and staying in Dubai. We have clients who have gone to Singapore, but Singapore flights are not still working. But I was told Air India is not working, but Vistara is working. But other airlines are working. So therefore, these are all fact-driven cases. And honestly speaking, when talking to Kamlesh Varsni on this subject, when are you going to issue the circular? He says, Mr. Ostwal, why are you worried? Hardly a handful of people, 1,000, 2,000, 5,000 non-residents who are stuck up here. For them, clarification is needed. We'll give clarification on one-to-one basis. We'll not issue circular.
Oh.
God knows what will happen. So therefore, professional persons are fully assured that you will have to represent these cases and get the money for your professional fees. Thank you.
Thank you.
Thank you, sir. Thank you to both the panelists. I am grateful for resolving the issue.
Honestly speaking, my opinion is, in a pandemic scenario, when the lectures are created on this, monologue does not help people. You can ask me to give a lecture of 45 minutes or 1 hour. I can do that very easily because I will have all the notes available and nobody will know where from I am looking at what I am doing and what I am speaking. But one-to-one panel discussion helps. It helps so much. It brings clarity. At least the people who are listening, they will understand the issues and they will also understand what explanation has been given. Whether rightly or wrongly, that is not issue, but they will understand the issue clearly. And therefore, it will carry more value than the topic which you asking monologue. And that was the reason why when somebody approached me from Baroda, we want you to be one of our lecturers. I said, don't do that. Create a panel discussion. And I will take any questions. You could have done extempore questions also, I would have answered them. It's not that difficult. But that helps people. And looking at the people's interest, I have suggested. हमको कोई फर्क नहीं पड़ता है. क्या फर्क पड़ता है? आज नहीं तो कल और कहीं ना कहीं लेक्चर देना ही है. Thank you very much, sir.
Thank you, sir. Thank you. I hand back the session back to the MOC. Thank you.
Absolutely right, sir. And this is the reason why we are proud to witness such a technical yet live discussion. Thank you, Ostwal sir, Manish sir, Rahul sir, for an amazing session. Mementos to the dignitaries shall be delivered to them. All the participants on this conference.
Baroda has a habit of taking pictures, live picture, and sending it to the people. Don't do that on this website. The picture doesn't come well.
So there's a small announcement. All the participants for this conference will receive link for attending tomorrow's session for the whole day, as well as one more link to attend the multi-track session. Participants can choose the link as per their interest and convenience. Tomorrow's multi-track topics will be indirect tax and valuation in insolvency in the first slot of 10 to 11 a.m. This marks the end of this wonderful panel discussion. May I now request our charismatic CA Parikh to propose a formal vote of thanks.
Dhruv, your mic is off.
You are not audible.
No.
We accept your vote of thanks.
We accept, yeah.
There seems to be some problem with the audio. Rikin, maybe you can complete the formality.
Yeah, so on behalf of WRC as well as Vadodara branch of WRC of ICI, I thank all the moderators as well as panel discussion faculties and Ostwal sir, Rahul sir, and Manish sir. It was a wonderful session and lot of learning. Thank you so much.
Thank you. Pleasure is ours. Thank you.
Thank you very much.
Thank you, Rikin.
Thank you. Bye.
This involving panel discussion ends this day one of this 2-day virtual sub-regional conference. We will see you all again tomorrow with renewed zeal, zest, and vigor. The first technical session tomorrow will begin at 10 a.m. sharp. Thank you all.
Thank you. Thank you.
Thank you.
આ ડબ્બા હટાઈ તારા નથી સંભળાતું.
ધ્રુવિક હું છું હજી. Thank you કહી દે.
બધા જ છે આમ તો બહુ બધા લોકો. નથી સંભળાતું.
કનેક્ટિવિટી કાઢ નાખો. આઈફોન ની કનેક્ટિવિટી કાઢ નાખો. લેપટોપ સ્પીકર્સ છે ને.
क्या हुआ सर बोलिए.
Dhruv is just trying actually. Dhruv is actually trying उसका ऑडियो नहीं आ रहा है.
मिश्रा बोल रहा हूँ सर. WRC.
और सर मेरा नाम गलत है.
हाँ सर नाम गलत नहीं था. वहां से जैसा मुझे नाम मिला वहां से मैंने वैसा नाम डाल दिया सर. आपके यहाँ
किया था लेकिन कर
लेकिन वो सर देखिए सर मेरी बात सुनिए. आप क्या करोगे मान लीजिए अगर कल ऐसा प्रॉब्लम आता है ना ये साइट पे तो आप जो देखिए वहाँ पे ऑप्शन रहेगा अटेंडिंग ऑप्शन है. आपको अटेंडिंग ऑप्शन
कर दिया.
हाँ तो
हो गया.
क्या आप उससे
हाँ मैं कर दूंगा लेकिन क्या है अगर सेशन डिस्कनेक्ट करके फिर से ज्वाइन हुआ तो वापस एंड चला जाता है.
हाँ
ध्रुविक सच इनका ऑडियो नहीं चल रहा है.
उनका हेडफोन का चार्जिंग है क्या खत्म हो गया जो ब्लूटूथ लगाए
है
तो फिर पकड़ना चाहिए.
चल
ध्रुविक सर बंद करके चालू करिए. वो बंद करके चालू करिए माइक.
Getting offline Dhruv. आओ जो रिकिन बाय.
बंद करो ना.
थैंक यू साहब. कल सुबह मिलते हैं.
हाँ सर बाय बाय सर.